Hello and welcome. You are watching News 9 live and we are beginning our day-long budget coverage here on News 9 live all day, bringing you in-depth insights, analysis with the biggest of voices across the board. I'm Krishna Kumar.
I'm Shweta Kothari, and 8 o'clock onward throughout the day we'll be giving you in-size budget coverage. But first up, let's take a quick look at the headlines. Modi Government 3.0's Union Budget will be presented at 11 o'clock today.
Finance Minister Nirmala Sitharaman all set to present a record 7th budget today.
An army in Jammu and Kashmir foils infiltration bid in a battle. And visuals, of course, on your screens of the operation which is currently on.
Navy warship INS Brahmaputra severely damaged in a fire. A sailor has gone missing.
Supreme Court seeks IIT Delhi's help to resolve NEET UG question paper row. Supreme Court will be taking IIT Delhi's help in the matter.
In the latest on the Valmiki scam, the police has booked 2 Enforcement Directorate officials for quote-unquote coercing an officer to name Chief Minister Siddaramaiah of Karnataka.
Bangladesh students group suspends protest over death of students. The toll is now reaching high for a second consecutive day.
Bangladesh's Prime Minister Sheikh Hasina says that the opposition in Bangladesh is to be blamed for the deadly unrest raging on for weeks.
And US presidential nominee Kamala Harris says, I know Donald Trump's type, targeting Donald Trump in her first appearance as the nominee for Democrats in the upcoming US elections. And we're beginning with our rolling coverage of Budget 2024. My colleague Krishna Kumar continues to be here with me. Finance Minister Nirmala Sitharaman will be presenting her 7th consecutive budget today. Now, Prime Minister Modi's government is expected to maintain a focus on reducing fiscal deficit while also cutting taxes and increase welfare spending to satisfy allies.
That's right. Taxpayers are keenly anticipating what relief Nirmala Sitharaman will be able to offer, if at all any, in this union budget of the year 2024. The details will be revealed when she delivers her budget speech at 11 a.m. in the Lok Sabha. Until then, Shweta, we're going to be having an array of fantastic voices joining us who will be sort of taking us through the build-up period or the anticipatory period of the budget, and then more voices post that as well.
Absolutely. It's going to be a power-packed day, and to kick off this conversation in the studios with us is my colleague Karthik Malhotra, Srinath Sridharan, policy researcher, joining us. But before I go to Srinath, Karthik, it's a day that we're all looking forward to. It's a day when lots of announcements that could really impact you and me, the common people of this country, will be made.
So, I think, this is a day that we look forward to every year. This year, we are blessed perhaps with 2 such days. One was the interim budget on the 1st of February and the other one is today, the 23rd of July. So, yeah, I think all eyes are on Finance Minister Nirmala Sitharaman. Pretty much the expectation is that, is the Finance Minister really going to axe the tax this time around? This time, I believe they have the financial wherewithal to give some incentive, and this financial wherewithal comes by 2-3 key policy interventions which have helped the government. Number one is the RBI's dividend payout. So 2.1 lakh crore rupees which the RBI has rolled out to the government's coffers as dividend this time gives the government some financial flexibility to offset the tax burden on common citizens. The second is, in almost equal measure, is India's inclusion in the emerging markets bond indices. So this again translating to about $25 billion passive funds flowing into the Indian economy over time, translating at about 84 rupees a dollar today back to about 2.1 lakh crore rupees. So about 4.5 lakh crore rupees or so is with the government right now to offset the tax burden, hopefully to some extent.
All right, so that essentially gives the government wiggle room to make those changes that could impact you and me and the tax-paying citizens of this country. Let me quickly get in Srinath into this conversation.
Srinath seems to be in agreement. Srinath was nodding along. So it's a, Srinath, my only doubt is that it's a good story to tell. That the government has the wherewithal. But are you genuinely expecting an income tax rate cut in this budget?
Something, it might be a very small blip of it to open up the populist measures, because let's not forget it's a coalition government. While the talks of special status for two partner states have been held in abeyance, at least till the political negotiations are done. The challenge that, as Karthik said, while RBI dividend sounds exciting, is it sustainable even the next year? Because if they open up anything this year with those dividends, can they sustain the momentum the next year? Doubtful. I mean, doubtful not from any perspective of growth rate or anything, but it's just that you can't anticipate or estimate how the geopolitical volatility, and especially RBI's large Moradza came from forex hedging and trading, especially in the last quarter before the dividend was declared. So that is unsustainable, is what I feel. Two, I think the other challenge that we're going to have is the bond indices. The question that we will have to ask ourselves is, are we going to see any banking reforms which, I mean, structurally our banking is today skewed towards government and top corporates. I mean, this is where the large exposure of the Indian banking system is. It is very unlike the Western market, the Western world, where corporates and governments borrow from the bond market. So just because we have been on the bond indices now, does it mean that the Indian government and various other of its entities and the key corporates will move away from Indian banking to borrow from the bond market? If yes, then what are the structural reforms which will push the banks, one, regulatorily to look at other sectors? I mean, one of the key sector I think we're going to all debate through the day is, how is MSME and SME going to take off? What about the other parts of the economy? And I think that's the challenge. So I don't think, unless they bring in any reforms which will allow the bond and the local debt market, domestic debt market to deepen, I don't think we're going to see big jump in BFSI stocks or this sector at all. The third one, which I think somewhere we will have to be very prudent about, is what about the state level debt? I mean, the feeling that I have is the 2.1 lakh crore dividend of RBI, some part might go in repaying the government of India debt. But I think at least half or more of it is going to be used in front-ending capex. If you realize the last few years, the private capex has not come in and the government has been trying to lead it on. And I think that is also would be the intent even this year.
All right, you packed a lot of information out there. Let me quickly begin with what I think stood out for me from the economic survey presented yesterday, and which was with respect to over-financialization of the Indian capital markets. Now, this was one of the concerns that economic survey talked about, in fact highlighted, saying there's a possibility of overconfidence leading to speculation for higher returns from stock market, essentially highlighting those fears around F&O, retail investor participation, which has been at an all-time high, was celebrated through the year, but it does look like at this point in time that perhaps the economists are not very happy. They're not very happy, especially because it does look like the financial sector growth is not in lockstep with economic growth. Srinath?
Shweta, there, I mean, I think we also have to add another layer of RBI governor's statement about the bank FDs, the CASAs dropping. I think if you look at the timing of what the CA and the RBI governor said, it almost looks like a true cooperation between, an FSDC is coming in the financial stability, where every regulator seems to be speaking the political language of what the government probably intends to do with the budget. But the reality of any economy which scales and grows is financialization across stratified asset classes would happen. I mean, that's a reality that we would see. If you look at one of the fastest growth in the previous 2 years of the Indian fiscal was actually in crypto, right? The amount of folios that got developed was in the crypto space. That was a new asset class as the younger generation looked at it. So I think the challenge of overconfidence of stock market, as alluded to by the CEA, is probably right. But that's something that we've been asking for over a year, right? What is the actual peg of valuation of the Indian stock market? The PE multiples are far expensive than compared to the rest of the world. And almost every time we have been telling ourselves, no, it is all about the consumption economy that India has in the future. It is the discounted cash flows of the potential and all that. At some point, the fear is, if there is a blip or a drop, the entire thing could collapse. People last year predicted that it could stock markets could correct as high as 10%, and 10% of the current index is large amount of money. It's bloodbath there. The reality, I think, what reality check would be, it is not about over financialization of capital markets. I think it is over dependence on euphoria. I mean, it's FOMO, right? Everybody thinks that if I don't invest in stock market, I think I'm going to go out of business. And I think the narrative is very clear. I think we will have to thank, one, the media itself, and two, the amount of business media spending time during the trading hours on running up stocks. And I'm using the word running up stocks almost with a question mark. Is there any nexus around it? And I think that's where SEBI to figure out.
This conversation went into a tangent I didn't expect to go. It wasn't that the case,
running up
Karthik?
stocks is not something we intended to discuss on budget day, but talking about running up stocks, I think, we definitely saw yesterday two sectors, particularly the PSU sector and the defense sector. There was buying activity yesterday. So there is clear anticipation that there is going to be something in the budget statement today which could potentially boost defense manufacturing and the PSUs. But coming back to the economic survey which you highlighted, Shweta, I think what is the biggest challenge that the government is facing right now? And that is something that, Sridharan also alluded to. The biggest challenge right now is that the government has been doing the heavy lifting when it comes to economic growth ever since the start of the pandemic. In fact, even before that, but definitely since 2020, the government has been doing the heavy lifting. This heavy lifting is coming by way of large spends on infrastructure. The capital expenditure of the government, 10 lakh crore rupees allocated last year, 11.11 lakh crore rupees allocated in the interim budget this year. So I think the momentum of the 8.2% growth that we saw last year and the 7% plus growth that we've been seeing consecutively year after year is primarily on the back of government spending. What the economic survey also mentioned yesterday is that it is time for the capital formation from the private sector to kickstart this year. But that has its own challenges, and that, I think, links back to the FNO and the overheating of the stock markets as well. Right now, how do banks get capitalized if there isn't enough money, consumer-driven money flowing into banks despite high interest rates? Investors, retail investors preferring to take part in the rally on the stock markets as opposed to more sure, lesser risk-oriented returns by fixed deposits means that banks themselves are unable to perhaps fund large-scale development when it comes to the private sector. Second, equally important is that we are living in the era of high inflation. High inflation leading to high interest rates. The cost of capital right now for private sector is high. So in this environment, expecting the private sector to unleash their animal spirits and to go ahead and make those large multi-thousand crore rupee, multi-million dollar rupee investments into capital formation seems like a far cry to me. So at some point, the government will have to incentivize, and I think the biggest stimulus that any government can offer or the global economy can offer right now is going to be low interest rates. But low interest rates is an independent monetary policy which the budget may or may not be able to influence to a great extent.
All right, but there's a lot of conversation around inflation, and it goes on to your point of higher interest rates. Now, there's a lot that the government cannot control, courtesy unfavorable weather and climatic conditions. So vegetable inflation, food inflation are relatively higher than the benchmark core inflation, and pumping up overall headline inflation numbers there. That is something government cannot control right now. Perhaps time to relook at inflation framework, because that was also one of the questions and discussions yesterday.
Right. So two small points there. Number one, I think the economic survey very clearly mentioned that it is going to likely explore the option of changing the base year for calculating inflation from FY12 to FY24. So if that happens, in any case, your level through which you start calculating your inflation data next year onwards changes, because then FY24 or this financial year becomes the base year. So any inflation over and above the base year is going to actually see the value of pretty much the base being this year. So that is going to change the numbers and change the headline inflation data. But the larger point that I think we've got to understand and make sense of is the fact that inflation per se, food inflation, is not something that either the fiscal policy or the monetary policy can directly address as long as we continue to be dependent on monsoon. So what I expect this budget to deliver, at least to some extent, the impact may not be seen this year, but in subsequent years would be some significant allocation into irrigation, some significant allocation towards incentivizing farmers to grow high-yielding crop variety like fruits and vegetables, which is something, again, which the economic survey mentioned yesterday.
All right.
That is how you may, to some extent, hopefully, over time, be able to reduce your dependence on monsoon. But I understand this is easier said than done. It is not something which is going to yield immediate results, but at least given the talks around green energy, climate change, vagaries of weather, I think some clear direction on how we want to continue with agriculture as a key focus sector, which is one of the 6 key focus areas as prescribed in the economic survey as well. Some very, very sustainable, robust measures to reduce dependence on monsoon is the only long-term solution to taming food inflation.
All right, so perhaps building agri-infrastructure, there's a big conversation around that as well. Also, while monetary policy continues to focus on headline inflation, a bunch of economists out there saying perhaps time to diversify that. Look at core inflation. If it's not sticky, perhaps headline inflation and the measure of headline inflation to change policy needs to also go away. So conversations around whether one can re-look at how inflation is monitored and a change in inflation framework. We'll be discussing all that and more, of course. Time to slip into a very short break. We'll be back with the other side.
This is News 9 Live, India's only digital exclusive live stream. For the early adopters, bringing you the news 24/7. For the smart audiences on the smartest TVs. News 9 Live. Stream now on your smart TVs.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की। अभी डाउनलोड करें।
Hey, careful, huh? My daddy got it from abroad. Disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect. Take risk with full understanding.
सोच कर, समझ कर, इन्वेस्ट कर।
इस खेल में अब खेला होगा, हर नहले पे दहला होगा। ये बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। साथ खड़ा है। गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the ball. Chuck, there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
Watching News 9 Live, we are bringing to you day-long non-stop live coverage of Budget 2024, and we have an array of top voices joining us to help us decode the budget for you, all those of you who are watching. To start with, this morning we have Gauri Chadda, tax and investment advisor, wealth management advisor, joining us in our studios here at News 9. We also have Nirmala Sitharaman as well joining us via online call. But Gauri, thank you so much for taking time out to be with us. I'm going to ask a very simple question. Every time a budget rolls around, the topmost question on everybody's mind is, will there be any income tax cut / rebate / down? That's the first question that anybody has on their mind. To soothe some frayed nerves over here, tell us, are you expecting an income tax rate cut this time around?
See, definitely. I have big expectations from this budget, final budget, because the government has a lot of scope, because the direct tax collections have increased by more than 17.7%. I believe that maybe this is because of the introduction of EIS, because now people cannot afford to not declare that income which they were not declaring earlier. So I think this is one of the major reasons, and apart from that, of course, there are other reasons as well, because of which the direct tax collection has increased. Apart from that, the RBI has declared a dividend of 11.1, I think, trillion, 2.1 lakh crore rupees. So that's a very big amount. Now, apart from that, the finance minister definitely said in the interim budget that this time she is not making any changes in the interim budget. So this automatically implies that the final budget will see major change. Although I believe that, of course, the tax regime was introduced, new tax regime was introduced, and it was even made better in the last normal full budget. But still, I believe that people are opting for old regime, and if the government is planning to get away with the old regime, then they have to make the new regime so much better that the people themselves drop the old regime. Only then they can eliminate the old regime.
So how does one make the new regime sweeter? There is a standard deduction, of course, of 50,000 rupees. There's an expectation that that 50,000 will be made 1 lakh. What more?
See, the standard deduction is 50,000 rupees, but if you see, the standard deduction was introduced after bringing in the 40,000 deduction was introduced after taking away the transport and medical allowance. So this means that in reality the taxpayers got nothing. After that, that deduction was increased from 40 to 50,000. Again, I don't think that it's a very big amount. So this amount, because you are not giving any deduction in the new regime, and people have this mindset of claiming deductions since very long. So I think this deduction should be increased, and I think it will be increased in this budget at least to 1 or 1.5. If 1.5 is a very huge figure, then probably 1, but this should be increased. Apart from that, I think the slab rates should be rationalized more. Although people are expecting some introduction of deductions in new regime as well, but I believe that that should not be done, because it will make the new regime also complicated, and then there will be no difference left in old and new. And I think then already taxpayers are quite confused till last minute that if they want to opt for old or new regime. So the new regime,
inkling of perhaps the tax exemption lower limit will also be increased from 3 to 5 lakh rupees?
See, that definitely should be touched, because if you see, the basic exemption limit was increased in 2014 when this government came in power, from 2 to 2.5 lakhs. Now this 2.5 lakhs is going on since very long time. In new regime, of course, they increased it to 3 lakhs, but see, 3 lakhs is nothing, because if you consider the inflation rate, average inflation rate also since 2014 till 2024, we can't say that the basic exemption limit should not be increased, because there is no inflation, there is inflation. So the way you give indexation benefit in capital gains in case of property or gold or anything, the same concept should be applied by the government themselves to increase the basic exemption limit to at least that level where the inflation meets it. So of course 5-6 lakhs, but now the confusion is that people still believe that the basic exemption limit in the new regime is 7 lakhs, which is not true. So that is the rebate which you are getting till 7 lakhs. So increasing the basic exemption limit is a great thing, because not everybody is claiming that rebate of up to 7 lakhs. And if you see that taxpayers in the country are very less, I think around only 2 CR is the base of taxpayers who are actually paying taxes. Of course, tax filers are increasing and they are more than that. But the people who are actually paying tax, they are just 2 crore. So it's a very low figure. So the concept is that when you decrease taxes, people tend to pay more taxes. So that basic exemption limit should be definitely reduced.
Okay.
Standard deduction should be increased and rates should be rationalized further.
All right. And how about, sorry, just one quick question. How about people who are taxed at 30%? Now, there is a difference of 5 lakh rupees between old tax regime and new tax regime. About time we make it 20 lakhs if you want people to really opt for the new tax regime?
See,
I see, I see, Srinath smiling there, perhaps a bit too much of an ask, but Gauri, first to you.
See, I think rather than increasing that slab to 20, I would prefer decreasing the highest slab rate to 25 or even lower if that's possible. Because if I compare the highest slab rate in individual cases, so and the corporates, so the corporates are paying lesser tax. They are paying at 25
That's a
or
perennial
even
debate
lower.
that I think we can never see the end
Absolutely.
of.
And I'm quite miffed with it, but I see there's a point that Karthik often makes when it comes to difference between individual tax and corporate tax.
I mean, see, I like to believe, at least, and I think I am as well, I'm a capitalist in mind and at heart. I believe that, yeah, I mean, you've got to, at one level, if you're talking about, private sector unleashing animal spirits, investing in capital infrastructure, setting up new factories, getting new investments in, etc., you have to incentivize them to stay in the country. If you, and these are the folks who are actually creating jobs. So the point is, for getting more and more people to pay that 30% tax slab, you've got to incentivize corporate India to be able to create those jobs. That job creation
it's the job creation discount of 5%.
Absolutely. Job creation discount number one, and second, preventing the flight of capital. You don't want them to move out of the country and avail of a 15% tax elsewhere and save this, this 10% extra tax that they're paying in the country. So I think you've got to protect capital residing in the country and enable corporate India to create jobs. But on the direct tax front, I believe the government needs to gradually nudge people towards the new tax regime. I mean, what is the point of introducing another tax regime if you want to keep both the tax regimes in service?
add more to
You've got to
confusion.
retire one tax regime, nudge people to move to the other, which means perhaps make the slabs as well as the rates in the new tax regime a little more friendly for people to migrate from the old to the new tax regime. At the same time, there are forced investments that many investors or many tax-paying citizens tend to make without understanding the real benefits of those schemes. And you just make those investments to avail of some tax discount. And I believe the government needs to channel that money which is going into forced tax saving schemes into something which is more productive as returns for these tax-paying citizens as investments, as well as for the country as a whole.
All right, those of course are suggestions. Srinath, your quick take on what is to expect as far as direct taxes is concerned. More money in hands of people. That's obviously the expectation every time around. Are you hopeful that this budget will finally do it?
I'm hopeful because this is a coalition government. So to that extent, there is a political pressure to show optically some difference to the middle class. But I don't see a large drastic tax reforms happening. Too short a time for them to unveil that. And probably we should expect it later this fiscal.
Okay. Srinath, stay with us, and Gauri as well. Let's now dive into this thing that we're discussing right now called direct taxes. What exactly is an indirect tax? What are indirect taxes? We put together a nice, crisp, short explainer for you. Take a look at this.
Last 10 years, the direct tax collections have more than trebled and the return filers swelled 2.4 times. I would like to assure the taxpayers that their contributions have been used wisely for the development of the country and welfare of its people.
The Union Budget is the most awaited Parliament speech every year. Certainly, Part B of the budget speech is the most significant. Definitely, direct taxes is the most talked about. There are three main types of direct taxes in India. Number one, income tax. It applies to all your earnings. The more you earn, the higher the tax rate. Then there is the corporate tax, which is number two. Companies pay this tax on their profits. And finally, there is the capital gains tax. When you sell assets like real estate or stocks, any profit you make is subject to this tax. So why do direct taxes matter? Well, they fund essential services like education, healthcare and infrastructure. In fact, they contribute around 54% of the central government's tax revenue.
Right. So that's what direct taxes are. Shweta
Absolutely.
there helping us understand what direct taxes are all about.
And, let's also quickly take a look while we are on taxation. What are indirect taxes? How do we pay them? And how much, to what extent do they really contribute to government coffers?
Indirect taxation. By unifying the highly fragmented indirect tax regime in India, the GST has reduced the compliance burden on trade and industry. The industry has acknowledged the benefits of GST. According to a recent survey conducted by a leading consulting firm, 94% of industry leaders view the transition to GST as largely positive.
What is indirect tax? Indirect tax is the tax levied on the consumption of goods and services. It's called indirect tax because it doesn't directly tax the income or profit of an individual. Barring fuel, power and alcohol, the GST applies as indirect tax on the supply of all other goods and services. Apart from the GST, there is customs duty, stamp duty, excise duty, entertainment tax and securities transaction tax. High indirect taxes increase the cost of production and hurt India's ability to join key global supply chains, like the one for smartphones. It also keeps prices of everything from cars to homes too high for the Indian consumer. Will Budget 2024 chart a course to reduce the indirect tax burden?
And those, of course, are indirect taxes that you and I pay on consumption of goods and services, not coming out of our pockets directly, but coming out, of course, indirectly. But, talking about indirect taxes as a percentage of total revenue for the government has been reducing consistently, Karthik. You know what? Obviously, this is the GST that we pay. This is the customs duty that we pay, entertainment tax, excise duty, all of which constitutes indirect taxes. It's not swelling a lot, but it's still consistent. Given that GST over the year has been consistent, over about 1.4 lakh crore rupees. I believe that's the average.
No, actually, I think last 1 year it's been much higher than that. So I think about 1.65 to 1.73 has been the range, during the course of the last year, except for the month of March when it swelled to over 2 lakh crore rupees that it collected, in just 1 month. But then obviously March is always an aberration and you tend to collect higher taxes in the month of March. But my biggest grouse with this whole indirect tax, and ever since, while I'm an ardent believer of the intentions of GST and the kind of rationalization and simplification that GST was meant to do, my biggest grouse is why do we keep GST outside of the budget? I think budget is all about taxes, all about how much you're spending, how much you're receiving.
States are not going to like it very much if you were to have budget.
So you have the GST Council which decides on GST rates,
right.
But GST is not the only indirect tax, and honestly, as consumers, we tend to sometimes get very excited with GST rate changes because those directly impact us. But indirect taxes like customs and excise and tariffs make or mar the future of competitiveness in the country.
Okay.
So, just look at the example of smartphones, for example. Smartphone manufacturing has been India's, most glorious success stories in the China plus one scenario, where we want to take the mantle of becoming the factory of the world. So if we want to become the factory of the world in one category called smartphones, extend that to electronics, extend that to multiple other sectors, but let's just stay with smartphones for a second. While India is taking the lead in assembling smartphones, India is still a long distance away, not just from China, but even from a country like Vietnam, when it comes to manufacturing of components or making your indirect taxes competitive enough to enable manufacturing here in India.
Okay.
So components like circuit boards,
so
components like
on,
absolutely. So our duties on circuit boards, on camera components that go into smartphones, on the body, the shell itself in which the smartphone is cased, put together on an average, the customs duty that Indian assemblers, not manufacturers technically, Indian assemblers pay is about 15%. Compare this with China and Vietnam, it moves anywhere between zero, no tax on import of these components, to as little as 0.5%. So we are on an average about 30 times on average more expensive even than a country like Vietnam, when it comes to smartphone manufacturing.
Okay.
Extrapolate this data across auto, lithium-ion batteries, for example, which we are not making in India, but we are assembling, electric vehicles in India. Multiple other industries, multiple other sectors where we are still import dependent. Green energy, for example, not just lithium-ion, even solar panels, and a bulk of our trade, like it or not, still happens with China when it comes to import. So the economic survey yesterday was still, I think, fairly balanced and fairly pragmatic in mentioning that Government of India needs to be open about its trade with China, and attracting FDI from China should be on the table. It is not something that we should discard completely. And in the light of all of that, I think indirect taxes play, at the end of the day, a major role in making industry competitive, and we've got to be open about which are the focus industries we as a country need to create jobs in. Krishna, I know you like it, but I like it as much. I want to keep coming back to jobs. That is the moot question in focus right now. We've got to create more jobs. In the absence of jobs, you can't have jobless growth. And India's demographic dividend that we keep harping upon in editorials and in discussions and in white papers is actually not going to last forever. We are going to become old before we become rich, and that is a big problem right now that needs to be addressed.
But Karthik, as you ruminate on the question of jobs and job creation in this country, we have visuals coming in, live visuals of
Finance
Minister Nirmala Sitharaman just entering the. Oh no, we are just talking about Finance Minister leaving the Ministry of Finance building, and.
Visuals, of course, on your screens of Finance Ministry right now. She is the person of the moment. Let's not call her the man of the moment. The woman of the moment.
The woman of the moment is perfectly fine.
The person who is going to, of course, bring some of those changes
so
or
fact,
announce some of those changes.
When Finance Minister Nirmala Sitharaman is scheduled to leave from her house, the time frame given to us was between 8:30 and 8:45 a.m. Right now we are at 8:37 a.m. So I think Finance Minister would be seated in her car right now. We don't have those visuals just yet, but I think the camera is placed outside Finance Ministry, waiting for her arrival into the ministry.
We'll wait for arrival, but the question of you're telling me about jobs and why we keep coming back to it, why I keep coming back to it, why Shweta keeps coming back to it, why you keep coming back to it, But I have a fundamental question at this stage. Is it actually possible to have budget as a solution provider for job creation? How is it possible that you can ensure that X amount of allocation will result in X amount of jobs? Because the economic survey does say we need to create a whole host of jobs, 78 lakh plus jobs
in the non-farm sector, to be specific.
So I think Srinath will be the perfect voice on this, but I just want to come in for just 2 minutes before we throw the baton back to Srinath. I believe, yes, the budget is perhaps the most potent tool when it comes to creating a favorable ecosystem policy framework to attract investments, and those investments over time create jobs. But there are two things that the economic survey mentioned yesterday, which really hold my attention. Number one, the gap between education and employment. 1 out of every 2 graduates, which is 50% of those graduating from the country, are not job ready. That is a big statistic, right? So I think bridging that gap when it comes to education and employment needs to be priority number one. And the budget, Krishna, I think can address that by the right allocations in education, by the right allocations in skill development, upskilling and vocational education. That is number one. Number two, just to put in context that 78 lakh or 7.8 million jobs that India needs to create consistently till FY 2030. What does that translate to? That translates to give or take about 25,000 jobs a day. Just for greater context, how many people does Foxconn employ in the Chennai plant of assembling iPhones and manufacturing iPhones? 50,000 people, give or take. Which means if we want to create 7.8 million jobs a year, we want a factory of the scale of Foxconn getting operational every second day in the country. That, to my mind, we are chasing unicorns. That is not something that I see happening.
The government may disagree with you, because the government data at this point suggests, and this is when they were trying to answer Citigroup report that India is not generating enough jobs at 7%. Government says we're generating about 12 million jobs a year. Let's quickly get in Srinath into this conversation. Srinath, are you happy with the way, jobs formation and the pace of job formation in India? There's no consensus on unemployment. Economic Service says unemployment rate has now dropped to about 3.2%. But, the kind of visuals that come out every third day from every time when there is a job fair or there is an open interview, and the number of people who flock for those jobs, some of those very menial jobs, very low paying jobs, is actually painting a different scenario altogether.
I mean, I agree, Shweta. I mean, the job market is bleak. I mean, 82% of Indians work in the informal sector, and we don't have official high-frequency data at all. That's a reality, right? I mean, you always have a contradiction between the government data, CMI data, for example, and if you look at the other indices. The reality is, while we will be able to capture some amount of data on the 18% of formal sector, including corporates, but let's take corporates, for example. Today, if I say I want to hire a finance equity analyst, for every job, probably I will end up with about 1,200 to 1,300 CVs. If I post it on LinkedIn, I might get more CVs. So that's a reality, the shocking one, right? I mean, these are folks who are educated, probably till postgraduate degrees, and that's one. Two, if you look at any large municipality like the Delhi municipality or the Mumbai municipality, we have had scenarios where for about 800 roles or so, some 6 lakhs or 7 lakhs people have applied, including for job of a sweeper. We have had PhDs and master's degree holder apply for those jobs. I mean, it's I think a shocking narrative that yes, jobs are bleak, but you can solve for things only when you acknowledge that there is a problem. I mean, if you think that there is no problem, how are you going to solve for it? Because it doesn't exist. And I think that's a larger challenge. And I think just to touch upon what you spoke about manufacturing, and I think I agree with Karthik. I mean, India does not have manufacturing at scale and size and quality. If you look at the labor productivity indices, India ranks, I think, about 148 or 149th country. Right. I mean, Vietnam, Bangladesh is ahead of us. I mean, leaps and bounds. Okay. So unless we improve labor efficiency and productivity, how are we going to compete in the global manufacturing market? We can be great assemblers, and that's about it. I mean, to me, that's a larger fear about manufacturing. It's not about giving tax holidays or free land. You can give all that, but we have our what I call the 4 C's: the chai, the sutta, the conversation, the chat breaks, between everything. So how do you actually become more efficient, and how do you actually get? If you go to a Chinese, let's say a factory, I mean, when they say the factory starts from 7 and goes on to 3, they're actually working, producing. They probably have 2 bio breaks and 2 lunch breaks. You might call it dictatorial, but the reality is factories have to be run with the process.
Productivity is one thing, but in human work conditions and work hours in China, which China has been always called out for, is one thing. We will continue this discussion. We have another very special guest now joining us on the broadcast. We have Teresa John, lead economist at Nirmal Bang, now joining us live. Teresa, thank you so much for taking time out to be with us here on Budget Day here on News 9 Lab. There's an intense debate that's going on around job creation as you enter the conversation over here. Shweta, in fact, you have interesting data to share as well for all the question of where are the jobs?
Where are the jobs? And Teresa, the conversation into jobs, and I was just referring to the Citigroup data that said that there are not enough jobs being created, but government data, RBI data, as a rebuttal to the Citigroup data, says that India is creating about 20 million jobs, and this is the RBI data which is coming out. Since 2017-18, 20 million new employment opportunities were generated in India every year. Do you agree with that number? And if that number were to be right, what's the crisis around jobs?
Well, actually, the RBI data, the PLFS data, all of them show that the employment has increased, but the debate is where has the employment actually increased. So even the economic survey notes that probably the reverse migration has led to increase in employment in agriculture over the last few years, particularly post-pandemic. So probably, I mean, there is a lot of disguised unemployment in the country, and that has gone up over the last few years. So while the numbers may show that the jobs have increased, it's actually low quality employment and not leading to increase in productivity. So even the RBI data shows that there's been a sharp fall in productivity over the last few years, even though the employment numbers have increased. So jobs may be getting created, but definitely they're not adding to the productivity in the economy, and the quality of jobs remains in question.
All right, and a large part of these jobs, of course, are also in agri sector, and I think we've not discussed agriculture very much. So I think it's about time, because agriculture is going to be one of the thrust areas for the government. Remember, BJP's vote bank, BJP's vote share in semi-urban and rural areas has declined. So therefore, and it's a coalition government, therefore it is going to be an opportunity for this government to really bring in some more farmers into its political fold, political fold, and therefore it does look like some measures to increase farm income could also be of interest.
The first thing the Prime Minister did after being re-elected for a record third term was to announce the 17th installment of the PM Kisan Samman Nidhi. So, I mean, that's a big statement of intent from then on as far as Budget 2024 itself is concerned.
And tell us, given that PM Kisan contributes to about 3 to 5% of a farmer's income, do you see some increase in budgetary allocation there as far as PM Kisan is concerned?
That is something that we are building in our projections for the budget. So we have basically worked out 3 scenarios. In scenario 1, where we think the allocation under the PM Kisan scheme can increase from around 6,000 rupees to around 10,000 rupees per year, along with a tax cut for the the lowest income bracket. So we think the income tax exemption limit will increase from around 3 lakhs to around 5.5 to 6 lakhs. So that is definitely one scenario that we are building in. But under all scenarios, we expect at least some increase in allocation under the PM Kisan scheme. And I think the economic survey also kind of points you in that direction. They say that there is a lot being done for the farmers, both at the center and state level, in terms of free electricity, free water, subsidized fertilizers. But there could be something more that can be done, particularly since the farmers have not really reaped the benefits of the high commodity prices.
Okay, Srinath, rural and agri distress is also a very important political topic. You're talking about this budget coming in the midst of a coalition government. There are farmers in Andhra, there are farmers in Bihar. They have not been in national news headlines, but there are so many farmers over there. In that sense, how do you expect the budget to go about it, considering, if I may, the Prime Minister really set the tone for this budget with his first announcement when he took office for the record third term?
See, I want to go back to the previous 2 terms, Krishna. I mean, one of the few but very powerful change makers that the Prime Minister or the Finance Minister unveiled is use of agri drones, use of the soil regeneration project, interlinkages of rivers, because you have some parts of the country which are flooded out with excess water. You have certain parts which have drought prone. I think these are major reforms which still need, actual closure of execution. Because if you have a consistency of water availability, no overflooding, and some of those aspects of better soil quality, I think it improves the yields per farm. I think that's something very important structurally. 2, I think a lot of these schemes which keep happening, I think the reality is, can we put more money to the farmer, or the middlemen are going to make money off it? I mean, we dismantle APMC, the structures from market intermediation. But does it mean monies are going directly to the farmers? Not really, right? We have seen certain crops, tomato and potatoes, where the farmers have been dumping them on the market because they're not getting actual offtake. So the question is there more reforms on the minimum offtake price, the MSP, that the government will bring in? That's something I think I expect this budget to be far more clearer. Because it's a politically touchy topic, especially when it comes to state elections. We have 5 states going for elections this year. So how are we going to put more money in the hands of the farmer in the next couple of months very quickly?
So, I think, Krishna, just to add to what Srinath is saying, and let's look at the previous 2 terms. I think the promise with which the BJP government came to power back in 2014 and then continued to reiterate that promise, however, not really being able to live up to that promise, has been doubling of farmers' income. We haven't really seen that happen.
No empirical data at all.
Absolutely. So, I think while lofty statements are understandable in the political climate, but I think in pure economic terms, if that doubling of farm income continues to happen, whenever it happens, if the means to that end is subsidies, then we've got to realize and agree on the fact that subsidies are never going to be sustainable. It is always going to be a fiscal burden to subsidize farm income or to subsidize the final output from the farm sector. So at some level, agri infra, I believe, is something that the government must focus on. Instead of just simple subsidies like PM Kisan and that 60,000 crore rupee allocation paid in 3 tranches in a year, at the end of the day, you're literally doing what the US had done during the COVID and multiple other countries do, is printing currency. You are actually just printing currency and handing it over to the farm sector. In this case, you're not printing it, you're pretty much using the tax income that you have received from people like us to subsidize the farm sector. Instead, I think the infrastructure allocation needs to move towards multiple fronts, one of them being irrigation, where we reduce our dependence on monsoon, which in any case is likely to over time be the multiplier for better output from our farm sector. Number 2, I think we will have to over time look at infusing technology, and with technology, see, I think, coming back to the unemployment debate also, and why these are both related, I think you come back to the unemployment debate, the agri sector is still considered informal. You actually don't have those numbers reflecting in the formal jobs that the economy is creating. So you've got to de-link the two. You've got to add more technology, so more budgets in allocation of making the farm sector more efficient, whether it is through use of drones or high-yielding variety of crops, or incentivizing more high-yielding varieties like fruits to make it to the farm output, as opposed to just wheat and rice, which in any case don't fetch the kind of price that fruits would do, right? So you've got to have more specialized farming, you've got to invest in agri infrastructure, and you've got to reduce the subsidy burden, which keeps the government constantly on this, debate between fiscal prudence and collecting more tax revenue and offsetting its expenses.
Personally, I believe the government can ill afford to, at this point in time, really meddle with subsidies as far as farming is concerned. I do believe that...
Don't take them away. Don't add subsidies. I'm fine. I mean, whatever you have promised, you've got to live up to those promises. You live in a coalition era, much to the dismay of the ruling BJP dispensation. You don't want to tinker around too much with taking away what farmers are getting. But I don't think they should add to the burden. In fact, you should still focus on long-term efficiency of the sector, long-term sustainability of the sector, and by way of maybe, investing in the right infrastructure development and ensuring at the same time migration of the farm sector informal jobs to the manufacturing sector and creating formal jobs. Overall, the economic dividends of doing that, I understand the political dividends may not be that robust. The economic dividends in the era of Amrit Kal, Vision 2030, etc. is going to be far more.
A lot of this will actually require reforms. It will require reforms, the kind of reforms that the 3 farm bills and subsequent laws would have brought about, structural reforms in farming sector, but that hasn't really happened. So perhaps some policy direction on what farm reforms, labor reforms will look like in days to come in absence of those 3 farm laws.
Well, fair enough. What exactly is the solution that they are going to work out if the 3 farm laws are out of the question at this stage to be brought back into the picture? Let's face that. But before we go any further, I thought, since we're discussing farm subsidies so much, Shweta, we should understand what farm subsidies are all about. What does it mean for the Indian economy? Take a look at this quick explainer on what farm subsidies is all about, and then we'll continue this conversation.
Crop insurance is given to 4 crore farmers under PM Fasal Bima Yojana. These, besides several other programs, are assisting Annadata in producing food for the country and for the world.
Farm subsidies are incentives given by the Indian government to farmers to help them increase their income and grow agriculture and related sectors. In the interim budget, food and fertilizer subsidies, which make up the bulk of India's farm subsidies, accounted for about 8% of India's total expenditure. The outlay for food subsidy was a little over 2 lakh crore rupees. Food subsidy benefits both consumers and producers. It is used to acquire cereals and grains from producers at a rate that makes farming profitable and then sell it to underprivileged households at a lesser price or even free in some cases. In the interim budget, fertilizer subsidy had an outlay of 1.6 lakh crore rupees. Apart from this, farmers also get subsidies on power, agri-infrastructure, credit and exports as well. Overall, farm subsidies amount to 2 to 2.5% of the GDP. So for all the conversation on agriculture and the previous conversation on taxation, let's put that together. Gauri, taxing agriculture is a debate, that is time immemorial.
Will it ever happen?
Yeah. The point is that, are there realistic ways of ensuring that we get more taxable income from agriculture?
Yeah, I believe that, of course, I think it's not doable at this point in time, especially looking at the coalition government. But what should be done is that the rich farmers, I believe, should be taxed, because see, not every farmer is poor. We, of course, want to focus on infrastructure and like everything for the farmers to increase their income. But there are farmers who are having a lot of income. They have income in CRs, but they are not paying any tax. And there are farmers who have huge chunks of land which they have given on rent. Even the rental income on agricultural land is exempt from taxation. So imagine the amount they are receiving on agricultural income, and they are not paying any tax. Although if you have any business income along with agricultural income, there is taxation, of course, with a different calculation. But purely agricultural income is totally exempt.
But Gauri, government can only tax what it knows of. So if it doesn't know how much a farmer is earning, how will it tax that income? See, it all brings us down to the question of formalization of the sector, agri sector. Unless there is some formalization of agri sector, government cannot account for how much
cash in the system. At the end of the day, if you're still dependent on middlemen, and those middlemen are making transactions not using QR codes. I mean, you go to the farmlands, at least in North India, I can speak for. The transactions are still happening in cash. So with cash still being, if not king, at least a bishop in the agri sector, how do you really get to know how much is the real income that the farmers are making?
Tax is one thing, compliance is another thing altogether.
But see, the same thing applies on other sectors as well. If you see roadside vendors, do you know how much they are earning? I mean, you can't even imagine their earnings. They are dealing all in cash. Now, of course, after COVID, there is UPI. But now, because the TCS is into play, they still have to file taxes. But I still am aware of so many roadside vendors who are making lakhs on a daily basis, and they are not filing their return also. So this is not the problem only with the agricultural sector. This is with like every sector. So the focus needs to be even out.
The informal sector as a whole.
Exactly.
So, Krishna, that brings me to another debate that you and I at least have been having for a long time. How do you define poverty? I mean, taxing rich farmers is one question. Not taxing poor farmers is another question. But who is really poor in India? And I think that is an unending debate again with multi-dimensional poverty as index thrown in.
I'm sure Srinath has a lot to say. Srinath,
who is poor in India?
Yeah, Srinath, there is the Tendulkar line, there is the Rangarajan line, which never came into effect, and then there is the Gini coefficient. I'm talking Greek right now to a lot of people. I'm using words that that make no sense whatsoever. But there is that term called below poverty line. We can only know what is below when we know what the line is, isn't it, Srinath? What is India's poverty line?
See, we've had this debate in the parliament the previous term of 32 rupees a day as being the poverty line or the minimum sustenance amount, right? I mean, it's a ridiculous one. I think we will have to say that what is daily sustenance, which means that can somebody have a meal and which nourishes them, which allows them to stay somewhere. And even if you take the remotest of the village in India, I mean, I don't know, 32 rupees, what would it give you? I think we'll have to relook at those numbers very clearly and say, because when we are saying that we want Viksit Bharat and this is what we are going to move, we also have a larger responsibility for people who don't have access to a lot of those. So which means the moment, let's say, I'm just putting a hypothetical number, if you say 100 rupees a day per person is what India needs for somebody to live. I'm not saying luxury, to have one meal, probably a nutritious meal. I think then build on those. And I think even definition of income tax around that is possible, because when you say that I want to have the first lowest slab available for taxation, can we factor in what does it take for a family of 4 to live in, let's say, a tier 2 city with frugal means, and then start taxing above that? And I think to your point about the agricultural farmers, one point I wanted to add today, financialization of the data around financialization is available in the form of UPI numbers. If you start tracking UPI numbers by the phone, and if I'm having, let's say I'm a chaat wala in Mumbai, and if I'm taking QR code And if people are seeing that my phone receives, let's say, ₹1,00,000 a day, at some point in time, I think RBI and the CBDC or CBDTA will start working together to say that am I in the taxable net? And I think data is available. I think it's just that we'll have to bring in various forms, departments of the government to start collaborating together to figure out a tax. So I don't agree with the narrative that there is no financialization of data available. There is enough data available. But are we using it smartly to widen the tax net? No, we have not used it so far.
Sticking on with poverty, and another interesting topic which often catches my attention is the debate around inequality. Now, for the very first time, it does look like Economic Survey, Teresa, is admitting that there is inequality in income at least. 10% of income earners in this country account for about 1/3 of all income earned, essentially suggesting that it's just this 10% which is earning most, while the rest of the people are still struggling. People like me, at least, are still struggling when it comes to our daily wages, our daily incomes. What do you make of the inequality debate, where the government is time and again constantly repeating that we've done enough to lift people out of poverty, but hasn't done enough to ensure that there is equal distribution of wealth? And in the past 10 days, let me tell you, there's never been a conversation around income inequality as much as in the past 10 days, owing to the Ambani wedding.
So I think income inequality is an issue not just in India, it's a global issue as well. But since India, the GDP per capita is relatively low, so it's a more starker problem here. So I mean, definitely the poverty levels have come down, that cannot be denied. But I think the focus going forward has to be creating quality jobs, so then you can lift incomes across the board. Particularly post-COVID, we have seen a K-shaped recovery that everyone has been talking about, where the rich have got richer, the poor have got poorer. Mainly because, I mean, you had more people move into agriculture, which is basically a low-paying occupation at the bottom of the pyramid. You had people kind of benefiting, from the fiscal sort of stimulus coming into the into the market. People benefiting from equity markets, people benefiting from services sector jobs like in IT and financial services post pandemic. So, I mean, the inequality is for real. But that said, I think we also need to highlight that before we strive for equitable distribution, we need to grow the pie. Only then you have something to actually distribute. So I feel the focus should remain on growth, but as the country develops, we should also focus on more equitable distribution of wealth.
All right. Equitable distribution of wealth, as Shweta rightly pointed out, has been a huge topic of conversation and debate, especially with regards to what we've been witnessing on our social media feeds. As Shweta was
5,000 crore rupees spent on a wedding where we don't even know what the poverty line is for the country.
Yep.
Should it be 32 rupees? Should it be 100 rupees? Well, that of course continues to be a point of conversation.
For now, we're going to take it back away from poverty into extreme wealth in this country, which is the stock markets. And the stock markets are set to open higher, is what we understand. Maybe I don't understand it all that well as to how to anticipate market open. We have Suyash Maheshwari, my colleague and friend, joining us here in the studio now. For that, Suyash, talk to us. What are the street murmurs at this stage? How are the markets likely to open on this budget day?
So Krishna, as per the trends on GIFT Nifty, it's expected to be a flattish sort of a start this time around. But I think, none of us are expecting an uneventful day by the time 3:30 comes around. But, looking at the overall setup, the situation is different this time around. Previously, if you look at historical trends, in 8 out of last 10 budgets, in the run-up to the budget, in 1 month prior to the budget, the markets have actually corrected. But this is not the case this time around. In fact, Nifty has rallied close to 4% in the month prior to the budget. And since counting day, Nifty has gained a massive 16%. Small caps and mid caps are up about 20%. And that's just in a month and a half. So clearly, there is, exuberance about the budget. And there are a couple of factors at play over here. First, as you guys pointed out, that the budget is expected to be growth oriented. The schemes are the expectations are that welfare schemes and social spending will likely go up, which will facilitate rural demand and consumption. Also, there are expectations that certain measures will be taken to, put more money in the hands of, the middle class, and that would overall boost the savings of the middle class as well as rural India. Also, that will, if they save more, they will invest more. So that will keep, helping the markets moving forward. And if you look at the overall setup, in the 6 weeks prior to the budget, the markets have been running up constantly. They are on a 6-week gaining streak. Just last week we ended flat, but even in that correction, the large caps, they were able to end on a flattish note. We saw some bit of correction in the mid and the small caps, as well as, the so-called champion sectors like railways, infra, defense. They corrected, and perhaps it could be fears of disinvestment. We know that SEBI's 25% minimum public shareholding deadline is just about the corner. So maybe government does focus on disinvestment going forward, or at least in this budget, we have some targets in that regard. Also, another factor why perhaps there could be some correction in these sectors, PSUs, railways and defense, could be because of overvaluation. Remember how aggressively these sectors have run up in the past 12-15 months. Some of these stocks are up to 200 to 300%. So they have generated like 4x.
Incredible wealth creation, isn't it?
Yes, for sure.
Let's quickly get in Rohit Srivastava into this conversation, founder, market strategist, India Charts. Thank you very much for taking time out. One of the a couple of words that we've been hearing now for last few days, especially since yesterday, is exuberance. Is there's too much volatility? Perhaps there is over financialization. And quickly quoting from what the economic survey said about Indian financial sector, it said that it's at a turnpike moment where dominance of banking support to credit is being reduced, role of capital markets is rising, and perhaps that is something to worry about. Are you worried about it?
So thanks for having me. And what I would really say on that is, it's not really a worry. I think it's a very welcome structural change. And for a second time, for those who don't remember, in India, that, in the 1980s, we wanted this movement towards equity to start. And it actually did with the introduction of, mutual funds, the US 64 scheme, UTI. And why I actually recall those moments is sort of started tracking markets in the late, around 1990 onwards. And that was a period where huge retail participation had actually started to happen in India. Now, this is the second coming, and in a much, much bigger way. Why should it not be welcome? It is a very, very huge welcome change, because participation in equity not only creates wealth, but also, provides capital to the markets. The big difference, though, then is the regulatory environment. The regulatory environment there after the first round of reforms in 91 was excessively open, which resulted in multiple scandals and scams and so on and so forth, which then got us into a lot of trouble. So in that sense, I think all the noise that we are hearing is good noise, because people are worried that the same kind of thing should not happen today, where retail investors get caught in something wrongly, and it doesn't turn out the way that you thought out, and then it takes several years to correct that. But like I said, the regulatory environment is so very different. SEBI is very, very proactive. Everybody's watching the data and thinking about how to get it right. So what can really the best outcome can be in this is where the government or its policies simply redirect this capital that is coming into markets into the right places. I think that is the ideal thing. A lot of chatter about tax increases and all doesn't really serve the purpose, because that is dissuading investors. I think the only place I would be concerned, if at all, it would be around this weekly options area. That is something that.
All right, Rohit, we'll come back to you shortly. We have visuals now of Finance Minister entering the Ministry of Finance on your screens right now. The person of the moment, she will be heading to Parliament right after this. But before that, she is currently now entering Ministry of Finance. Nirmala Sitharaman on your screens right now.
So back to the markets, Krishna, I just have one observation right now, and I think, Rohit and Amrish, when he joins us, both should be able to weigh in. I somehow feel right now, our institutions don't seem to be in sync with where they want consumer money to flow. At one point, we are talking about household savings being low. We are talking about banks perhaps needing more capitalization to be able to fund capex. We are talking about high interest rate and the logical assumption is that people should partake in the fixed deposit story, to shore up the lesser risk asset class. And at the same time, we have statements on F&O coming, which would at some point dissuade people from taking part in the financial markets. And the speculative tax on F&O, I think, is something which is of great concern, not just to retail investors, but even to institutional investors out there. So, Rohit, if I can just get your views on that, are we in sync with what we want people to do with their money? And even if we give more money in their hands, do we want that money to only compensate for inflation? Do we want that money to find its way into the banks? Or do we really want the bull run to continue?
So the goals of the investor are very, very different from, the institutional framework. The goal of an investor is, one is to grow his wealth, and second is to beat inflation. Those are two simple goals that we are really trying to achieve. But see, some of the things are contradictory.
Rohit, sorry to cut you short. There are live visuals on your screens right now. Finance Minister holding that Bahi Khata, this very important, crucial moment that we'll all be referring back to through the year, Krishna.
Absolutely. It has been made into a tradition, if I may. Once upon a time, it was a suitcase in India. That's what went inside the parliament. But now, that's all changed. It's a finance minister presenting a record 7th budget, and the Bahi Khata continuing to be a symbol, if I may, of a prominent feature of our budget presentations. All I can think of is that
Just
little...
flogged by all the officials, people responsible really for coming up with not just the economic survey yesterday, people who are going to write the fate of this country for the year to come at least, flogged by all representatives from Ministry of Finance.
That little red, encasement has a lot of hopes.
A digital one, an iPad, a tablet. I don't know if it's a Make in India tablet, if it is something which has been produced, within the shores of India.
Or Noida tablet.
Yeah, could be. I mean, you never know. Or made in Chennai for that matter, Krishna. It could be assembled by Foxconn for all we know.
Yeah. Could be in Noida, could be in Chennai. In fact, Tamil Nadu and UP, incidentally, are competing for the top honors as far as electronics manufacturing in this country is concerned.
And a Make in India car there, the Maruti Suzuki Ciaz, which is driving Finance Minister now to Parliament. I suppose.
Talk about another Make it in India statement over there. Incredible. So we will be bringing you, as the adage goes, the ball-by-ball coverage of Budget 2024 right here. We have a very special set of guests joining us here in the studio. The latest to join our long panel of distinguished guests is none other than Mr. Lloyd Matthias, who joins us here in our studios. Thank you, Lloyd, for taking time out to be with us this morning, this day, Budget Day, special day for not just us in the studio and our guests joining us like Rohit, but to everybody watching. Budget Day, income tax, indirect tax, the burden of the taxes on India's middle class. If they were to by chance save some money and try to invest it in the markets, be it mutual funds, SIPs or stock markets, you pay tax on that if you earn anything on that as well. So this has been the talk of the social media, in the lead up to this budget. How many taxes will the middle class pay? And if I were to ask you, do you see any relief coming in for all those watching us right now?
Yeah, I think great to be on this show. I think fundamentally the middle class is looking forward to some relief. I think this is the one segment that's always got the raw end of the stick. You have the large farm lobbies that kind of ensure the farmers are well, and of course the people at the bottom of the pyramid represent a large vote bank. I think the middle class have kind of bailed out the country in a sense and have really got nothing in return. And I think this time around, I think the expectation is that they will certainly get some degree of tax relief. And here I'm talking of the salaried middle class, a lot of whom get tax deducted at source, the TDS, TDS as some would call it. I think they've really gone through years of, just kind of paying taxes and not getting served in return, right? Whether by their political representatives or whether basic issues. You look at our cities, look at the quality of traffic, look at pollution. I think it's time to actually address this core constituents that have been fueling the economy. And I really believe there are some rationalizations on the personal tax structure that needs to come in. I think the one big startling point that I'm sure that the finance minister has recognized is that last year in direct taxes, personal income tax overtook corporate tax, right? So I think that's a big signal. So right now it's actually people's taxes that are in a sense, it's a personal income tax overtook corporate tax. So I think it's something that really needs to be relooked at in this budget.
All right. Well, that of course would be one of the expectation from the budget.
I actually want to circle back to Rohit and what Karthik was saying about this speculative tax that is expected. There has been a change in wording. Both SEBI and the government has raised red flags about this unabated rise in retail participation in the F&O segment. But lately, in the wordings, I mean, speculative trading and derivatives trading has been used interchangeably, right? So, Rohit, do you expect a speculative tax for F&O, and could there be a 30% sort of a tax implication for the derivatives segment this time around, sir?
So I don't really think that would make much of a difference, and I'll tell you why. For those who don't remember, F&O trading gains and losses were considered as speculative tax, prior to, I don't remember the year exactly, but 2008 or 2011 when they changed the tax requirement from speculative to business income. Now that it has come under business income, to go back to speculative tax is simply making the tax law more complicated. Now think of it from a retail investor's point of view. How many people run businesses? So essentially this only helped people who were running a business, had losses in F&O. They could have probably written it off against their other income and reduced their tax outgo. Now when we know that most people tend to lose money in the F&O segment, when we introduce this for retail investors, all they're going to end up doing is carrying forward losses either as speculative or as business income, but they don't really run businesses. So by changing it from one to the other, apart from complicating tax law, you're not going to really achieve anything. So I don't think this should be done, or it has any meaningful output. The other, contradictory issue, which you were asking earlier about interest rate and the banking sector, I think that's where a lot of contradictions are there. Say, for example, we want people to earn a higher rate of return, but you also want deposits in banking to go up. Right now, if you want that, you'll probably want a higher rate of interest in banking. But on the other hand, we need to lower interest rates with the trends globally to make it easier to finance projects and improve the economic environment. So this is a contradictory force that you're going to be dealing with over here, because on the one hand, you're going to try and pull down interest rates to make the investment environment more friendly. But as you do that, you are further going to deviate away, money from the banking sector to other segments. So how do you handle this? Would have to be done through some incentivization of other, in some way that the government would have to really think about.
Right, Rohit, stay with us even as we're discussing the markets. We have a very special guest joining us, a market expert joining us. We have Ambarish Baliga. Mr. Ambarish Baliga, thank you so much for taking time out to be with us here on Budget Day here on News 9 Live. Great to see you. We're in the thick of a debate on the taxes, the speculative tax on F&O, and all the chatter surrounding investments in stock markets being taxed. Would love to begin with your view on with your views on that as well.
See, my belief is possibly for speculative income, especially the futures and options side of the market, it's very much possible that there could be a tax, a higher tax to be a deterrent for so many people just trading day in and day out. So I think there can be some sort of a special tax as far as the speculative income is concerned. Whereas when it comes to long-term capital gains and short-term capital gains, I don't think there will be any change, but possibly there could be some simplification of these taxes. So overall, I think the taxes, imposed would be more to deter people from this unbridled speculation which is going on, and which has been a cause of worry as far as the regulators are concerned. So I think that would be addressed.
And as we speak, markets have opened on a slightly flattish but positive note. So, yes,
market have opened actually higher. The Nifty is up about 0.2% as we speak. It is above 24,550 levels. The mid cap and the small cap indices are doing better. Both indices are up about 0.5% or so. India VIX, for that matter, has in fact fallen by about 4.5%. It's below 15 mark. That's interesting to see, because typically you would expect volatility to go up. All other sectors are in fact trading in the green. So a good start to the day on budget day for the markets.
What do you think is going to happen from here? I think, during the budget speech and in the immediate aftermath is when that VIX is likely to move, I think, and it's likely to move up.
Ambarish, would be great to have your take on that. Where do you see the markets on budget day?
I think that's a $1 billion question. I also don't
many billions of dollars possibly.
All right.
But then yes, I mean, I would give you a regular answer. The markets are going to be volatile, no doubt. When on a day like a budget day. But then, see, we should remember that the valuations are quite expensive. So unless it's a extremely good budget from a market perspective, for the markets to hold up, I think it will be a bit difficult. So my bets would be more on the markets correcting post-budget. So I would go into this budget on a slightly lighter portfolio than fully invested.
All right. Actually, I have a question for both Ambrish and Rohit. Since the most of the positives, as you said, have been factored in and the markets have run up quite significantly ahead of the budget, do you see if there is any lack of announcements? Could there be a big crash like the one we saw on counting day? Rohit, you first.
So I don't think there's a case for a negative surprise like there was on election day. In fact, if we go by the derivative positioning, if I just reflect on how FIIs were positioned ahead of the election day, they had the highest short position in months near the bottom end of the range. They were also selling in the cash market. Today, the situation exactly the opposite. They're extremely long. It's a 7-year high in terms of long positioning by FIIs in the derivatives market. And they have been buying in the cash market, and this is the highest net buying for a month since December. So this is a 180 degrees opposite scenario. My sense, if I go by the positioning, would be that they are anticipating a positive outcome from the budget. We have both liquidity flows at the domestic and foreign level now positive. So liquidity itself doesn't really point to a downdraft in the markets, though all the concerns I think have been pretty much highlighted around valuations and so on. But my argument around that is that there are pockets of overvaluation only. It's not the market as a whole that is overvalued. It's not mid caps as a whole that are overvalued. There are only pockets of overvaluation. So there's a lot of room for rotation to happen. Now, sometimes rotation happens with a correction. Sometimes rotation can happen in an ongoing market as well. And last 3 to 4 years, in fact, the post-COVID environment, we've actually seen rotation in an ongoing market. So that is why I wouldn't expect too much of a downdraft. In fact, I think the case is for a positive surprise.
All right, and sectors in this run-up, I mean, the markets have been on a gaining streak for the last 6 weeks. But last week we saw major correction in some of these championship sectors. Your infra, defense-related stocks, they all saw profit booking. What do you think is the case? Overvaluation or fears of disinvestment? Ambrish.
A mix. Yeah, sorry.
Disinvestment, possibly yes, but then I think it's a case more of overvaluation because, just talk of defense. About 3 or 4 years back, we were talking of P of about 8 to 10x. Today, we are talking of revenue 8 to 10x. So that really shows as to, the amount these stocks or this sector has moved. So it's quite natural that there has to be some correction before possibly the next move. And from a budget perspective, clearly, like I said, there may not be anything majorly negative as such overall in the budget. But then I think the only negative in case it comes could be the speculative income tax, which I was talking about. That could be negative from a market perspective. And in case that comes, that could be one of the reasons for the market to correct. The other sort of a reason could be that, at the level we are at right now, clearly, I think only a dream budget can actually sustain this rally further, which I clearly don't expect this time because it will be more of a realistic budget than a dream budget. So possibly the markets can fall under its own weight. But again, I would say that it may not be a sort of a crash like what we saw on June 4th, but it could be a gradual correction.
Gradual correction, that is the expectation. One of the conversations, of course, we also want to have is the taxes that common man really pay, the retail investors pay on every time they trade in capital markets. Let's quickly listen in to this short explainer on the taxes you pay and the possible changes that can come in by the way of budget. Ever wondered how taxes impact your stock investments? Well, let's dive into essentials. First, there's STT or Securities Transaction Tax, a nominal fee applied to every stock transaction, typically around 0.1% of the transaction value. When you sell stocks within a year of purchase, you'll encounter STCG or short-term capital gains tax at a flat rate of 15%. On the flip side, if you hold stocks for over a year, you're looking at LTCG or long-term capital gains tax with a beneficial rate of 10% on gains exceeding 1 lakh rupees annually. STT plays a crucial role in market operations, while understanding STCGs and LTCGs help you strategize your investment for better tax efficiency.
And as we continue our day-long budget coverage, non-stop live coverage of Budget 2024, latest visuals on your screens of Finance Minister Nirmala Sitharaman with the Bahi Khata, that digital Bahi Khata, e-Bahi Khata if I may, which is possibly a tablet wrapped in red. Lots of hopes are riding on it, and we here at News 9 Live are going to help you and everybody decode Budget 2024 with some special guests joining us all through the day. We have one new guest joining us now on the broadcast here in our studios. We have Mithali Nikore joining us from Mithali Nikore Associates. Thank you so much for taking time to be with us here on Budget Day. We were discussing markets right now. We're just trying to understand what does it mean for every budget has a lot of meaning for the common man and the taxes that the common man pays. And then as far as the middle class goes, everything from their income tax to the tax that they pay when they finally save some of that income and invest it, that tax burden is crushing them.
Absolutely. And I think, this time there are a lot of different rumors floating around. There have been rumors of inflation-linked taxation, where some people are saying, okay, maybe we'll have a situation where our tax brackets could actually be linked to inflation the way they are done in the US. I think we're a few budgets away from that. But at least that, the idea is being bandied about. And then there are certain people who are also saying that, let's look at the GST rates and look at rationalization on that side, maybe if not on the direct side, but at least on the indirect tax side. I mean, can we look at maybe reducing the number of rates from 4 to 2? And that's a proposal that has been gaining a lot of traction in the industry circles, not so much in the policy circles, but at least in the industry circles, it's a huge demand. So let's see what we have in store for us. My particular request is to also rationalize customs duties. We have a lot of customs duties on number of commodities, which makes it very difficult for traders, importers as well as exporters. And I think somewhere we have to look at simplification of customs duties and trade processes as well.
All right, that is as far as indirect taxes is concerned.
But Shweta, I want to come back on taxes on stock because there are a lot of talks about there could be perhaps uniformity when it comes to financial assets, regardless of their holding period or whether they are debt or mutual fund related. Now, Rohit, I'll come to you on this one because Amrish does not expect too much tinkering as far as capital gain tax is concerned. What are your expectations, sir? Do you think that introduction of uniformity across different financial assets could be brought about, or the long term, the exemption limit of 1 lakh on long term capital gains on stocks, could that be revised upwards?
So that's a limited thing that can happen. I mean, revising it from 1 lakh to 2 lakh for the bottom end of the investors who are just coming into the market. But I don't think on any of the major taxes there should be really any change. I would probably agree with Amrish on that. LTCG and all don't really need to be touched. They're already at a good place. Should we tax other asset classes in a similar way? Each asset class is very, very different. I mean, realty is treated differently for a reason, or gold and silver treated differently for a reason. So I'm not sure whether a uniform tax code for all asset classes really makes sense.
All right, and since the last budget, the FM said that the path at least going forward is towards fiscal consolidation. But since then, we have got this 2.11 lakh crore mega bonanza from RBI. Another 2 lakh crore is expected from the inclusion in bond indices. Where does that money go? Does it go towards taming deficit, or will it go towards boosting consumption, which could perhaps boost stock markets as well? Amrish.
I mean, the way I see it is possibly it would go more towards the capex side of it, which will finally lead to a boom in consumption. But at the same time, let me also touch upon another topic, which I think would be of importance as far as the budget is concerned. I think clearly employment generation would be the another focus area for this budget, because see, we clearly have the demographic dividend as far as India is concerned. However, I think we need to ensure that this youth is gainfully employed, as it's a double-edged sword. Because if gainfully employed, we'll have a consumption boom going ahead, and clearly we will be on the path of Viksit Bharat 2047, which we've been talking about. But if not, then I think it can become a social issue. So I think this is an important thing which I think the government would need to focus on.
If I were to bring that question to you, the taxation on investments, everything from an SIP to a mutual fund to an actual stock buy, I mean, enough of it, isn't it? In that sense, but realistically speaking, they're not going away anywhere. But what are your expectations from budget 2024?
See, I'll first tell you what I would want from the budget 2024, although I feel that it won't happen in this particular budget, but whatever expectations I have might be dealt with when the direct tax code comes into picture. Now, there are few points which of course the government needs to look into. First is, of course, like we discussed, the uniformity in different asset classes like equity, real estate and other asset classes. In this, I would also like a change in the debt mutual fund taxation, where the indexation benefit has been taken away. I believe that many people are not investing in debt mutual funds now. So, because after 2023, because the indexation benefit is no longer available. The second is, like we discussed, F&O taxation. So, F&O taxation, whatever it is, I have no issues with it, but the point is the audit in case of F&O. So, the calculation of turnover in case of F&O and getting audit done, everything is very complicated. Although we have guidelines by our institute in terms of calculating the turnover in case of F&O, but more clarity from the budget or maybe direct tax code whenever it comes in is definitely required. Second is more clarity on the most misused section, which is the presumptive sections. So, that definitely is there. And in terms of capital gain tax, only one thing which I am expecting from this budget is higher limit for the 1 lakh exemption in case of equity. If anything at all happens in terms of market taxation, it will be increasing this limit, because I don't see any increase in the tax rate, which is already at just 10%, and getting away with it, I don't think so will be an option.
Now, Gauri, you said that you don't have a problem with taxing F&O as speculative tax, a possible introduction of a 30% tax. But don't you think that would bring in more volatility into the system, because a lot of these investors won't be able to hedge their positions, right?
See, correct me if I'm wrong, but the SEBI, I think, has mentioned that 9 out of 10 people incur losses in F&O. So, I believe that F&O is a very risky way to deal with the market. If you understand the market, you are good at it, definitely you should go for it. But people basically what they do is, and especially because of the various reels on Instagram, and now if we see political inclination also towards the market, I feel that more and more people are taking risks. So if we see that if somebody from somebody on a higher position is saying that the markets will go up, people tend to feel that in one day they will get rich, and they tend to put all of their hard-earned money in F&O, thinking that in a single day they will be richer. So I think it's very risky. So you can't control that, but if you will lower the tax, I think it will increase the F&O traders, and people will tend to invest more without knowledge. Okay. With knowledge, I believe it's fine, but without knowledge, it's very risky.
Okay, so higher tax will act
on the
perhaps
Instagram
as a deterrent
feed,
at least for those.
On the Instagram feed, Shweta, you get the poker ads, and you get the same stock market, and tips, as one after the other. I think people click on the wrong thing and do the wrong thing at the end.
Oh, absolutely. But let's taking this conversation a little bit away from markets to the economy right now. Yuvika Singhal from Quantico joining us on the show. Yuvika, thank you very much for taking time out. I want to first come to you about the GDP projection for financial year 25 from 6.5 to 7%, which is what the economic survey is expecting at the moment. A bit conservative, would you say?
Well, I think it's largely on the conservative side, because most of the market expectations, if you look at the estimates on the street, are closer to 7%. Even global agencies, IMF recently revised up India's GDP growth for FY25 to 7%. And RBI happens to be at the top end of this forecast spectrum at 7.2. So while when the CA did announce 6.5 to 7, it did seem a bit conservative, but I think they want to err on the side of caution and give a band rather than giving a point estimate and then going back, because they do not have the chance to go back and revise forecasts like we typically do, keeping in mind how high frequency indicators move in the economy. So I think a band does make sense because it's a document which has a larger shelf life or a longer shelf life, and it would remain on, as a benchmark as to what the CEA said at the time of the announcement of the budget with us for a span of almost 8 months. So I think it does make sense. It might be conservative, but we have to look at it from the perspective that it's a one-time forecast, a band forecast, which works well for a longer time.
Sometimes do these forecasts sound like, make sure you under-promise and over-deliver? Because look at what happened last year. 3 out of 4 quarters of last year, you had 8% plus GDP. Literally, there were no predictions or estimates in that range for last year. And this year again, let's think 6.5 to 7.
I think it works well for the government.
Anything about that is a bonus, isn't it?
I think it definitely works well for the government.
But it's actually true for us as well. Analysts on the street, nobody had predicted an 8.2 last year, right? So we need not be extremely harsh for the government for being, under pessimistic and then over delivering. But none of the, market participants also saw an 8.2 coming. So at best, we were somewhere around 7.5, 7.8, even until the final number was released. So it did catch us by surprise, but we have to understand what drove that upside was largely the wedge between GVA and GDP, which was somewhat peculiar in last year and is unlikely to get repeated this year. So there are much more finer nuances at play, I should say.
All right. Finer nuances at play, but before I let Amrish go, Amrish, your expectation from the budget, I think that is what I'm going to leave you with. Your expectation from the budget, and what are the key sectors one should watch out for, at least the retail investors today and the days to come?
Like I said, I think it'll be a bit on the populist side with focus on rural and the farm economy. But however, I expect the finance minister to continue with the fiscal prudence which we have seen in the past so many years. I think the middle class clearly is expecting some tax stops, and rightly so, because they need more cash in hand. And as usual, I think we'll see increased allocation to defense, infrastructure, including railways. And like I said, there could be some further tax, just to dissuade speculation. I think if you're talking of sectors, I see because of this budget, we could, and especially because of the focus on rural and farm economy, we could see an increase in consumption. My sectors which I bet on would be FMCG from a budget perspective, and overall from a recovery perspective, I would look at IT, where we start seeing some green shoots.
Okay, some green shoots in IT and a few sectors. I hope people watching are noting down this sort of like a portfolio check that Ambarish Baliga is giving us. Ambarish, always a pleasure.
Thank you very much for taking time out.
For taking time out to be with us. Always a pleasure having you on the show, and we hope to keep having you again and again as well. But for now, I guess we have to let you go. Thank you so much for joining us.
Krishna, just to take a cue from what Mr. Baliga was saying, we are seeing some green shoots of recovery in IT and FMCG as well. Remember, as he said, it is expected to be a populist budget, so spending on social schemes are expected to increase, which will prop up rural demand. So FMCG sector has done fairly well. But Yuvika, I want to come back on a question to you regarding the problem that both FM and banks have raised this time around, that the deposit growth that's been lacking. So what do you think could be measures to boost that? Could there be some, tinkering as far as FD tenure is concerned? So tax-free FD currently has a lock-in period of about 5 years. Could that be reduced? What else could be done to boost deposit growth for banks?
So I think it's a topic from a macroeconomic perspective which has garnered a lot of attention. Also because Governor Das has been very vocal about it. So he's talked about the wedge between deposit growth and credit growth and how the wedge is very natural in an economy, but it can't be an extremely large gap, which leads to systemic liquidity issues in the economy. So I think it does make sense when they talk about upping deposit growth. But I think from an economist's perspective, we also have to rationalize that there are structural behavioral changes that are taking place in the economy. There is a decisive shift away from bank deposits to possibly capital markets and other financial intermediaries. It could be mutual funds, it could be insurance products, pension products. So people are parking their savings in a very different way now than they used to do probably a decade or two ago. And that could be largely stemming from a much younger demographics, which could be more risk-taking in nature. But having said so if there are behavioral changes that are taking place, it is probably the right time for the government and the policymakers to rethink their approach towards deposits. One, the wedge between deposit rate and credit rate definitely needs to correct. And secondly, that deposits happen to be a very large, chunky item as far as investable resources in the country are concerned. And banks who are intermediaries have to pass on these investable resources from the household to the productive sectors of the economy, especially the private sector. So there are a couple of things that they can probably look at. FD is one route. So, you talked about the tenor. That could be one thing. But also when FD is, prematurely withdrawn, there are penalty charges that are levied on it, which could be done away with or decreased to some extent. Also, the interest income that people earn on their bank deposits are subject to taxation. So the banks are expected or needed to charge a TDA, a tax deducted at source, a TDS. Any kind of savings oriented interest incomes above 10,000 rupees on an annual basis has to be included in your taxable income. So all these measures which are currently in place, which probably did make sense a decade ago, probably have lost some relevance and have made deposits somewhat on a weaker footing when we compare it to returns that individuals get from other channels or sources of investment. So I think the time is probably right to create a more level playing field in favor of deposits, which could ultimately lead to more liquidity and surplus, which can be effectively utilized to pursue, private capex cycle, or to channelize towards productive sectors of the economy, which could amplify into better growth outcomes for the country.
All right, on a lighter note, for the longest time we've been hearing mutual funds sahi hai. Lloyd, about time we hear banking bhi bura nahi hai. Go back to FDs. Absolutely. Perhaps time to go back to FDs.
I would say two things, but just want to react to one of the points that Yuvika made. I think one other factor that's gaining ground is that ever since the government put in tax breaks for the corporates in 2019, I think the sense is two aspects. One is, the reduction in corporate tax kind of fueled this market euphoria over the last 4 or 5 years. The second is, through the course of the pandemic, a lot of young people got onto trading, right? Whether it's options or normal retail trading. Now, both these have done, two good things. One part, it's kind of resulted in this boom. But now there's a sense getting around elsewhere in the world that Indian stock markets aren't reflective of the economic reality on the ground. There seems to be a disparity. At one level, you're talking of tepid consumption, you're talking of job creation being a problem, you're talking of inequality. At the other end, the stock markets are just looking like up, up, up and up, right? So I think this disconnect is what, between economists, market experts, one is expecting this budget to kind of address this, right? Where is this going to, right? At one level, markets are going up, possibly driven by retail euphoria, possibly driven by performance of company performances after the tax breaks and corporate tax. That's really helped. But to what extent is this converting to real jobs on the ground? And therefore, my sense is a big expectation of this budget is going to be around, what about the MSME sector? Yes. I mean, the big bulwark of growing the economy and rising consumption is having the the MSME really get back on his feet. And they have seemed to have been completely ignored over the last few years. And I sense this is the time to make that course correction. It's time the government looks at this important aspect. The last election is a bit of a reality check. I think we really need to look at that aspect and would love to have some.
Absolutely, Mithali, isn't that the case? MSMEs being the backbone of job creation in this country.
So expansion of middleland, which is one of the key, strategic areas, focus areas for the government if India were to usher into Amrit Kal anytime sooner.
Absolutely, absolutely. I mean, if we look at the Prime Minister's vision, right, and which is a very important guiding milestone for each of the budgets that we've seen over the last 10 years. This is actually my 10th budget. So I'm celebrating my 10th anniversary of analyzing budget.
Happy 10th anniversary of the budget.
But if we look at the data for the last 10 budgets, we can see that there is a clear focus on 4 key segments in pretty much every budget. We see that in the agrarian sector, we see that with the farm sector, we see that with farmers. We see it with MSME to some extent. I do agree that it's a very, it's a sector for which however much you do at this point, it's not enough. Because it's not only about job creators, right? Of course, MSMEs are amongst the largest job creators in the country, but they have also lost jobs. Because if we look at the new data that's come in from the annual survey of unincorporated enterprises, which has come out just now for 23-24, actually, MSMEs have lost almost 50 lakh jobs in the last 6-7 years. And this is something which is acknowledged and in fact commented on in the economic survey, where it is being noted that, there is an increasing formalization of job creation, which is good. But at the same time, are we not supporting the non-farm sector enough? Which is why we need the target, as was set by the finance minister yesterday, of creating 78.5 lakh jobs every year in non-farm unincorporated enterprises. How do we do that? By supporting MSMEs. And if we need to support MSMEs, not only do we need to support agro-processing and agriculture, because that feeds into MSME, but also infrastructure, because MSMEs are the biggest beneficiaries of logistics infrastructure, of energy infrastructure.
Absolutely. We'll come back to you on MSMEs with visuals on your screens right now from Rashtrapati Bhavan, where President Draupadi Murmu can be seen speaking to Finance Minister Nirmala Sitharaman, who is all set to present her 7th budget, 7th consecutive, one of the longest running finance ministers of the country, Krishna.
Absolutely. A record 7th budget for Finance Minister Nirmala Sitharaman, the first for the NDA 3.0 government. We're counting down to the big moment when the budget speech of the Finance Minister will begin, and we here at Newsline Live are bringing you ball by ball coverage of Budget Day, of Budget 2024, all day here on News9 Live. So make sure you stay with us. Some in-depth, incisive analysis with some...
And I believe that's the new Parliament building where Finance Minister is expected at about 11 o'clock.
Yeah.
And I think some of the crucial documents which are currently being moved into the Parliament. On your screens, of course, is Nirmala Sitharaman, the person, the lady of the moment. She will, of course, be decisive in where the country heads in the year to come. We do have some reactions. We'll get to them very, very swiftly, quickly, in just a matter of minutes. But Yuvika, getting back on the conversation of economy. Now, India has a very, a robust fiscal deficit, fiscal consolidation path, a glide path. Current fiscal year, fiscal deficit is expected to be about 5.1%, going into 4.5% in financial year 26. But there is enough, headroom for the government this time around to perhaps either narrow the fiscal deficit by the way of that 2 lakh crore rupees RBI bonanza, the dividend bonanza that has come in. Where do you expect the government will actually put that money?
So I think this year the government has been somewhat lucky that their revenue constraints have been eased considerably, as you said, through the dividend bonanza that they have got from RBI. And probably we are this year, for a change, looking at a problem of plenty as to how to put to use effectively the resources that the government has. And while there could be, a range of possibilities, and people have been talking about probably the budget going all out, being more populist, which could lead to a higher allocation to revenue expenditure. There is also a possibility that they could use some of the money to reduce the fiscal deficit, up the capex expenditure target, and so on and so forth. But I think what the government should ideally be doing is that we have to understand that this bonanza that they have received is a one-time, and it is in their best interest to use it most effectively. And how we think that they will deploy it is probably meet multiple objectives. One, we should see some, revision up in the revenue expenditure targets, some bit of upside both in the subsidy outgoes, both from food as well as fuel. They could also ensure higher outlays to schemes which are largely rural oriented in nature. So schemes like Pradhan Mantri Awas Yojana, PM Kisan scheme, maybe Manrega if they feel the need to up it at this point in time. And along with this, we could also see some top up in the capital expenditure vis-a-vis the interim budget targets. Why I use the word top up? Because we do not believe that the government will go, extremely gung-ho on upping the capex target. Because remember, any timeline for implementation of capex projects for this fiscal year stands shortened to about 8 months. So in any case, we have seen, and we have data for the months of April and May, that capex expenditure was actually in contraction, largely because the model code of conduct was in place ahead of the election. So whatever capex upside they would want to do would only be a token measure. Okay. Probably take it close to a 20% annualized growth, but it wouldn't be too high a number, which doesn't look achievable in a year which has only 8 months to go. And finally, coming to the fiscal deficit, I think they'll use some bit of resources to lower the fiscal deficit from 5.1 that they had announced in the interim budget to 4.9. Right. So if you remember, in the interim budget, they were looking at a fiscal consolidation of 70 bips from 5.8 to 5.1. I think they would want to retain that band of 70 bips of correction, given that FY24 did close in terms of fiscal deficit better at 5.6.
All right, so no change in 5.1, at least that's the message that is coming in.
Do you want to add
I
something
just
to
want
that?
to react to one point. I think, this big 210,000 crore bonanza, I think the budget is always a balance of economic and political reality. Always. I sense one of the big claimants out there, and therefore there will be some degree besides all that you said, would be this little balancing between Andhra Pradesh and Bihar, right? The government is dependent, and there have been huge demands. Both these states have demanded for the moon. I sense this bonanza kind of helps the finance minister kind of answer that question. To my mind, that would also be a factor in play.
Absolutely.
And,
if there is no economics without politics, Krishna.
If there is no special category status, then that's some money at least, isn't it, Mitali?
So, in fact, this question, sir, of Andhra Pradesh and Bihar, for the last 1 week, all budget shows that I've been doing, it's been coming up. And I have a contrarian view. I don't think that there are going to be there's definitely going to be no special status, that I foresee. In terms of packages also, I believe it will be dovetailed into sectoral packages. So for example, when we look at Bihar, most of the economic, contribution in GSDP comes from agriculture. So you'll say, and same with Andhra Pradesh. So you'll say, okay, let's have a massive package this year to focus on agriculture, and then look at some of these states and crops, etc., which are, more beneficial for these,
which are pertinent to some of these states.
All right. But Mitali, I have a question for you. I mean, running a fiscal deficit in the short term is not necessarily bad, right? Especially if the money is going towards, sectors such as the focus is, if it's on boosting employment or towards rural economy, right?
Absolutely. So as a classic economic question, this is exactly a question of Keynesian economics at one side, when you look at it, versus, more capitalist forms and, less government or more government. It's a very classic economics conundrum. And I feel like, today we're at that point where we can have an argument for more government, for social good, but less government, as, the economics survey has said, let go. Because there are a few sectors where we can say, okay, yes, the government can move towards disinvestment, privatization, but at the same time, some sectors where that government support is required, such as agricultural infrastructure, irrigation infrastructure, climate resilient infrastructure. I mean, this is something we don't talk about enough, and I love that the economic survey has a massive chapter now on climate risks to the Indian economy. And this is the first time that the economic survey has done that. And this is what we need to talk about more, that how can we have, for example, high yielding seeds that are drought prone, You know, that's where I feel like it's worth running that fiscal deficit. So therefore, these kind of trade-offs is what we have to look at, you know, how the budget will really balance.
Okay, and what kind of trade-offs? Let me get Yuvika back into this conversation. Yuvika, you know, agri pain points, of course, remains a focal point for the government. And as Mithali was pointing out, for the very first time, we're also trying to budget in what adverse impact of climate can do to the economy. What kind of trade-offs do you think we can expect this time around? If government were to run a fiscal deficit, the chances of which are highly unlikely, what sort of trade-offs, what would be the key areas to focus on?
So I think one thing we have to be absolutely clear that when we talk about fiscal deficit, there has to be an optimum level of fiscal deficit, which is, you know, from a macro perspective, acceptable. Now, if you look at the fiscal deficit target, 5.6 for last year, wherever the, you know, the number comes this year, whether it's a 4.95 or 5.1, it still is a fiscal deficit number, which is way higher than where India was in the pre-pandemic years. And while the government has been fiscally prudent, and I'll give full marks to the government on that over the course of the last 3 or 4 years, but there is still scope further to crunch the fiscal deficit number and bring it to and align it to 4.5 in FY26, but also lay down a roadmap for fiscal consolidation beyond 4.5 after FY26. So the point that I'm trying to make here is that they need to continue on the path of fiscal consolidation. Now that is definitely going to be challenging because they will have to, this year they enjoy the fiscal bonanza from RBI dividend, which may or may not be the case next year.
Yuvika, sorry to cut you short, stay with us. We have shots coming in live from outside the new Parliament building. Finance Minister Nirmala Sitharaman there with the Bahi Khata in her hand, heading to present that budget 2024. Krishna.
Right, we are getting closer and closer, aren't we, from Ministry of Finance now. The Bahi Khata has moved to the Parliament building, the new Parliament building, where a new budget for a brand new government, albeit the same government we've had over the last decade, this time in a different scenario, presenting that budget. Lots of talk on, you know, what was it going to be like for this government to present a budget with the kind of opposition numbers that are there in the Lok Sabha, which wasn't witnessed before, and the fact that, you know, they have at least 2 big coalition partners on their mind, weighing on their mind as they present this budget. But all said and done, the finance minister remains the same as the 7th budget with this finance minister. And also, is the budget going to be the first one for the Modi 3.0 / NDA 3.0 government? The latest visuals coming in of Nirmala Sitharaman at the new Parliament.
And before we start getting in some critical voices, I think there are a number of issues on which the government has been cornered. One, of course, has been jobs, which we talked about, agri-rural distress. The other has been with respect to debt. And let me also get in Mithali into this conversation. Mithali, the external debt has been sustainable. That is what the economic survey is pointing out, standing at about 18.7% at the end of March 2047. So that's not a concern. What is actually concerning is the domestic household debt, which reached an all-time high at about 39% for the 3rd quarter of 2024. Household debt is high, financialization of savings is low. Where does one head from here?
And household savings are at an all-time low.
Yeah, absolutely. No, I think this is where we need some innovative policy making in the actual personal finance space. Because when we think about it, yesterday, for example, I met someone and said, you know what is the most expensive asset I own is my house. But I'm not able to capitalize my house. I'm not able to get a reverse mortgage on my house in this country. And also the kind of personal finance instruments that are currently available are very much linked and focused on consumption. They're not focused on insurance and savings. And insurance-based personal finance products are a major need of the hour, also from the point of view of social security. So when we look at social security, we expect our jobs to give us leaves, we expect our jobs to give us maternity benefits, we expect our jobs to give us parental benefits. But you know, we need to move into a system in the future where social security and employment may not be linked. And they should actually be a market for social security. So when we invest in personal finance products that are more innovative, we can actually deal with, you know, this issue of high domestic indebtedness.
All right. Gaurang Shah is also joining us on the show. Before we go to Gaurang, a quick check on the markets. Let's get Suyash back into the conversation.
So
Suyash.
Shweta, the markets, as you said, opened in the green, but they are now in fact in the red. In fact, very close to the lowest point of the day. Nifty, as we speak, is down about 0.13%. It's below 24,500 levels now. Nifty Bank has also corrected across the board. We are seeing selling in sectors, but two sectors which are defensive. FMCG, Pharma, they are faring better in fact compared to other sectors. Gaurang, considering that these sectors, actually I'll include IT in that as well, considering that these sectors have not done much for the investors over the past 12-15 months, is it the right time to invest in FMCG, IT stocks?
Thank you very much, Suyash. Morning to all of you all. So I think if I have to reflect upon the numbers of the IT sector, then definitely, barring Wipro, of course, all others have done well than what the expectation was. For the FMCG pack, last year, as we all know, there was erratic monsoon. This time, the start was a little bit dry, but July has seen a catch-up. Possibly the rest of July and the month of August could also throw in some kind of positivities with rain gods doing what they have to do. And as we all know, that large part of our population is associated with activity in semi-urban and rural India. I think today, if the Honorable Finance Minister has to do some more policy changes with agri-related sectors, then I think it will throw up much more positivity. So, timing is always very difficult, Suyash. But if you ask me from a long-term point of view, then I think definitely these two sectors must be looked upon as investment idea.
Okay, Gaurang, the only question I have at this stage is what explains the nervousness in the markets this morning? Starting with the positive, then getting into negative territory. We are already anticipating a volatile day's trading session. But if I were to ask you how do you read the initial reactions of the market even before the budget speech is presented?
This always happens every year, honestly, before the budget and just, on the day of the budget. So it's not surprising. I think we need clarity, and I guess post clarity you will have some kind of stability coming. And my take on the budget is that if the Honorable Finance Minister just keeps the ball rolling without doing much changes here and there, then I think we should possibly be quite steady go into the future. The only thing is give growth a push, give consumption a push, create opportunities for employment, and look at agri sector and food security. I think that's going to be the pointers that I'll watch out for. I don't want to go into taxes, direct, indirect, or maybe personal or market related. I think we should leave it to the wisdom of the Honorable Finance Minister to do whatever.
Oh well, Gaurang, we can't leave it up to all to that. I mean, let's face it. Like most people watching this broadcast, including those latest visuals of Finance President Nirmala Sitharaman approaching the new Parliament building with the Bahi Khata in her hand. Come on, we have to have some sense of hope and faith that this budget will deliver. When it comes to the income tax front, when it comes to the burden of taxes on the middle class, how can we? Of course, we have no choice but to leave it up to the wisdom of the government and the finance minister. But we have to continue discussing that, isn't it, Karthik?
Yeah. So Krishna, very interestingly, I was reading yesterday, the Niti Aayog had come out with a two-phase sort of description of the economic survey, and Niti Aayog Vice Chairman said that it's a balanced and sober economic survey. Yeah. I don't want the budget to be balanced and sober. Honestly, I want the budget to have a lot of imbalances. It needs to tilt in favor of manufacturing. It needs to tilt in favor of job creation. I know I keep coming back to that, but I think that is absolutely relevant right now to drive India's consumption story. Honestly, we cannot and we should not, in the interest of fiscal prudence for this country, be dependent on the government doing all the heavy lifting when it comes to growth, even with the economic survey pointing to a 6.5 to 7% growth, lower than 8.2% that we achieved in the year gone by. I really want the budget to tilt in favor of exuberance and in favor of pushing investments that lead to jobs. I don't want a budget which is balanced and sober.
Right, but, so clearly, you're saying not a sober budget, ideally something that tilts, and so little
See,
tipsy or buzzing?
I'll tell you,
tipsy or buzzing budget. At least.
I keep coming back to the traditional, formula, and I think Mithali would be able to either agree or correct me, but I think the traditional definition of GDP growth, is Y is equal to C plus G plus I plus X minus M. Right. If the consumption story needs to pick up, you need to give more money in the hands of people.
Absolutely.
If you want private sector investments, the I component to pick up, you've got to ensure that your policy framework is conducive for the private sector to unleash their animal spirits. And you've got to make your exports and your net exports outshine your net imports. And these three put together should more than compensate for the G. I know Mithali was talking about more government in certain sectors. Yeah, but I want less government in the glide path to GDP, creation and GDP fulfillment. We need the private sector and we need the consumption story to fire.
All right, and some would say consumption story is already firing. We also discussed how household debt is rising. And if I don't know if Yuvika is still with us, but Yuvika, you and I had this conversation about. All right, Yuvika is not with us, but Mithali, we discussed this about 6 months ago as to how household debt is also at an all-time high, and we were discussing that. It essentially goes on to the point of that people are consuming or be taking loan to consume what they're consuming and not
from a mobile phone to a vacation.
And not have
all taken on loan.
Not have enough money in their hands. While it talks to the aspirational class that India has, the growing and ballooning aspirational class, it also talks about how little to no money perhaps in their hands to actually be able to meet some of those expenses with the money they have.
Absolutely.
And that is a concern as well.
Absolutely, that is a concern, and I totally agree with you that what we need to see is more government in certain sectors and less government in many of the productive manufacturing sectors, where what we need the government to do is set a level playing field for attracting private investment, for attracting foreign direct investment, for attracting foreign institutional investors to come and invest in India for the long term. And I think the production linked incentive scheme has been one of those game-changing, sort of announcements and measures. And I don't think the production linked incentive scheme could have worked had it not been for COVID.
Okay.
Because, at the time when it was announced, it was such a dire economic situation that a lot of international organizations also, in a sense agreed that yes, you need to bring in, foreign investment, and you have to bring in this kind of a PLI scheme to, attract them, because we're in the midst of COVID. And I think now that, we are post-COVID in a scenario, we can see it's starting to work.
But I think even the PLI schemes need certain revisions, and I'm hoping that this would be the budget where we do it.
So Lloyd, would you give us a report card of PLI? Has it really worked? Of the 14 key sectors, and of course industry is demanding that PLI be expanded and further rationalized. Look at the number of sectors it's actually picked up in: pharmaceutical, auto, electronics, and some other ancillary sectors. It hasn't really picked up in all 14 sectors. But then we were talking to some of the government officials last time around. They said we have nothing to lose if the companies which are setting shop in India don't really meet those targets. Nothing's really coming out of our pockets.
I would say that the PLI is a bit of a long-term play, right? A lot of what the government did was really capitalizing on the fact that post the pandemic or during the pandemic, a lot of companies looked at a China plus one policy. So India saw an opportunity and therefore put in some of the seeds which might have a long-term play. When you're talking of certain high-tech sectors, a long-term play. To my mind, and to the point Mithali was making, I think this budget ought to course correct to some extent. PLI in large manufacturing is good, it's long-term competitive advantage, but it's not generally a job creator to spurt growth. I think where we need is a bit of the mid-market, more low-tech PLI, so to speak, when it comes to things like food processing, when it comes to things like apparels, ready-mades, footwear, which are slightly more employee generative, right? And I think that's the area that hasn't been looked at all, right? So one, high-tech is important. It'll have a long-term germination. It will possibly make India more competitive. But I think we also need to spur the manufacturing sector that's somewhere in the middle of the market.
Okay.
I think that's where India seems to have lost ground, right? In textiles and ready-mades, Bangladesh has made strides, Sri Lanka is ahead. I think some of that correction has to happen. Food processing, footwear, lots of opportunities, more manpower intensive. and those sectors have been ignored, and India has lost its competitive position.
But strangely, we have, we are making boots for the Russian army, we're making cricket bats for the world, we're making bicycles for the world. Unexpected sectors where India has done really well, isn't it, Mithali?
So, I mean, if you look at Meerut, right, if you go to Meerut, that is like our entire sports goods industry of basically 60% of world's manufacturing of cricket bats happens in Meerut. So, I'm not surprised that we are making the cricket bats in Meerut, or the boots in, some other one district, one product sector in another state.
Yeah.
But I just want to mention some of the data that's coming from the economic survey on the impact of the PLI scheme. They say that 1.2 lakh crores in investment as of May 2024 has been raised, not committed, but actually realized because of the PLI scheme, and 8.5 lakh jobs have been created, direct and indirect. So it may be direct manufacturing jobs, but it also might be indirect jobs, created in the economy because of entrepreneurship, then creating a further downstream of jobs. So, and of course, the sectors that they point out, which have done really well: smartphones, electronics, automobile, and auto parts. These are the outstanding sectors. Now, I think this is interesting because auto parts were growing even without the PLI, especially in the south. We saw massive clusters coming up in Tamil Nadu, for auto parts exports as well, which were happening through the, Southeast Asia route. But now we're starting to see the auto parts sectors come up even in UP and, northern states. And that's a very interesting impact of the PLI scheme. Of course, the massive Samsung investment that happened in Delhi NCR, literally close to where we are, happened because of the PLI scheme. So I do completely agree with Sir where he says that, we need to now take this and rationalize it to some of the other sectors. Also, we need to see sunset clauses, right? Because if they are only coming because of concessions, then we are not realizing our basic structural manufacturing strength. So we need to see that, now starting to come in.
All right.
So, Shweta, I just want to add to that. I completely agree, with what Mithali is saying and what Lloyd was also mentioning. But, I think like India has done with the semiconductor policy, India's semiconductor mission, it is outside of the PLI. PLI has an allocation of 1.97 lakh crore rupees, but semiconductors is outside of the PLI with another thrust of 87,000 crore rupees. Perhaps India needs to understand which are the top priority sectors and have specific policies for those sectors, and the rest of the expanded list of sectors that should create employment should fall under the purview of PLI. So, for example, smartphone manufacturing could have a completely different tariff regime, could have completely different targets of investment and job creation, and that should be one sector India picks up on. Absolutely. Like you're trying to do with semiconductors, picks up on and says that, this is a sector where we are very sure we're going to beat China, we're going to beat Vietnam, we're going to beat, let's say, non-smartphone electronic production, laptop production, we're going to beat even Thailand, Philippines, etc. and focus on this as one of the sunrise sectors that we really want to put all our energies in, and incentivize job creation, investments coming into the country, also in the context of the various FDAs that we're talking about. The one with Switzerland, for example, the one in the making with UK. If you talk about the Swiss-India FTA, you're looking at about $100 billion of investment coming in. Which sectors? It has its expertise in watches and chocolates and dairy products, but trust me, all of those are going to take a long time to materialize here in India, even though we have inherent success stories like Amul and Amul going out of India to new markets, including US. But broadly speaking, I think we've got to understand which are the jobs that we want to create with a very, very clear priority focus, and which are the jobs that we want to incentivize and see how they spring up over a period of time.
All right.
Right, Srinath,
moving a little bit away from manufacturing, because that's not the only job creator. Let's talk about services. Services, Srinath, account for about 55% of India's total GDP. Services is an important sector, growing year on year, albeit last time around due to global environment, the economic environment, which hasn't been really favorable or conducive. Services has taken a beating, still continues to expand at about 7.6% annually. And can be a great job creator. Alluding to what our former RBI Governor Raghuram Rajan also speaks about, and a lot for that matter, is that it looks like we're a little bit slow when it comes to manufacturing, but we do have an advantage when it comes to services, and perhaps there needs to be more thrust in services.
I mean, Shweta, I think you're alluding to his latest book, and I think some of the statistics is shown around manufacturing and why we may not have the competitive edge are true. And alluding to services, one of the grounds that I have about our services is that we have not risen up the value chain. Let's take for example of the IT sector. I think I would qualify what we are. We are still cyber coolies to the world. We are low on the value chain. That's why our average hourly billing for our entire ITS sector is low compared to other consulting companies. We are taking great pride in saying that we are setting up GCCs. But end of the day, for our services sector to have higher premium or value per human being is only if we can create intellectual property. The good thing is in the last 3-4 years, the patent office in India has been little active, I think, thanks to the government nudge in creating IPs. But how do we create more IPs? Look, let's say we go back to the STEM ecosystem, the engineering aspect. Our IP creation in the entire STEM ecosystem is very, very low, which means that for the next 20 years, we are still going to be dependent on the Western companies in providing solutions to us. And when we say we take great pride in being in a consumption economy, it's actually being a little ridiculous because we are paying out money because we don't have intellectual heft. So coming back to services, how do we create more jobs or how do we create more qualitative and competitive jobs is only when we can move up the value chain and across space. Talk about consulting, talk about IT, talk about tech, talk about pharma. Everywhere, if we are in the lower consumption space or the lower value space, we will stagnate. Very similar as an example. 20 years ago, we were leaders in BPO and KPO. Today, in the last 10 years, we kind of lost that competitive edge purely because of, I think, labor talent or talent pricing arbitrage and forex arbitrage. Other countries, Indonesia, for example, English-speaking talent available at cheaper prices than Indian talent. Suddenly, the BPOs have started moving there for the last few years. So I think it's a zero-sum geopolitical game. If we want to move up in the value chain in the services economy, we will have to be paranoid. I mean, I would want to be paranoid for the simple fact that we have about few million students passing out of our tertiary education system every year. There are no jobs. If we have to move them the value chain, what do we do?
All right, Gaurang, I have a question for you. I mean, we are all talking about hoping for actually a populist budget, sweeping reforms, expanding the PLI scheme, providing a push for manufacturing and services. Let's say it's a complete dud, the budget. It's a complete no event. What happens to the market considering
scenario.
that the market has rallied quite significantly?
Not too very optimistic of
Just to play the devil's advocate.
Markets have risen after the budget. Maybe we might possibly sulk for some time. But then we'll get back to our working tables with respect to where the GDP is, what the interest rates are, what the earnings are, so on and so forth. And there have been times in the past where budgets have disappointed, but the fact of the matter is even after that disappointment, we've made an all-time new high. So we have to look at life beyond budget. Budget is a platform wherein growth and direction is possibly made visible to all of us. And this is not the first and the last budget. We'll have many more coming through. So we'll have to live through the volatility. And I hope your statement doesn't come true.
Gaurang, if I can take you back to the conversation we were having with Srina just a few minutes back. On the IT sector, now that we've seen that the results have been better than expected for most companies barring Wipro, IT sector in the context of creating jobs still has two big variables. Number one is interest rates in the US and number two is this influx of artificial intelligence which many fear is going to take away jobs. So let's say the medium
estimate to that about 0.2% to 0.3% of the jobs, which is what the economic survey is saying, could be taken away.
Absolutely.
Owing to AI.
Absolutely. So I think broadly speaking, medium term, let's say the next 3 years to a longer term view on IT, how do you think IT sector is really going to gear up with what is in store for it with all these variables which are outside of its own control?
Okay. On AI, I think there needs to be a framework, both locally and globally, because if you use it in the right way, it's a blessing. If you do it on the wrong way, then it's going to be a curse. And we've seen some instances which has led to some kind of turmoil. So I hope there is a framework and possibly the Honorable Finance Minister could possibly touch upon it today. With respect to the growth of IT sector, well, we at Geojit believed for the last 2 years when the entire market was a little bit low or negative on the IT sector, we believe that growth will come through. It will take time. What numbers we've seen so far, I think the growth is likely to come back in post second quarter. So there is a silver lining. Challenges with respect to headcounts, well, the attrition rate has come down for some companies in the first quarter numbers this financial year. And there has been addition of employees as well. As far as the US and European markets are concerned, I think now that you have the history behind us in terms of budgetary cuts and discretionary spends getting limited, you should see some kind of revival from there. But it's not going to happen immediately. I think second half this financial year could throw in more light on the growth.
All right, Gaurang Shah there helping us understand. Karthik, at this stage, the one question that a lot of people watching this broadcast will be having is that what am I supposed to do with my portfolio? Gaurang, right now, we have about what 40 minutes left for the budget speech. What do I do now?
Well, you keep your shopping list ready, and if what Suyash has said comes true, then you will have great opportunity to buy. And if you're not really worried about next couple of hours or the next couple of days, stay put with your portfolio, and as and when you get opportunity, dip into some good, strong fundamental stocks.
Assuming I want to make the purchase fast, what should be on my cart?
Sorry?
Assuming I want to make the purchase really fast once budget speech ends, for me, I want to keep it ready. Like in Amazon, you once the discount is there, you put it in your cart and keep it ready.
Wants to make quick
what should be in my cart already? If not, over the next 40 minutes.
I'll jot down 5 sectors, okay, to restrict the shopping list. So it's going to be defense, it's going to be power, infra, railway related, banking and finance. I think that's going to be my top.
I will add one more if I could take the leeway, Krishna. I think green energy, green transition. So in power, I think my narrow focus would be on green energy this time around.
We're not naming the stocks, but we're telling you everything else, isn't it, Suyash?
Definitely. And look at how the sectors have reacted. We were just talking about this massive run-up that the markets have seen. But last week, your sectors, again, the champion sectors, infrastructure, defense, railway-related stocks, they saw some profit booking. So perhaps there is some, value, like availability over there, and you could make fresh entries over there.
Right, fresh entries over there is a possibility, provided that correction that you're talking about post-budget really happens. There's a lot of supposition that's happening at this stage. We'll have to wait for time to pass. But if I were to bring the question back to Lloyd, talk to us, the fact of the matter is that we're sitting here in this studio with all of you in attendance on one day because this means so much to the common man. This means so much to the salaried middle class. This means so much to the middle class, which has taken to the gig economy over the course of the pandemic and before and after. So in that sense, and all of them.
And since we are on the middle class, Krishna, let me take it away from you here. I want to specifically talk about, we've talked about infrastructure, but within infrastructure, one of the key areas of focus has been around housing. Now, Pradhan Mantri Awas Yojana has completed its 1 year and the target, 85% of the target has been met by June of 2024. Are we looking at more allocation given that affordable housing has been on a decline? Both the volume and the availability has been on a decline. Now, for the benefit of those who don't understand affordable housing, we know that any housing below 50 or 45 lakh rupees is categorized as affordable housing. A lot of people, of course, want the roof over their head. And Srinath, at this point, do you think it's a cause of concern that we do not have enough availability of affordable housing? Perhaps a need for tax break for those who are building affordable housing and for the common man as well, some sort of tax incentive for those opting for affordable housing?
I mean, the direct answer, Shweta, is yes. I mean, I think some form of direct subsidy on the taxes for affordability, or let's say the interest component of housing finance would be useful. And it is the past trends have shown that it has spurred growth in the housing finance or the housing sector. That's one. Two, I think we'll have to go look back at the structural aspect of the consumption economy, right? There is an aspiration for wanting more and better, even in terms of housing. So if you look at, let's say, the top 10 cities, the outskirts of the top 10 cities, the pricing has moved up in the last 5 years. So are we looking at redefinition of affordable housing? Probably we need to look at that, one. And two, I think structurally, are we saying that the aspirations of Indians for better quality housing is improving? Hence, we'll have to relook at the housing classification. Probably yes. And I just want to give an analogy here. Until very recently, in the definition of the housing regulator, Vashi, a suburb in India, outskirts of Mumbai, was defined as a rural village, rural area, which is surprising that Vashi has been, I think, urbanized for the last 20 years.
Okay.
So some of those operational aspects of redefining, looking at the top 300 cities or towns in India and looking at the pricing is important. That's one. Two, on the other side, what is missing in the top 10 cities where the urbanization number has been on increase over the last 10 years is this. There is no social rental housing available. It has been on the decline since 1980s. What it means is that you come into a city for a job and you're going to probably live there for 10, 15 years. Can you afford housing which is actually a rental housing? And that has been on the decline, and that's something, and when they say social, it's owned by trusts, it's owned by governments, and that has been on the decline. And until we fix that problem, we really won't know why are people buying houses. Even today, the number, if you look at, let me give a number of people who pay income tax, who declare income tax of over 1 crore plus is only about 80,000 people. And does it mean that only 80,000 people or 80,000 into, let's say, multiplier of 2 or 3 own houses which are more than 5 crores and above? Not really, right? There are tons of houses which are getting sold, at least in the top 6 cities which are $1 million plus. The numbers don't stack up. So the reality is in housing, we need more granular data. Even the National Housing Bank, the NHB, which is the sectoral regulator for housing finance, we need further granular data even for affordable housing. And I think that is missing even today.
All right. Affordable housing, social housing, it's a very interesting concept in the West, very common in the UK, in Europe, in the US. We haven't seen the concept of social housing a lot, at least I haven't, Mithali, come to think of it.
But I think, Shweta, that's I think it's a little imprudent to discuss policies in the developed world with, what India wants to do. Even if you look at the healthcare system, in London, for example, you have the NHS. You're not really paying for healthcare. So I think our specific problem right now in India is the fact that even though the government has allocated some 80,000 crore rupees, has built 3 crore houses under the PM Awas Yojana, these are good big numbers. At the end of the day, you've got to ensure that there is diversification of employment across the country. As long as employment is concentrated in, let's say, the top 10, top 12, top 20 cities of India, property prices are going to skyrocket. There's going to be greater demand for housing, and that housing is going to throw property prices up.
So as long as Srinath raising his hand. Yes, Srinath.
I want to come in, Karthik, just giving an example of Mumbai. You would have the chawl system, which has been around for quite so many decades, and that's on the decline. These were chawls which was basically for the, let's say, the white-collar jobs and people who came into Mumbai city for search of a job. Yeah. And this was basically one room with probably a small kitchen and a shared toilet every floor. Social housing scheme which was built by large trusts, charitable trusts, or sometimes corporates owned it and gave it on lease. And the reality is you could get actually workers coming in. Today, what has happened in the name of urbanization, that number which was probably 60% of all housing stocks in Mumbai in the 1960s and the 70s, this was right after 10 years after Maharashtra became a separate state, has declined to as low as 28% of the total stock is just only social housing. What does it do? Is people who come into the city have to live in first search of a job. Today live about 2 hours away from Mumbai, which means quality of life suffers, everything suffers, and the entire city is becoming probably, instead of calling affordable housing, we talk about sobo then. I think that is the same state of affairs for most of the top 10 cities in India. The lack of affordable rental housing, but for probably, let's say, Bangalore, is actually causing people to have very low quality of life. So what's the point in working for 40 years? You're saving money, sending it back to family.
I can't believe you just excluded Bengaluru so easily from high rentals. Come on, you have enough and more complaining about the high rentals in Bengaluru.
And honestly, the one city we should be excluding from high rentals is Kolkata. That's still a city where, which is my second hometown, and where you can still get, housing which is more affordable. Yeah. But, coming to your question, and also Karthik, just to react to a few things, I think what is important is not only looking at housing, but spatial development.
Yeah,
right?
True. Absolutely.
Because when you think about it, let's say that, like Srinath is saying, Mumbai is here, I'm living here, what is the connectivity? It shouldn't just be that I'm reliant on one mode of connectivity. I need to have multiple modes. Suburban rail is one. but I also need to have high-speed rail, I need to have metros, I need to have bus systems, you know, running between cities as well as within cities. And today the focus on public transport, if I look at the number of TV debates that are focusing on public transport, is very, very few. Because why are we not talking about safe cities, cities that are walkable? You know, one of the things, like you said, let's not talk about developed countries, but we should talk about pavements that are walkable.
I think we should talk about developed countries.
We should talk about developed countries.
To disagree with you vehemently so, if you aspire to be a developed country, you've got
Exactly.
to aspire to some of their systems which are better than India's.
Yeah.
Now,
I'm
I'm
all
not
for
talking about the
aspiration.
NHS.
I'm all for aspiration,
I'm not talking
Shweta.
about the
but
NHS.
it's not apple to apple. Right now in 2024,
Absolutely.
the divide between, look at the economy, the size of the economy. The US economy, for example, is at 22 trillion. India's economy, with I think 4 times, 5 times the population, is at 4 trillion.
Even
look
at
at the
22
per capita GDP when it gets divided to the number of people. You know, it's not going to be an apple to apple comparison for India.
You know, absolutely. But even at 22 trillion, the US has not managed to build good walkways. It's still a country
Because
reliant
the
on
US, Mithali,
cars.
has always focused on cars, has focused on
Exactly.
building infrastructure pre-World War II,
Which
excellent highways, freeways, speedways. Now, I'm saying, you know, every country has its own challenges. One of the challenges that India, and not just India, even the neighboring bloc, because of the region we happen to live in, is to do with the weather. I'm saying you make the best public infrastructure in a city like Delhi. You tell me, Shweta, how many times in a year will you actually be able to walk it?
Not
so
really.
is the case in Mumbai. In Mumbai, in fact, you know, the Bandra Sea Link area, you know, and going all the way almost till halfway to Santa Cruz, you have walkways built. People
See,
sleep
it's not
in
very
those
conducive in
walkways.
some parts of this country, but in other parts of the country, a walkaway will be conducive.
Exactly.
To my point of affordable housing, you know, it's not so much about per capita income or what our you know, spending capability is as an average Indian. It's about ensuring a roof over our head, and I believe it is government's mandate to do that.
So what should be the priority of the government, Shweta? Right now, should the priority of the government be to enable people to walk to work? Or should the priority of the government be to buy cars which are going to spur the economy and buy houses which are long-term investments and keep building walkable roads maybe for a future
Give
day?
people jobs and give them a roof over their head.
Absolutely. So that tells
So
it, right?
I think,
so I think the walkways can wait at least for another few budgets. I think we can get to that in due course.
We definitely need cities that work for people, and we need cities where people can
So
get to
my
their
understanding
jobs.
of urban infrastructure, Mithali, right now is we need city roads that don't clog. We
That
need
never
drainage
happens.
systems
So,
that work.
Karthik,
Okay. This is a very interesting debate. As a debate, we're going to continue having post the budget speech as well,
Yes.
for sure, because of the allegations. But
Is it
you know,
starting?
we're sort of running out on time with Gaurang. Gaurang was taking time out to be with us. Gaurang, you know, look at the talk of, you know, what the budget needs to do, where the money needs to go, what infrastructure needs to be developed. You know, in between all of this, all I can think of is the real estate stocks, which are doing really well. You know, and look at the way the cost of affordable housing has been redefined right now, because I think for example, in Noida right now, affordable housing is 1.5 CR. You know, like that is like affordable housing at the state for the middle class, at least 1 CR. You know, what is affordable housing, Gaurang? And you know, tell us, you know, the way things are going, real estate stocks have nothing to worry about going forward, budget day or not.
Well, so month of June was a record-breaking month for the last decade, and it was the best month in terms of registration. And I think one of the panelists also mentioned about chawl system in Mumbai. So these were, I think, BDH chawl systems, which were primarily made for low working class people and for those workers who are associated with, at that point of time, the textile mills that Mumbai had. And that was a huge land parcel, and that's exactly what we are seeing nowadays with the names like Century Textiles and the Raymonds of the world. Large land parcels are now, you know, getting converted into huge lottery tickets in terms of redevelopment or development. The fact also is that Mumbai, some parts in Mumbai also have buildings which are ground plus 2, ground plus 3, which are possibly built in 1940s and the 1950s. And the condition of the state of those, you know, structures have become extremely weak. Hence, we've had, you know, redevelopment, cluster development, and society redevelopments. And the kind of amount of work that still needs to be done and the opportunity that is still there, I don't think there is going to be a pause for the real estate sector as far as Mumbai is concerned. We have also heard about certain projects getting launched where the ticket size was about 6 crores to 7 crores, and all those projects, all those units have got sold out within days. So the capacity or the appetite is there, and the opportunity also there. I would say possibly look at strong names, names like Godrej Properties, Oberoi Realty, names like Prestige Estate, Shobha Limited. I think these are some strong names with respect to balance sheet, where the debt light balance sheet and of course the execution capacity is very good, even if you compare it with the industry standards.
All right, conversation of course around affordable housing and how real estate stocks continue to perform come budget day or not. Gaurang, thank you very much for taking time out. Thank you for joining us this morning. We hope to have you back after that budget presentation. But staying on with some of those visuals, of course, coming in right now from the new Parliament building as well, where Prime Minister seemed to have entered. Finance Minister, of course, on her way for that crucial budget presentation. We have some political reactions and bites that have come in. Let's quickly listen into them.
बजट होने वाला है और जो माननीय प्रधानमंत्री जी के नेतृत्व में भारत का जो आर्थिक प्रगति हुआ है उस प्रगति और भी आगे बढ़ेगा। प्रधानमंत्री जी के मार्गदर्शन में माननीय निर्मला जी जो रख रहे बजट तो विश्व में आज भी अभी तेजी गति से जो बढ़ने वाले फास्टेस्ट ग्रोइंग इकोनॉमी जो है और हमारा ग्रोथ भी जो अच्छा है उसके लिए पूरक जो होगा वैसा ही बजट रहेगा और ये विश्व में जो हम तेजी से बढ़ रहे हैं आगे भी बढ़ेगा।
बजट देश को विकास और प्रगति के पथ पर ले जाने के लिए एक संकलित सफर होगा। विकसित भारत का जो संकल्प प्रधानमंत्री जी का इस बजट के आधार पर उस लक्ष्य की पूर्ति की तरफ तेजी से हम बढ़ेंगे, यह सबकी हमारी आशा।
I would like to limit myself to only two issues. One is the exemption that is granted for insurance policy proceeds when a person invests for more than 5 lakh in a year. That was withdrawn sometime in 2022. But I would think that should be done away with. If it cannot be done away with, it should be increased. The limit should be increased because even a person who earns only say 1.5 lakhs a month or 2 lakhs a month, say maybe with 4, 5 years or 6 years of experience, the people are able to get that kind of a salary. But he may be investing in more than 5 lakhs in insurance. And if that's the case, and if he is not able to get the maturity proceeds tax free, then it's a very serious hit on individuals. That's one thing. Second is, I was doing some roundup of malls and things like that. There is no real sports goods manufacturers in India. And Paris Olympics is also coming in and we've been talking about it. But there is no incentive to push sports goods manufacturing in India. There should be something they have to do it. But apart from that, rest of the economy and all people can talk. And I'm not talking about the international trade today, thinking that maybe...
First of all, it is very encouraging to see a woman as a leader to present it for the 10th time. And that too is a record. First of all, my congratulations. And I think the finance minister has set a pace as a role model for many more women to take up such challenging positions. So I think India can now hold its position very high and tall, saying that women has been leading some of those tough matters from the front. And I think congratulations to all of us that we will still beat the odds and start progressing in the coming years. I think a lot has been discussed about what is to come, whether it's business, social sector, education sector, healthcare sector. I think the most important aspect today is about employment and employability and how multi-stakeholders are going to come together to create that.
All right, those are of course some of the reactions coming in. Just about 20 minutes to go before that crucial budget presentation. Finance Minister and all the key members are already in Parliament. Some of those visuals of course coming in live from Parliament, Krishna, where budget would be presented at about 11 o'clock. And Because we are short on time, just about 20 minutes to go, let's also quickly take a look at some of the key priority areas, 9 areas to be precise, that News 9 Live has identified that should be the focus of this government. To begin with, I think one of the key things that has propped up during our discussion has been our thrust on manufacturing. What can the government really do to prop up manufacturing besides PLI? There is demand, of course, to expand PLI, to rationalize PLI, to have more money apart from the 1.97 lakh crore rupees, to perhaps a top up on PLI. That, Karthik, is also on the agenda, could be taken up perhaps in the budget.
It's a double advantage. You boost manufacturing, you boost GDP correspondingly. At the same time, you
and
do
the jobs.
And you create jobs.
And exports for that matter.
And
so, I think, the multiplier effect of the thrust on manufacturing, I think, will always be understated. You've got to understand that at the end of the day, mass scale employment, which does not require skills which are not difficult to master, will happen only through a thrust on manufacturing. Low-skilled jobs, mass job creation, and creating clusters of employment. And these clusters of employment, again, thanks to manufacturing, will not always necessarily come only in the key cities, which tend to add disproportionately high numbers to India's GDP growth. So at one point, you're talking about manufacturing adding to overall GDP growth numbers. Manufacturing also has a dual advantage to adding to states' revenues as well. So I think a thrust on manufacturing can never be overstated.
All right, as we speak, visuals, latest visuals, live visuals coming in of Prime Minister Narendra Modi. These are visuals from just a short while ago. Prime Minister Modi entering the new Parliament building for day 2 of the monsoon session of the Parliament. Day 1 began with the presentation of the National Economic Survey. Now we have a budget day and the Prime Minister is in the house.
Absolutely.
Right. And the second key area, of course, that we are focusing on right now continues to be jobs. Now, jobs, something that will come on the back of manufacturing, but will also come on the back of services. There is an understanding, however, not apart from the fact that we've been reeling under a job crisis, AI, blockchain, machine learning, those are some of the key critical areas, Mithali, that the workforce needs to be skilled on and upskilled on if we were to continue to have not just low-skilled jobs, mass jobs, but also jobs that really pay well. So white-collar jobs and jobs for people who are aspiring to earn more.
Absolutely, absolutely. Shweta, if you think about it, today what we have to think about is the dichotomy of the unemployment crisis. Where on one side you have millions of job seekers, as we saw, even during the heartbreaking visuals that were coming during the competitive exam protests and scams that were coming up, because there's a over glorification of white collar jobs, there's a over glorification of becoming an engineer, an over glorification of becoming a doctor. I'm not taking away from the amazing work that engineers and doctors are doing, but just that not everybody can become an engineer or doctor.
Right.
And at the same time, we have to think about how can we create education systems that respect and provide the right training for a blue-collar workforce as well. I mean, if you look at many countries around the world, not only developed countries like Germany, but also looking at South Korea, Japan, etc., we have skill training systems integrated in, higher education. And the national education policy has also called on skill training systems to evolve so that by the time a child is 16 or 17 years old, they can actually be encouraged to take up trade work, and trade work should be given the respect and higher income that it deserves. Everything cannot be just linked to a competitive exam. And at the end of the day, when we create these kind of skill training systems, that is when the employability of our graduates will also be better.
Absolutely. And self-employment, Lloyd, I think we discussed this just a couple of days ago about the number of startups which are registered in this country, over 1.5 lakh as of this year. The number has potential to go up massively, but would need some sort of incentives from the government.
Absolutely. But just a small reaction to a very valid point that Mithali made. I think clearly the whole Agniveer scheme, I know this is a political tinderbox, to some extent plays up to creating those blue-collared skilled workforce. Because these are people who are going to go 4 years, rigorous training, they're going to actually be out there in the field. I think a lot of these can actually unleash a lot of what is called an underserved part of the employment thing, right? With people who, everyone wants to become a graduate, right? And therefore you have, one police constable job and, 5,000 people lining up. I think the fact that we need a training force, I think that's a point very well made. And I do believe at some level, I hope the budget will address it. But to the point, Shweta, on startups, I think some of the momentum has gone, right? And some rightly so. I think a lot of it is part of bad governance. And at some point, the euphoria was irrational. It was just throwing money at startups. It was like a lottery system. So I'm glad some of that euphoria has gone. But having said which, I think we need to ensure that India still becomes a bulwark of the startup ecosystem, right? We're among the top 3 in the world. I think we need to continue, because that plays to an important point where we have to be a country of job creators, not all job seekers.
Absolutely.
Right? And each startup, a lot of them fail, will at some level be creating a lot of smaller level employment. So I do believe there has to be some incentives to keep this whole entrepreneurship culture going. And one part of it is for people to actually recognize that risk investing in early stage startups is a good thing. I know a lot of early stage investors in the last couple of years have happily gone back to the markets, right? The markets give you a relatively safer return. You don't burn your hands. And that is, to my mind, is a worry. If that little early stage investment culture diminishes, it is going to have a long-term impact on entrepreneurship.
And there is a question of angel tax that keeps popping up every single time we discuss startups.
Srinath is also with us.
Yeah, Srinath, angel, not really, angel tax is not exactly angelic when it comes to investing in startups, and especially at a time when funding is not what it is.
Angel tax.
Probably you can't possibly call a tax as a demon tax. You have to call it an angel tax, I guess. Nomenclature apart, talk to us. There needs to be something in it for startups in this upcoming budget that's set to be presented in about 15 minutes time from now.
See, I think the assumption is angel tax will go in some shape or form. But the reality, as I think Lloyd alluded to, is money, actually capital comes in if there are greater ideas which are scalable and which are going to get in revenues. So the point that I want to make is, out of 103 unicorns in India, if you actually look at the number of jobs created that by those unicorns versus, let's say, a mid-sized companies or a large SME companies who have actually created jobs, you'll be surprised that the unicorns have created lesser number of jobs. So you also need unicorns to come up. You also need the digital startups. But I want to just go back and say, for a minute, not every startup in India needs to be digital or tech-led. And that's a reality of India. So what Lloyd and Mitali have been speaking about, how do we create low-tech jobs or grassroots level jobs? And I think that's where the challenge is. And I want to go back to what Mitali spoke about, blue-collar jobs. For skilling, we already have NEP, which was rolled out 4 years ago. But the challenge that NEP faces is of execution. It's a great idea that those who are in the schooling, formal schooling system, CBSE, ICSE, or whatever, will pick up skills as they move along every class, and they can actually decide whether they want to pick up a certification in skilling, with diploma or degree or post-degree, whatever they want. The challenge is today, NEP, most of the states, including the double engine Sarkar states, have not rolled out NEP in the true form. So I think while we are expecting budget to roll out new policies and new budgetary allocations for newer schemes, I think we also have to do a reality check as what has worked and what has not worked. And do they need funding, continued funding at all? I mean, I think that's one I want to make a point about. Two, I think the larger narrative, which I'm speaking while we're speaking about manufacturing, is not every manufacturing sector is actually going to create jobs. We must have the context of Internet of Things and the fourth industrial revolution. Today, you can actually have a Maruti Suzuki or a Hyundai Motor entire plant, which probably makes about 5 lakh cars a year, run by just 10 people, if you actually allow for full automation. So that's also the political economy nature of policies, that we'll have to wonder what is going to happen to the state of skilling and manufacturing. Let's say you're today getting a great guy who can operate a paint booth in an automobile plant, and you skill him, and let's say we skill about 1,000 of them in every city. What happens if those factories move to automation, fully automated level? And I think that's something that the government cannot stop private capitalism. Since Karthik loves capitalism so much, it's a question for Karthik. So what happens if the investors decide, you know what, I'm going to fully automate my plant, and because I've already sunk in enough billions in India, and I need to churn out cars faster. How do we then support an employment?
No, you're right. I think, that's a very, very valid point that you're raising. And this is something which, in multiple countries, including Germany, for example, has been at the center of debate, that while you're talking about manufacturing in the age of technology is actually not adding as many jobs as it used to. So I think that's a very valid concern. But the point is, what do you do? Because at the end of the day, you've got to ensure that people make money. And for a country of our size, Lloyd, I think it is absolutely imperative that we find avenues where not just the highly educated services sector oriented jobs are created, but you've got to find other ways of creating jobs as well. So which are likely to be the labor intensive sectors where perhaps automation will not kick in immediately and we will still see some employment creation?
Yeah, so I think where we kind of lost out in our big focus and the whole PLI focus on high technology, I think some part is justified. So clearly when it comes to automobiles, when it comes to smartphones, India is a natural place because it's a huge domestic market. But I think when it comes to slightly lower tech manufacturing, which is very people centric, textiles, ready-mades, footwear, food processing, I think that's where we kind of completely seem to have turned our focus away. And to my mind, that is an area that possibly can get a fair degree of, should get some governmental support. The second area, Karthik, I think we need to look at is, like I said, the whole MSME, right? Somewhere in the last 4 or 5 years, the bottom has fallen out. And that's also critical because the one thing the government keeps announcing is some credit swaps. The reality is that for most financial sector, banking sector, MSME lending is high risk, right? Therefore, they are the most expensive. If you ask any banker, would you want to lend to an MSME? And I think that's the last sector because he recognizes they're very risk averse. And therefore, our MSME is getting funds at a very high rate, which makes it completely uncompetitive. I think that's the area that the government needs to step in some way to kind of help kickstart the whole employment at the grassroots.
Absolutely. So to kickstart employment, of course, multiple measures, policies that need to be put into place. But shifting back to the other key important areas or subject areas where I think government would need more focus. The other is, of course, electric mobility. There's been a lot of conversation around what electric mobility future will look like. Will it be in the frame of cheaper electric cars, or will it be buses? Will it be three-wheelers, which is where the electric mobility has seen the most uptick? Lloyd, coming to you on electric mobility, are we expecting an extension of FAME scheme? So perhaps FAME 3 will come into place. What are your expectations? Where are we headed as far as our electrification of mobility dream, 30% by 2030 is concerned?
I think we certainly will expect an extension of the scheme, but I think for now the focus has to shift a little bit into fleet, right? I think there's a lot of excitement generated around Tesla's potential arrival on private cars. I think the real impact will happen when fleets, when bus systems across the country start moving in, when a lot of, let's say, the private taxi systems start moving in. Right now, it's still kind of very cursory. My sense is that's the only way we will get to our climate targets of 2030. And that is certainly important.
All right. So will it be flex fuels? Will it be hybrid vehicles? Karthik, we've had a discussion before where Tesla didn't come. But there is an expectation that hybrid vehicles are going to be this flavor of the season with respect to the tax breaks that we've seen. As far as registration is concerned in the state of UP, perhaps that system could be emulated for the rest of the country. Do you see hybrid vehicles getting cheaper? Is that an expectation?
And also more importantly, the FAME scheme originally was supposed to cover both the electric vehicles and hybrids. So far, hybrids have been kept out of FAME.
So, I think technically the policy does include hybrids as well, but, the growth momentum that we saw actually came by way of electric two-wheelers and three-wheelers and not as much by way of electric four-wheelers, and hence the hybrids pretty much, fell off the way they lost charge and were left behind. But I think what the government must clarify this time around, and we've got to look at it in a global context. I think, if you remember the Republic National Conference at which Donald Trump was speaking, and he had said very, very clearly that the electric vehicle policy in the US is actually going to be thrown in the dustbin. The US, if Donald Trump, in the highly probable eventuality of winning the elections in the month of November, if electric vehicles are going to become unattractive in the US, is there any merit in India really pushing and manufacturing them? So that is my one concern area right now from a policy continuity point of view. But I think at the same time, it's important for the government to have one comprehensive policy which covers all sorts of alternate energy in mobility, as opposed to having one scheme for electric vehicles and hybrid. Somebody is saying something else at product launches. Nitin Gadkari, honestly, talking something else on flex fuels. We want to talk about CNG in the same breath with Bajaj Auto releasing a CNG bike, and we've got the scrappage policy and end-of-life vehicles varying from city to city and jurisdiction to jurisdiction. So I think broadly we need one nation, one auto policy. We need to be very, very clear, because we are talking about very large-scale investments. We can't be in a situation that you have a Tesla or not, you have a Leap motor or not, you have an MG, JSW or not. You have any domestic or international player making large-scale investments, capital investments. They've got to have continuity in policy making. You cannot have a policy and take it off. You cannot say that you're going to go on one track and eventually decide to take another altogether. So we've got to have a clear-cut one nation, one auto policy for the long term, which is going to be unwavering and unflinching in its commitment to the investment that it wants to attract.
And if I could just add one point to what you said, I think it's the importance in this whole policy to look at charging infrastructure.
Absolutely.
I think the devil in the room, or the demon in the room in this context, is charging infrastructure, because all this talk, and suddenly you have large fleets wondering how do they manage charging infrastructure, and there's no clear policy. There's a lot of regulatory uncertainty around that.
Absolutely. I see Srinath raising his hand. Srinath, just to add to that, I think a conversation around electric mobility has also been whether to incentivize owning an electric vehicle or whether to make it lucrative to own an electric vehicle, not by the way of incentives, but by the way of infrastructure which is present. Srinath, there's a lot of conversation as to where the money should go at this point. If there is a FAME 3, should it be to make electric vehicle cheaper to own, or should it be to make it lucrative to own, because you have the right highways, you have the right charging infrastructure? Where should the money be, and what should the electric policy be about? Because Karthik says there's just too much confusion right now. There were changes in the EV policy largely to accommodate Tesla. Tesla never came. There were conversations around BYD trying to enter, not trying to enter. But where we stand today, I think there is need for some clarity on electric vehicle policy for India.
I mean, I agree with Karthik in parts. I think we'll have to put money on infrastructure first, and that's where Lloyd's point about the entire infrastructure ecosystem. I mean, it's easier to go out and buy an EV car, but if I'm going to drive long distances, where do I charge? I mean, that's one, and how do I maintain each of those vehicles? I think that's a larger point. But I want to go back, to Karthik's point about the US. Karthik, in India, if you break the entire passenger car segment, probably they're about 5, starting from 3 lakh rupees, going all the way to 1 crore of rupees, the luxury segment. But whereas the US has about 22 subsegments of passenger cars, and the per capita ownership of cars is probably 18 times more than what Indian per capita consumption is of cars. So there's an economic story that's waiting to build out in the Indian space. That's a reality. 2, I think we've just started the story about connecting India in terms of connecting different point to point, district to district, state to state, where people can say, you know what, I live in Delhi and I want to go to Mumbai, and let me drive. It's only 12 hours drive away. And I think we will see that played out in the next few years. So it is very unfair to compare a developed economy and India today. But this is also the opportunity, right? As we develop each of those infrastructures, each of those highways across states and across cities, can we build those, let's say, non-fossil fuel infrastructure? I'm calling it non-fossil fuel because I really don't know how this entire policy is going to shape up. Will it be only EV? Will it be hybrid? And I think that is an opportunity that India has. We are building highways, thousands of kilometers every month. Can we build those infrastructure just like how the US developed its highways in the 1950s? Can we build motels? Can we build small townships in the entire ecosystem? I think that's an opportunity. But I also see that the states are not necessarily aligned with the center in that entire thing. And that is where I think the entire concept of cooperative federalism would come in. Can we bring some of these conversations to, let's say, the Finance Commission conversations of how do you split money and how do you develop an ecosystem?
We are counting down to the all-important budget speech. It's set to begin in less than 5 minutes from now. We've got just a few minutes left. And Lloyd, at this stage, it's a good time to bring up some of the idiosyncrasies of the budget speech, depending upon who is the finance minister. But one thing, be it P. Chidambaram as finance minister in one era, or finance minister Nirmala Sitharaman in one era, they've always wanted to quote poetry from more than 2000 years ago. Tamil poetry. Specifically speaking, the great sacred Tamil text of Tirukkural, written by the famous Thiruvalluvar, from the 3rd, 4th century AD. P. Chidambaram has quoted Tirukkural in his budget speeches every single time he made a budget speech. Nirmala Sitharaman quoted in 2020, 2021. Nirmala Sitharaman went a step further in the 2019 budget and quoted Tamil Sangam literature, which is older than Tirukkural as well. So, interesting, isn't it? How finance ministers choose to express these numbers, the kind of thoughts, and where they take reference from.
I think that's brilliant, and I read somewhere that Thiruvalluvar's quotes are the most popular across budget speeches in the last 3 decades, which is a good sign. But I think also the important point to note is there's an underlying current of Atmanirbharta. Remember that most corporates end up quoting Sun Tzu, and one has never heard Sun Tzu in Indian budgets, which I think is a good sign. And the second most popular thing to be quoted, I think, is Chanakya. He's been used a couple of times, but I really think, and my bet is that that the FM today will possibly lead yet again with a Thiruvalluvar quote.
Okay, from a Malayali to a Tamil person, let me just ask that question to Srinath Sridharan. Srinath, looking forward to some Tirukkural quotes in this budget speech?
Absolutely. I think, if you look at all these scriptures and statements, it only shows the fundamental nature of budget has not changed over centuries. And I think the earliest actual formally documented budget was in the Arthashastra. It speaks about how division of revenues and distribution of revenues and tax collection and who was responsible for what, everything has been codified. So what we have done is modernize this presentation, and the Bhai Khata today goes iPad and digital. That's about it.
Yeah, add to that, the whole, Atmanirbharta, we were not taking a suitcase in. Suitcase is such a, westernized, item. We are taking a Bhai Khata inside. Although it could be an e-Bhai Khata, it is still a Bhai Khata at the end of the day. And we are quoting our own texts from thousands of years ago to put it into perspective the financial decisions that we're making in this country, isn't it?
And not to forget the halwa that the finance minister offers.
The ceremony that
great symbolism, if you
national unity in halwa. There's one sweet dish that's made all the way from north to south to east to west. It is the halwa for sure. Different versions, definitely. So, very Indian budget these days.
The Punjabi in me is refusing to shut up. I've got to jump in.
Because before Finance Minister Nirmala Sitharaman, it was a Punjabi who was the Finance Minister of this country.
Well, that notwithstanding, I think I think the biggest I'm the biggest supporter of the Punjabi Finance Minister by the name of Dr. Manmohan Singh. But that notwithstanding, I think what I, as a pure Punjabi, would want as a reaction to after the budget speech is presented is bale bale across all sectors.
All right, as we head to the election speech, which is likely to begin any time from now, let's quickly take a look once again at those 9 key areas, the focus areas that we were hoping government will focus on. I believe we are also getting feed from the Parliament right
now. That's right. The Speaker, Om Birla, has taken his seat. These are live visuals coming in, so which means we're just seconds away from the budget speech. Let's cut across live and listen in.
माननीय सदस्यगण, मुझे अपनी ओर से तथा सदन के माननीय सदस्यों की ओर से अंतर संसदीय संघ आईपीयू की प्रेसिडेंट और तंजानिया संयुक्त गणराज्य की नेशनल असेंबली के अध्यक्ष माननीय डॉक्टर तुलिया एक्सन का स्वागत करते हुए अत्यंत प्रसन्नता हो रही है। वे हमारी सम्मानित अतिथि के रूप में भारत की आधिकारिक यात्रा पर आई है। यह हमारे लिए खुशी की बात है कि डॉक्टर एक्सन बजट सत्र को देखने के लिए यहाँ उपस्थित है। माननीय डॉक्टर तुलिया एक्सन शुक्रवार दिनांक 19 जुलाई 2024 को भारत पहुंची। उन्होंने 21 जुलाई 2024 को आगरा का भ्रमण किया और इस समय वह विशेष बॉक्स में आसीन है। हम भारत में उनके सुखद और सफल प्रवास की कामना करते हैं। हम अंतर संसदीय संघ के प्रेसिडेंट के रूप में उनकी भूमिका के लिए सफलता की भी कामना करते हैं। उनके माध्यम से हम तंजानिया गणराज्य की संसद के सदस्यों, तंजानिया की सरकार तथा वहाँ की मित्र जनता को बधाई और शुभकामनाएं देते हैं। मान्य सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य कृपया बजट भाषण की अपनी अपनी प्रति प्रकाशन काउंटर से प्राप्त कर लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से भी उपलब्ध करा दी जाएगी। माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण।
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I am happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly. while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oilseeds. For achieving self-sufficiency in pulses and oilseeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oilseeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs, and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the fourth scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. "1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs." Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice. Saturation approach. Our government is committed to all-round, all-pervasive and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata Industrial Corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas B, Virasat B in a growth trajectory. We will also support development of road connectivity projects, namely 1. Patna Purnia Expressway, 2. Buxar Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I am happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. New assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in TREDS. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the TREDS platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs to enable MSMEs and traditional artisans to sell their products in international markets. E-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, Petty.
Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource-efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. Research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Vikasit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure, investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavour to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs, stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad temple at Gaya and Mahabodhi temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad temple corridor and Mahabodhi temple corridor will be supported, modeled on the successful Kashi Vishwanath temple corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi or the 7 hot springs form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states, and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Service to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms, financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics. For improving data governance, collection, processing and management of data and statistics, Different sectoral databases, including those established under the Digital India mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I am happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production and almost a 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals. Steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. trade facilitation, to promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, TDS rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and TDS. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% TDS rate on many payments is being merged into the 2% TDS rate, and the 20% TDS rate on repurchase of units by mutual funds or UTI is being withdrawn. TDS rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize pay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending in appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise, and service tax in the tax tribunals, high courts, and Supreme Court to 60 lakh rupees, 2 crore rupees, and 5 crore respectively, with a view to reduce litigation and provide certainty in international taxation. We will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals: to improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
Item number 2. Item number 2.
Sir, with your permission, I rise to lay on the table the following statements under Section 3 of the Fiscal Responsibility and Budget Management, FRBM Act 2003, medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3.
Sir, with your permission, I rise to move for leave to introduce the Finance number 2 bill 2024.
प्रश्न ये कि विधेयक को पूरा स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। माननीय मंत्री जी, अब विधेयक पूरा स्थापित करें।
Sir, I introduce the bill.
Item number 4.
The Union Territory of Jammu and Kashmir budget. Sir, I rise to present a statement, Hindi and English versions, of the estimated receipts and expenditure of the Union Territory of Jammu and Kashmir for the year 24-25.
सभा की कार्रवाई कल बुधवार दिनांक 24 जुलाई 2024 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
That's right. Budget 2024 has been presented on the floor of the Lok Sabha. Finance Minister Nirmala Sitharaman coming out with some big announcements as far as the new income tax regime is concerned. Something that everybody has been awaiting. Standard deduction has been upped from 50,000 to 75,000. Family pension has been up to the 25k mark from the 15k mark. We are continuing with our live non-stop coverage of Budget 2024 right here on News 9 Live. We have Karthik joining us in the studio. Karthik, important announcements on the income tax front.
On the new tax regime, Krishna, there have been several changes which have been made. Like the new tax regime to attract nil taxation. So no change in the 0 to 3 lakh rupee bracket. From the 3 lakh to 7 lakh rupee tax bracket, mind you, this was 6 lakh earlier, the upper limit. From the 3 lakh to 7 lakh category now, you've got a 5% tax rate. The previous new tax regime announced last year had the next slab at 6 to 9. Now this new slab stands at 7 lakh to 10 lakh rupees, and that is now taxed at 10%. The additional slab of 10 to 12 lakh rupees, which was earlier 9 lakh to 12 lakh rupees, the 10 lakh to 12 lakh rupees slab is now taxed at 15%. And then you've got the 12 to 15 lakh rupee at 20%, and no changes in the highest tax bracket of 15 lakh rupees and upwards, which continues to be taxed at 30%. So these are the key changes which have come to the new tax regime, in addition to, of course, the standard deduction being up from 50,000 rupees to 75,000 rupees, Krishna.
All right, Girish Hanwari joining us on the show right now. Girish, welcome. Thank you for taking time out. Let's quickly begin with what are these changes and what do these changes really mean for people? How much are we saving by the way of these changes in new income tax regime?
See, the computation which the finance minister said is 17,000 rupees. But really, what is important is to understand this enhancement of capital gains tax, because most of the people are equity investors too. And this is effective April 1, 2024. So effectively, whatever somebody has bought or sold in this 4 month will also have this new taxes. So it'll be very interesting to see how the fine print is, whether it is effective from a particular date, August 1, does it cover the whole year? How does this whole capital thing pans out? That's, I think, the most important thing. And the FNO increase in the STT, which is also there. So that will also spook the market a little bit. But the capital gains tax change is the biggest change, as I see. And yes, the new regime versus old regime, should more concessions be given to the new regime? Really leaving standard deduction and the family pension, there is nothing in it. No housing in it, no HRA in it, no 50C limit in it, no 10C, 80C limit in it. So really it's really very nominal actually.
All right, stay with us. We also have Harshvardhan Rungta, CEO of Rungta Securities, now joining us on the broadcast. Harsh, thank you so much for taking time out to be with us here on Budget Day. Some big important announcements on the income tax front coming in on the budget front. One thing is the rationalization of tax slabs for the new tax regime, and the other is the fact that the TDS on mutual funds now go away.
Yeah, that's correct. So I think, if the government's focus has very clearly been towards encouraging the new tax regime. They've already mentioned that 2/3 of the individual filers have opted for the new tax regime. So, well, in that case, I guess the government wants to still incentivize further. The finance minister made the statement saying that the additional savings for a for a salaried employee would be approximately 17,000 rupees in the new rationalized tax slabs. So, well, yeah, with the increase in the standard deduction, with a certain rejig in the slabs, there is going to be certain more savings for the salaried, and the focus clearly being to move people towards a new tax regime. And as a matter of fact, this is one of the reasons you notice that there was absolutely no mention whatsoever for any increment in the tax rebates or exemption limits, such as ATC or any other section for that matter, because it's now a foregone conclusion that the government is not going to revisit any of those provisions which are there in the old tax regime. And with a simple reason, because they want to discourage it and move people to the new tax regime. What is interesting, of course, is the impact of long-term and short-term capital gains on various investments or certain financial assets. They mentioned there's going to be a revision in the tax slabs going further and making it say 12.5% for long-term and 20% for short-term. Now we need to see what exactly it covers in that slab. They said certain financial assets. Which are going to be those certain financial assets? We'll have to look into the finance bill.
All right, Karthik, you had a question?
No, I don't have a question. In fact, I have an observation and pretty much in line with what Mr. Rungta was also saying. Mr. Rungta, while there have been changes in the new tax regime, primarily by way of tinkering with the existing slabs, so now the 10% tax in the new tax regime is going to be eligible for those who are in the salary bracket of 10 lakh rupees versus the same being 9 lakh rupees earlier. Similarly, the 9 to 12 lakh has now been changed to 10 to 12 lakh. Are these the only two changes in the new tax regime, by virtue of which is it only those who are earning anywhere between 7 lakh rupees to 10 lakh rupees a month likely to get some sort of a tax incentive?
Yeah, that's correct. So, in fact, this tends to give a 10% benefit to the income slab of people between 7 to 10 lakhs. Because if you notice, beyond 12 lakhs is the same. So in the previous slab, 12 to 15 lakhs was 20%, and so is the case even now. And 15 lakhs and above was 30% in any case.
Absolutely.
So there has been some small tinkering between 3 to 6 lakhs was the earlier slab for 5%. That has changed to 3 to 7 lakhs. So those people earning beyond 6 lakhs and up to 7 lakhs also now fall in the 5%, which earlier was 10%. And then there was a rebate that was given up to, so therefore the income up to 7 lakhs was completely tax-free. So I think you rightly observed that any person between 7 lakhs to 10 lakhs, there has been certain benefit there. However, the standard deduction has been applicable to everybody. So there is a 25,000 rupees increment in the standard deduction that each individual will get.
So is it fair at this point, Mr. Rungta, to say that every tax-paying citizen who opts for the new tax regime benefits by 25,000 rupees by way of standard deduction limit increasing from 50 to 25, but all those who don't fall in the bracket of 7 lakh to 10 lakh rupees have nothing really to cheer about the changes in the tax regime?
No, so see, when you go in a slab-wise calculation, so the first thing is that increment of standard deduction applies to everybody. Even if you're earning more than 15 lakhs, you will get the benefit of 25,000 rupees. Secondly, when you calculate your tax liability, you will calculate your tax liability first calculating 3 to 7 lakhs at 5%. Then you will go incrementally going up to what you actually earn. So there will be a tax benefit, though the impact will be lesser because you're going to gain benefits of only those two slabs, which is 7 to 10 and 10 to 12.
Right.
So incrementally, overall, you will gain about the 17,000. The calculation that Finance Ministry announced, saying that the salaried employed would will save approximately 17,000. There's going to be certain gains, but not entirely as much as you would gain if you were between 7 to 12 lakhs.
Okay, Girish, I have a question for you as well at this point. So now, is this a clear message from a direct tax point of view? Is there a clear message that over time the government wants to disincentivize Section 80C and the old tax regime and gradually nudge people towards adopting the new tax regime?
Absolutely, it's clearly coming through, and really more and more incentives move towards the new tax regime. That's very clear. But there is something in it for everybody going for the new tax regime, this 25,000 rupees saving. Clearly, everybody will benefit. Right. Another big one I saw was angel tax abolished. Very, very big one for the
absolutely
at large. Very big one. So that's also, there are some good things also which came through. And the assessment provisions and all which came through, fine prints I have to read, they also had a lot of hope of lesser litigation and lesser harassments.
Right. So I think let's spend some time on litigation. I think some very interesting news points have come on the litigation of tax defaults and assessment of taxation. So I think the first point now being that there are revised limits. So a tier-wise court knocking system has been set where you can go to a lower court if there is a minimum of 60 lakh rupees in litigation or defaults. It increases to 2 crore rupees for a high court and 5 crore rupees for the Supreme Court. Girish, do we have any data, any statistics on what is the average ticket size of defaults of cases which are lingering in courts?
Actually, it varies. It's all across. But I would say at least 40 to 50% of the disputes would get some relief, because lots of disputes are in smaller amounts. And with these limits, you will have a lot of relief for a lot of people. But really, I don't have the exact statistics as to what will it pan out to be. But certainly, as we read the fine print, this is something which is very, very encouraging.
Okay. Mr. Rungta, what about the short-term and the capital gains tax, the long-term and short-term capital gains tax? Now, how exactly do you think this differs from the taxation that was applicable earlier? I understand prima facie, the long-term capital gains tax came in at 10%. That has been increased to 12.5%. Is this valid across all asset classes, or is this only for listed asset classes?
So from what I'm getting, before you come in, Mr. Rungta, short-term capital gains tax has been increased to 20% from 15%, and long-term has been increased to 12.5% from 10%.
So, Mr. Rungta, my question to you is it applicable only on market-linked listed asset classes, or is it applicable on all sorts of asset classes, the 10% to 12.5% in the case of long-term?
So the long-term capital gains of 10% earlier and now 12.5% was anyways applicable only to listed entities. And in case of unlisted shares, the holding period was 2 years, not 1 year. So 1 year holding period is applicable if it's for a listed entity. And if it's an unlisted company, the transaction, the long-term capital gains was applicable after a holding period of 2 years, and there was a 20% taxation with indexation. So anyways, the tax rules for listed and unlisted were different. In this particular case, the 10% being increased to 12.5% is applicable to listed financial assets. Okay. So in this context, if you were paying 10% long-term capital gains earlier, now you have to pay 12.5. And in addition, the first 1 lakh was exempted earlier, and now that exemption of minimum long-term capital gains up to 1.25 lakhs is exempted.
What has gone behind the thought of increasing the long-term capital gains tax? Because from what we were discussing right before the budget, there could be some tinkering, but on the lower side, it does look like the tax is increased on the upper side by at least 2.5%. What has gone behind the thought?
Well, I really wish I could, get into the mind of the finance minister and have this changed and rolled back.
Okay.
But because, Girish, let's get you in. Do you have, is there some economic rationale behind this? Because up until now, I think the understanding was that we want to incentivize long-term investments and not really penalize those who are in it for the long term.
No, there is no penalize in this. So if you were looking at the pre-budget figures, the fear for short term would be that it will go beyond 20, it will go to 30, like a normal tax rate. And the long term would be around 15. So it's within the fears actually with which the market was speculating. And if you see, there's still a gap of 7.5% between long term and short term. So 12.5 and 20. So still, if you are a long term investor, you have a lower tax rate by 7.5%. So this is actually within the range in which the market was speculating. And one more thing which the market was speculating, that the definition of long term and short term would change from 1 year to a higher number, which did not happen. So this is within what the market was speculating.
Okay, wasn't there the hope that the LTCG exemption on shares, equity, wasn't the industry hoping for an exemption on shares and equity post 3 years?
No, it wouldn't be, because the world over there is no exemption, and world over there is a taxation on listed security, and the rates are very comparable. So I don't think anybody was expecting 10 to become 0. They were fearing that 10 could become maybe 15 or 20, and it's 12.5.
Okay. How do you view, keeping it with mutual funds and market-linked investments, how do you view the TDS decision from the budget?
It's a relief, actually. It's a relief. Lesser compliance.
Okay.
But really, we have to read the fine print. We just have heard a speech and we're just giving this interview.
Right.
We should read the fine print and then discuss it again. But prima facie it appears. And see, decriminalization of a lot of offences, decriminalization of TDS, there are lots of good stuff spoken about to really help. But let's read the fine print and then come up to it.
Right. Mr. Vanwari, you also mentioned about angel tax. I want to just spend a minute with you before we let you go on angel tax. Angel tax has been abolished. This was pretty much, something that that we had also reported, and a lot of news agencies had reported that a rethink in angel tax is, is likely to happen in the budget. That has finally happened. What sort of relief do you think this is likely to bring to investments into startups coming into India from outside?
For the future, yes, but what I'm worried about is that if angel tax is abolished, say from April 1, 2024, what happens to the past? So really, going forward looks to be a big relief, but what happens to the past is really something which we have to see the amendment and see.
Okay, forget
it. We'll just, Mr. Rungta, we'll bring you back into this conversation in just a bit. If you can just help us, mathematically calculate. I'm sure you're scribbling something. If you can just calculate exactly what would be the tax liability now in the new tax regime with the changes on people earning 7 lakh rupees, 8 lakh rupees, 9 lakh rupees, 10 lakh rupees, 11 lakh rupees and 12 lakh rupees. So those 6 salary brackets all the way from 7 lakh rupees going up to 12 lakh rupees. If you can just create this for us, we'll give you a minute and let's speak to Lloyd till then on angel tax.
Right, Lloyd, you deal with so many startups across the country. You think that finally they're like big relief for India's startup ecosystem.
I think it's a good sign. I think it was expected for a while now. So I think that's certainly one good sign, given the fact that the whole startup ecosystem hasn't had much great news to celebrate over the last 2 years. Right, things have been down. So I think that's certainly positive. Though I'd still wish that a couple of other elements were spoken specifically to startups. While the finance minister did address MSMEs in a very significant manner, I think this was a good soft signaling to the startup sector.
All right, okay. So a good news, something which was in line with expectation, of course, as far as angel tax is concerned. Some of the things we've been working on and contributing on, like working women hostels and establishing creches, the childcare infrastructure investments that we've been advocating for years, finally coming in the finance minister's speech is very exciting for us personally at Nikor Associates. And of course, the second big takeaway really for me, cities as engines of growth. This is a line I've used in a number of my policy briefs. So just to see it, in the finance minister's speech was also again very exciting, and her prioritizing 14 cities for transit-oriented development, linking back to our discussion in the morning of, talking not only about affordable housing, but like cities which are easy to navigate, again being prioritized. Then, of course, the third aspect around MSMEs, and the fact that MSMEs are really at the core of this budget as job creators. And the fourth one being youth employment. This internship scheme, I am dying to take advantage of it because, I'll go there and say, I'm hiring, 25 interns a month. Please, as a startup, as an employer, I could also benefit from it. So it's very exciting. And of course, the youth will benefit from it. And I think the fifth one really for me was climate resilience as a key theme, coming in a number of infrastructure areas like the irrigation fund and the flood control fund, and looking very clearly at irrigation and flood control. But the sixth bonus point which I'd like to mention is again something we were discussing in the morning about Andhra Pradesh and Bihar, right? And the fact that we did expect a lot of the prioritization to come in through sectoral interventions, and the highways in Bihar, the flood management in Bihar, the new capital city in Andhra Pradesh, agriculture in across different states, and of course special packages for the hill states, and the development there, tourism also. These are really good directions for us to go in. All right, well, good direction to go in, and as we progress, as we discuss all facets of budget, let's quickly listen into what Finance Minister said on tax slabs particularly. What are the changes in the new tax regime?
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
Finance Minister Nirmala Sitharaman explaining the changes that have been made to the new tax regime, the slabs of the new tax regime. We have Mr. Saurabh Agarwal, tax partner at EY India, now joining us on the broadcast as well. Saurabh, thank you so much for taking time out. 17,500 rupees is the amount calculated by the Finance Minister. Do you think that's doing enough for India's middle class, which had high expectations from Budget 2024?
I think the expectation was that the tax rebates will be somewhere in the range of 15,000 to 20,000. So while it may not be meeting the expectations of the Indian middle class, but if you look at the way the economy functions, I think 17,500 rebate on the overall basis, I think that was the likely expectation. We were not expecting much to come around from the budget.
Okay, Harshvardhan Rungta is also with us. He's joined us back. Harsh, you've made your calculations, haven't you, regarding what these new tax slabs are and what it will mean, and in terms of the money left with us?
Yeah, so these are just very rough calculations at short notice, so there are bound to be some errors. But anyways, if you were, I'm assuming that the rebate for income up to 7 lakhs is still available. So all the income that you have up to 7 lakhs will be tax exempt. Let's take a case of a person earning 8 lakh of rupees. Now, I have not included the increment in standard deduction. So this is purely leaving the standard deduction away. And if you were just to calculate the tax based on the tax slabs, so for the moment I have not included the tax, the standard deduction. So if you're earning 8 lakh of rupees, the existing tax that you would have paid would be approximately 35,000 rupees. And the revised slab, now your tax liability comes down to 30,000 rupees. So there's a savings of approximately 5,000. Plus you add the standard deduction benefit that you will get. So for the moment, as I said, I have not included the standard deduction. For simplicity of calculation, purely on the slab that has been announced. If you're earning a 9 lakh of rupees, the existing tax that you would have paid would be 45,000, which now becomes 40,000. So there continues to be a benefit of 5,000 rupees for people who are earning up to 9 lakhs. If your income is 10 lakhs, then the savings that you make, so in existing slabs, you're required to be paying about 60,000 rupees as tax, which will come down to 50,000 in the revised slab. So there's going to be a 10,000 rupees benefit if your income is up to 10 lakhs. And if it's 11 lakhs, then the continuation is there for 10,000 rupees as a difference, because the existing tax would be 75,000, the revised would be 65,000. Now, if you club the increment benefit of the standard deduction and you're in the 30% bracket, then there is an additional 7,500 rupees that you save. So that's where the calculation of the finance minister comes saying 10,000 rupees is the benefit that you get when you switch with the new slabs that have been announced in this budget, and the 7,500 that you will save in addition on account of the standard deductions going up. So that's the 17,000 kind of a calculation that we referred to.
Krishna, I have one observation here, and Harsh, I don't know, if you'll agree with me or not, but if you're allocating or sort of, averaging the 17,000 rupees saving across each of the tax slabs, then 17,000 on somebody who is earning 7 lakh rupees is just about 2.5% of the salary, whereas for somebody who's earning about 12 lakh rupees, it's about 1.4% of the salary. Both these don't beat inflation. So Finance Minister Nirmala Sitharaman has given an increment to people earning up to 12 lakh rupees, but an increment that doesn't beat inflation.
Well, the tax slabs would never be aligned in such a way that you could beat inflation completely. I mean, this is only an incentive, and the government says that there is an out. This is going to still burn a hole into the tax collections. But I guess whatever relief that can be given in the budget has been proposed. Yes, of course, there is going to be always a debate on this point that of inflation or not. So there's not much we can do at this juncture, but just to kind of hope. And in fact, I mean, we've not still calculated the other additional tax burden that we will have on ourselves in the form of increased capital gains. So that part is still awaited.
So Krishna, my fear is that the tax incentive which has been offered by Finance Minister is actually going to do little to nothing in really boosting consumption. I don't know, I mean, Mithali, if you'll agree with me or not, but I don't see a massive tilt towards consumption, and hence FMCG is going to stay in stress. There's been absolutely nothing on the auto sector. So it doesn't seem to me like right now, at least, as a consumption oriented budget.
I'm very certain there will be something about auto sector, at least in the fine print of the budget. So maybe not a part of the speech, but we're still hoping and waiting for the fine print of the budget. But that 17,500 annually is not going to do much.
For consumption, so at the end of the day, when we look at India is always known as a consumption-driven economy. We've always been an economy where we've said, okay, investment, sure, but consumption is really our GDP's growth driver. Of course, 17,500 rupees per year on an average for a middle income person does little for consumption, over an annual basis. But again, when we look at the relief that comes in for the class of between 3 to 7 lakhs, and the fact that, a person earning 6 lakhs to 7 lakhs, that's the person that's really benefiting. Now, of course, that's a smaller category of people, but there are certain people who will benefit out of it. But I completely agree with Karthik that overall, when we look at a macro impact on consumption, that's not really coming through.
Just let's also quickly listen in on as far as the income front is concerned, the tax rebates on the TDS rebate on mutual funds as well, and then we'll continue this conversation.
We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, TDS rate structures, provisions of reassessment and search provisions, and capital gains taxation. Simplification for charities and TDS. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% TDS rate on many payments is being merged into the 2% TDS rate and the 20% TDS rate on repurchase of units by mutual funds or UTI is being withdrawn. TDS rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST.
That's Finance Minister Nirmala Sitharaman explaining the changes made to the taxation on investments. I'm going to check with Saurabh on this. Saurabh, talk to us. How do you view three things? One is the change in the LTCG and the STCG, or long-term capital gains tax, or the short-term capital gains tax regime. And more importantly, the regime being done away with, the 20% TDS on mutual funds.
Points. Of late, post-COVID, what we have seen is that a lot of retail investors are entering into the stock market. Of course, if you see the number of retail investors who have entered the stock market today are by far less compared to any of the developed economies. I think what the FM is trying to do is FM is trying to incentivize by way of increasing the exemption limit on the capital gains on the financial assets, which is a welcome part, which will ensure that at least there's some bit of relief and people will more invest into the stock markets, at least on the retail investor side. I think when you look at the fact that the way they are now ensuring that the long-term capital gain, they are moving it to 12.5%. That is somewhere you will see that there will be a hitch which will come 10 to 12.5%, which will be an increased taxation over there. So there, that will be something which the people were not expecting. On the mutual fund TDS, I think that's something which has to be looked into as to how people will look into, because that's only a TDS part. It's maybe a cash flow issue for the investor, but overall the taxability remains as such.
All right, Saurabh Agarwal there, tax partner at EY India, helping us understand what the changes in taxation means. We have Suyash Maheshwari also now quickly joining us. Suyash, thank you for being with us. Before we start talking, let me also bring in Mr. Feroz Aziz, who joins us on the broadcast on Budget Day. Feroz, always a pleasure chatting with you. Great to have you here with us on Budget Day. From what I understand, the markets are recovering post the budget speech. But how do you view the taxation on investments that we're just talking about, be it the increase in the LTCG or the doing away with of TDS on mutual funds?
Yes, so I think I'm reasonably positive. See, I've been talking about capital gain simplification for the last 2 years. I think simplification, the key point is all assets have been brought to 12.5%, which is a big move because it says financial and non-financial assets. All of them have been brought to 12.5% in the long term. The only difference remains between the long-term categorization after 1 year or 2 years. So the simplification need which capital gain had on both counts has been satisfied. One is on the tax rate for real estate, for gold, for equity. All of it is unlisted equity, private markets, all of it at 12.5%. The only difference is 1 year and 2 year for non-financial assets. That's a very, very big change, and I think that's a huge simplification. Second, earlier there were different time periods for them to become long-term. Now all of them become long-term in the same time period. Unlisted equity was 2 years and real estate was 2 years, but there were some debt instruments which were 3 years. And gold was 3 years. So all of them become 2 year plus. So I think simplification on tax rate and the period to get to long term is a big, big move. Now what can happen is real estate can have a large impact because earlier real estate used to have a taxation of 20% plus. So people used to use the benefit of Section 54 to reinvest into property. But if there is somebody having to pay only 12.5% tax, he may not reinvest the money back into property. So it is a double-edged sword, or it could also be construed as positive or negative for real estate, because real estate always had this engine of reinvestment because of Section 54, which was capped at 10 crores a couple of budgets back. So I think it's a big, big move on the capital gain head, and I think I'm reasonably positive. Second, I think Section 50AA, which was included in February 2023, brought into some degree of tax disadvantage for fund of funds inadvertently. That has now been clarified. So if you look at the finance bill, it very clearly says Section 50AA now has been reversed in the language. Instead of 35% in equity, which was the mandate to be out of this gamut, now they've said if there is more than 65% in money market and debt instruments, it will be covered under Section 50AA. So that's a great news for the mutual fund industry, where fund of funds inadvertently had got covered into Section 50AA, and that has been corrected. So these are some major changes for the mutual fund industry and the investment arena. But I think the simplification need, which I've been highlighting for years, has been done to a 80-90% extent, which I would expect.
All right, Feroz, stay with us. We also have Mohit Gang now joining us on the broadcast as well. Mohit, thank you so much for taking time out with us to be with us here on Budget Day. We're just going to come to you, but Suyash, first, why don't you give us a heads up on how the markets are trading at this point in time?
Certainly, Krishna, and as just Feroz pointed out, the initial reaction, the market did not like the hike on SGCG and the STT on futures and the security transaction tax on futures and options, which was hiked to 0.02% for your futures contracts and by 0.1% for your options contracts. So right. I think the initial knee-jerk reaction was negative. The markets did correct, and we saw a fall of about 1% for the headliners and about 1.5 to 2% for the mid-cap and the small-cap stocks. But since then, we have seen a good bit of of recovery. Nifty currently is down by about 0.5%. It has in fact managed to move past 24,350 mark. Volatility index has declined significantly. It's down by 11.5%. It's back below that 14 sort of levels. The small cap and mid cap indices both have paired losses as well. Both are down about 1% as well. And when it comes to sectors, the FMCG sector is doing well as it was doing in the morning. It's up about 2%. All other sectors, barring a couple, pharma and your realty, your defensive sectors, apart from that, all are trading in the red. But we are seeing some recovery as the day goes by. For example, Nifty Bank, which had took a hit of about 2.5%, is now down about 1.25%.
So basically, markets in recovery mode after the budget speech announcement, after dipping much lower, they're all on recovery mode. Mohit, the volatility was expected as far as budget day trading is concerned. How do you read the moves of the markets this morning or this afternoon so far?
Look, I think the market is more reacting to the capital gain part of it. And honestly, there is not too much clarity as to what is the effective date of applicability. My understanding is it's effective today, which is 23rd of July, the taxation bit, which is the short-term and the long-term capital gains part. And honestly, I think perhaps maybe to that reaction, people or investors in the market were just trying to book some profit out. Right, possibly trying and booking the short-term gains out and thinking that they can just apply the earlier slabs and just have it booked and then again buy the dip. So that just explains me what has happened in the morning. One big cut where some amount of selling happened and then perhaps buying again in the market. But otherwise, it's very difficult to explain as to what the market is reacting to right now.
Okay.
And Mohit, I want to come to you on the, we were talking about how FNO, like there could be some curbs imposed by the FM on FNO is concerned. Now, they have hiked the STCG, the short-term capital gain tax, from 15 to 20%, and STT, security transaction tax, has also been hiked on both futures and options. How big a deterrent is that going to be, Mohit, in your opinion?
Look, honestly, Suresh, if the country has got hooked onto trading as a means of income, it is very difficult to push the people out by just increasing tax rates. Honestly, that's my firm belief. Though you might just people pay taxes on gains, right? And if they were earning some money, they might just not want to increasing the STT or maybe the transactions. Perhaps it's not the gain amount out here which is getting taxed, but the transaction amount. Maybe the thresholds increase a little. My sense is the financial regulator, which is SEBI, will work in tandem with the government. Government out here in the budget has outlaid some amount of taxes which they have increased, which is the STT and perhaps the long-term and the short-term capital gains tax. But my sense is SEBI might just come a little hard on this and increase the lot sizes. The combined effect of these two entities coming together and trying to curb the speculative activity in the market or the FNO activity in the market might become slightly substantial. As of now, honestly, increasing the STT alone, will it reduce the volumes? I honestly doubt that. Long-term capital gain tax increasing to me is a little sad. Otherwise, I'm not very disappointed with the overall tax changes. But the long-term capital gain, I think in some way you're trying to discourage long-term investors or long-term savers in the country. Short-term, I think it's a good measure, perhaps trying to equate all the financial assets at one go, which I think was the need of the hour, because there were different types of taxes applicable on different types of financial assets. Plus the holding period was also different if you were listed, unlisted. So I think some amount of parity was warranted out there. So that's a good measure. But long-term capital gains getting increased, I think is never good for savers of financial assets.
Right. Mohit, stay with us. Let me take this across to Feroz Aziz. Feroz, talk to us, post this budget, how do you view the sectors to invest in? Where should, people realign their portfolios going forward? If you can unmute yourself, Feroz.
Before going to the sectors, let me touch upon the broader market. I think the broader market rally could remain intact because there's no bad news there. That's very, very important, because it's not just about the sectorial differential performance. The relative performance of the broader market, which is the small cap and the mid cap space with Nifty, has been reasonably divergent, almost about a 35% difference between these indices you see in about a year and a quarter. So that was one risk we were sitting on. If there was something which could actually burst that bubble, bubble is a strong word, bubble in the sense higher valuations or more than 2 sigma, more than mean P's, which you see in the mid cap and small cap space today, that remains intact. There's no panic there. Point two, I think the capital expenditure has been kept intact. So before and after the budget, I think whatever was the opinion after the interim budget remains the same now. I would say the banking sector will get some push because most of the debt instruments have been brought to parity with deposits. So that could actually improve deposits growth. That's point one. So the banking sector, which is the reasonable valuation, almost 27% of Nifty, I'm still bullish on. It's too conventional to be bullish on. But yeah, that's be it as it may. But that's one sector which is heavyweight on Nifty, and there is going to be a lot of influx from EPFO in Nifty. And Nifty's biggest beneficiary is financial services, and valuations remain intact. Deposit growth gets some push. So that's why financial services, of course, the usual suspects like defense, railways, roads, definitely get the push, but I don't think those are deep enough sectors for some fund manager to put more than 5-7% of the overall money he's managing.
Mitali, that's always something that most Indian middle class does, realign their portfolios post the budget.
No, I think most Indian middle class, like my father, would be watching this budget, straight up since morning, and then will be telling his, banking correspondent or somebody saying, ab ye buy karo, ab ye sell karo, and, do it this way. So I do think that there will be some amount of realignment in the portfolios. But today, I think when we look at the, state of the announcements that have been made, in terms of sectors, there are certain sectors that have been highlighted and which we've been discussing actually since morning, which have come out in the budget as, those green shoots and those promising sectors. Green energy, as we predicted in the morning, definitely getting highlighted by, the finance minister, where she's even talking about a net zero transition path for even hard to transition sectors. So I think this is a very promising, and I always advocate that your portfolio must link with real economics. Your portfolio must look at, okay, which are the sectors that are actually going to get that push and that support from the government, and green energy clearly coming out, electric mobility clearly coming out, green hydrogen is coming out. I was actually looking at, the allocations that have been made in the Ministry of, Housing and Home Affairs and affordable housing, again, getting that boost with 3 crore more affordable houses being announced. Industrial parks, again, 12 new industrial parks coming in, which links with the entire focus on the logistics sector that's been in place under PM Gati Shakti for the last, 4-5 years, again continuing to get that boost. So, these are certain safe infra stocks, infra investments that one can continue to look at importantly for one's portfolio.
All right, Lloyd, what were your first impressions the second the budget speech ended?
I think it ticked a lot of big concern boxes. I think the first part was really the whole talk about employment generation. The fact that the finance minister addressed upfront issues vis-a-vis employment generation. So skilling, and specifically when she talked about providing EPFO support for all those first-time job hires and people taking on new employees, so the subsidy. I think that was very good signaling. I think the other two reassuring aspects was that the capex expenditure would be maintained. I think one thing that this government has done consistently well is keep up the focus on capex and infra. So I think that part, 1,11,000 crores, and that's great. I think thirdly, I think she spoke about an always important issue in India in the context of agriculture, 1.52 lakh crore in agriculture, and again talking a little bit about natural farming and such like. So I think it did tick some of the main boxes, which was good. I think a couple of concern areas remain, I would say. I think one was, what does it do for export competitiveness? I think for a while right now, I think that's been a little bit of a concern. Our exports have seen a bit of a lull, and I think that is still, to my mind, unaddressed. I haven't seen the fine print. The other point that I think needs to be stressed on, as much as she called this out in her 9 key things, which is reforms, and did mention a few things about land reforms in terms of technology enablements, I didn't see some very clear directions on the reforms front, right? She did go back and say that insolvency and banking, IBC has kind of liberated a lot of money into the economy, but I'm still not seeing a definitive route to reforms. I know privatization has been put on the back burner, it's politically not expedient, but I would still love to have heard out a little big call out on reforms. And I understand this is a difficult budget. This is the first time this government is in a real coalition. And I do understand that they did the right kind of signaling. They talked of a lot of infrastructure projects specific to some of the two states that mattered in a sense.
The
ally states certainly, and done pretty well without just handing out a package. I ain't talking about development, but I would still think reforms is something I would have loved to have heard out much more clearly and much more specifically.
Feroz, was there anything that you were hoping for that you did not get from this budget?
Yeah, I think I was expecting a better net borrowing. I think 14 lakhs and 11 lakhs. I was expecting some degree of surprise there in terms of the net borrowing, but that has remained identical, which is also good news. But yeah, that's the only thing which I was looking forward to, a little better number in terms of the net borrowing, so that the yields could actually soften and gives headroom for RBI to reduce the interest rates on the repo side from 6.5 downwards, because we are almost at a flat yield curve currently. So that's the only thing which disappointed me. I think the second part, which I think is very critical, is of course the push on the equity. Of course, equity has had some detrimental taxation. 12.5% is not too much of a difference. If anybody would have looked at any change in the capital gain, they would have at least said 15%. So that way, the market is not too disappointed. But I think Indian households have funded the fiscal deficit of our country for long periods of time. The foreigner has always participated in the India growth story using equity, and the domestic household savings have only 6% of money in equity. There has to be some better incentive than just that 1 lakh moving to 1 lakh for 25,000 exemption, because for the years now that the foreigners are actually putting money in Indian bonds, you have a breather to move money of Indian households to equity. What strategically has been done for the flight of capital? Otherwise, India's return, if I interpolated for the last 10 years, Indian households' return on their 800 lakh crores is only 6.8%, give or take, for the last 10 years. So as a country, we have to see how does the household start making double-digit returns, or at least some real returns, and for which they should have structurally done something to encourage flight of capital from debt to equity.
Feroz, if I can just step in with one macroeconomic question before Krishna comes back perhaps to sit this subject. I want to understand from you, Feroz, the fiscal deficit target which the government has now arrived at, which is 4.9% of the GDP as opposed to 5.1% which was stated during the interim budget. My fear is that with coalition politics now creeping in, 26,000 crore rupees allocated for the state of Bihar, 15,000 crore rupees allocated for the redevelopment of Amravati. That is a solid cash out of about 40,000 crore rupees without too much tinkering, except for the long-term capital gains tax, without too much tinkering on the tax front. So is the fiscal deficit target of 5.9% being a little too optimistic for the government?
And if I could just add to that, the fact that she also directionally talked about next year going to 4.5%.
That's right.
So, directionally as well. Sorry.
So, Feroz, too ambitious, 4.9% and 4.5%?
Yes, it is definitely at the face of it very ambitious, like you rightly mentioned, Karthik Bhai. But I personally think the government has always underestimated revenues. Over the last few years, you see the budget estimates are generally beaten reasonably from a revenue standpoint, one. Two, I think the disinvestment targets have not been met over the years. Okay, if you look at the disinvestment targets were 65,000 crores every year, but the actuals turned out to be 35,000 crores. So I think the disinvestment, especially given the kind of rally we have seen in PSUs, I think disinvestment, I think government would definitely seriously want to bring in disinvestment, because there is hardly any free float in our equity markets. The 500th company in the chronological order of free float is 4,000 crores in a country where there is 8 lakh crores of household financial savings. So point I'm trying to make is disinvestment targets can be better achieved, and I think these 40,000 crores can be very easily met at these elevated valuations of PSUs, supplying these elevated valuations relatively, but still relative to private sector, PSUs are still undervalued even on the banking and the non-banking space. So point I'm trying to make is 40,000 crores, I'm sure, is a buffer in the revenue estimate itself, and the disinvestments could actually help to get this 4.5. I think that's why the ambitious target has been put in place, but the numbers have not been aggressive.
One quick thing I want to ask you, if I were to ask you to rate this budget on a scale of 10?
I would say 8.
That's a high rating. Lloyd, quickly, if I were to ask you to rate this budget on a scale of 10?
6.5.
Okay, there is a difference here already. Suyash, do you want to check with our market man Mohit over here?
Yes, Mohit, I wanted to touch upon rupee. Rupee has hit a record low against the US dollar. Why do you think that is the case? Is it because, long-term capital gain tax has been hiked?
Look, maybe I think the market is kind of thinking that people will pull out money because the long-term capital gain taxes have increased. But my overall sense is the fiscal deficit number which the government has put out is extremely promising number. They had a huge largesse from the RBI, which has helped them to come out at that number of 4.9. In the interim budget, the projection was at 5.1. The number coming at 4.9, I think, is a massive statement by the government. This government has had the habit of putting out a fiscal deficit number and meeting it. Last year also, if you see, 5.8 was the number. They came in at 5.63, which again was a big boost. And given this, with the fiscal discipline which they're showing, 4.5, if they stick to it, my sense is on the longer term, Suyash, the currency should stabilize again, right? You can have an interim knee-jerk reaction because of your STT taxes going up, because of your short-term going up, LTCG going up, and foreigners might just want to book out some profits and encash their positions or come out of that. But my sense is because your fiscal is getting better and better, your macros are getting more stable, you will see long-term money perhaps coming into the economy. You also have corporate tax rates going down, the MNC tax rates going down, right? These all should encourage foreign money to come in over a long period of time and perhaps stabilize rupee to a larger extent over a long period of time. Short-term impact, yes, definitely it's because of the taxes.
All right, Mohit Gang and Feroz Aziz, thank you so much for taking time out to be with us here on Budget Day and helping us decode Budget 2024. Pleasure having you. Hope to keep having you again and again on the show, on the channel. But for now, we'll let you go. We here at News 9 Live are continuing to bring you non-stop live coverage and understanding of the details of Budget 2024 and what's in it for you, how does it impact you. And the latest to join our day-long broadcast is Mr. Dilip Chenoy. Dilip, thank you so much for taking time out to be with us here on Budget Day. I'm going to begin with a very straightforward question. First of all, rate the budget on a scale of 1 to 10 for us. Where would you rate it?
I'm not taking kind of space, but all I'm saying is anybody who is rating the budget at this point without reading the fine print and without looking at the actual expenditures is not actually looking at the budget very, very closely. And I can, take that, for example, in the auto sector and share those details with you, because a lot of people felt that there's nothing in the budget for the auto sector, which actually, if you look at the detailed expenditure statements, you will find that there is something for the sector. So I think rating should be a little more when you have an access to all the budget documents and the expenditures going on at this point.
Fair enough.
Sorry, I know that there were earlier ratings, but I can't give a rating at this point of time because I just don't know enough.
Okay, we're asking for instinctive ratings, actually, not for the ones with the fine print in our hands. We have Mr. Rakesh Khar also joining us, editor of News 9 Newsverse. Thank you, Rakesh, for being with us. I'm going to quickly check with Dilip. Fact of the matter is that we will leave the broad outline out, specific to green mobility and the transition to electric vehicles. How did you think the budget did?
I think the first thing that the budget signifies in terms of green mobility is continuation of 4 schemes. Right? And if you look at the 4 schemes, the first one is the FAME scheme, right? Where actually 2,671 plus crores have been allocated for the FAME scheme. The second is that the whole PLI scheme, there is continuity in over 3,500 crores has been allocated. And in fact, if you look at the alternate chemistry PLI, another 250 crores has been allocated. In your show last time, we discussed this whole electric mobility promotion scheme. And if you look at the 500 crores that is allocated there, a significant amount is actually allocated to 2- and 3-wheelers in this space. All the kind of discussion earlier, structured around the Tesla investment and all of that. So it looks at looking at specific 2- and 3-wheeler support going forward. 3 other things in the budget which are very important from the context of the auto industry and e-mobility space. The first relates to the customs duty reduction in all of the specialized chemicals and minerals that are required there, and also the plan announced to looking at improving production in India, and also very importantly, a thing that is missed is looking at acquisition of foreign such deposits there. The overall budget from the automotive industry point of view, and in your show, I had talked about reduction, improving consumption capability within the sectors that would be target buyers for the automotive. I think that has been done. People may say that is not enough or what, but I think the first steps have been taken in reduction of the tax rates, direct tax rates. Second, there's an announcement on relooking at the GST rates, so we'll have to wait for that. But third, I think most importantly, the focus on improving rural, and the investment on outlays for rural development, which actually, will improve their ability to consume, etc., going forward, because they'll get jobs and they'll have disposable income there. I think finally, on this aspect, if you look at it, the whole structure of the budget is looking at, the whole skill development and the internship, right? And if you look at it, in the top 500 companies, there are a lot of automotive companies, so they now have an ability to maintain the thing. So overall, nothing mentioned in the speech, but there are a lot of positives in the budget for the automotive sector.
All right, and Krishna, just as Mr. Shenoy was pointing out that, not much in the way for four-wheelers, the passenger vehicles, and we see the reaction in stock price as well. Tata Motors, Mahindra and Mahindra, M&M, and both of them, the stocks declined by about 3%, and we were hoping that there would be some, the government would take a page from UP government's page and introduce a hybrid or maybe get away with the registration tax for hybrid vehicles and make the transition to green mobility technology agnostic. But that did not happen, and we are seeing that reaction in the stock price as well.
Right, and Dilip here, and Rakesh, I'd like to get your view on as well. The fact of the matter is that the penetration rate for e-mobility in two-wheelers and three-wheelers is fairly high in India. It is cars where, the penetration rate for three-wheelers in India is 50%, whereas for cars it's 1.8%. So the problem is actually the four-wheelers and not the three-wheelers, isn't it, Rakesh ji?
Yeah, obviously it's in the transition stage that we're moving to the green energy and mobility. So two-wheelers and three-wheelers have been the first pick. Obviously, there has to be a room to bring in the four-wheelers as well. I think the industry also is divided between pure play EVs, hybrids, and other forms of fuels. So that landscape is changing. So in that sense, UP government's move to do hybrids incentive will go and a step forward, but not necessarily there is need for a national hybrid scheme. There is need for a national emission policy which is green in its nature, which is positive in its nature, but not necessarily favoring one particular perspective. Before I get to the specifics of the budget, I thought it's important to make a few political points as well. There's this whole debate about whether good politics makes bad economics, good economics makes bad politics. I think this budget is purely cast in the norm of, good politics makes good economics, because this is the first budget in the coalition era that the Prime Minister Modi is leading. So in that sense, they put a lot of stress on, the coalition, era, which is a reality now, and that could be very easily reflected in the budget, though it has its own consequences, like one of our panelists was mentioning, the fiscal challenges. But I think the outlays have not been outlandish. In that sense, these are fairly reasonable outlays, and the demand for special category has obviously been ruled out for now. So in the first big political point is that this budget does take cognizance of the coalition era. The two key partners, Andhra Pradesh and Bihar, have found reasonably fair attraction in the speech. What will it lead to? It will lead to many more states in the India bloc also asking for a level playing field and seeking such kind of incentives. The other core political point to my mind, Krishna, is that there is bound to be the opposition saying that there is nothing much in the budget, and they could possibly come back and say that the key scheme that we talked about in terms of the internship in our election pitch has found favor with this particular budget. So in that sense, there could be merit in the opposition saying that finally this government, which was in denial, has come round and found merit in our charge that there is distress on the ground when it comes to jobs.
Right.
And from a BJP's perspective, its well-wishers would argue that had this budget been presented a year ago, then probably the results would have been different. So that's what. And lastly, the political point is that for a change, Nirmala Sitharaman began this time by identifying middle class as a key priority area. Unfortunately, to my mind, as all of you have been pointing out, the tax area, which is key concern area for the middle class, continues to be a laggard. And I would say that middle class continues to be a political orphan.
Okay. We're talking so much of politics on a day of economics. So let's quickly then listen to some of the political reactions that have been coming in on Budget 2024.
This budget has more or less copied the Congress Constitution, Congress Manifesto, and main important thing is about the Yuva Nidhi, which Rahul Gandhi ji has in the Bharat Jodo Nyaya Yatra, he has evolved it, and he promised that through the apprenticeship for the first year of the youngsters who are completing, we will give 10 crore jobs to those youngsters with a 8,500 rupees monthly stipend. This government has announced it as 5,000 rupees per youngster who is going to be in the apprenticeship. This shows that this government has copied the ideas of Mr. Rahul Gandhi ji.
ये यूनियन बजट जो 2024-25 का पेश किया गया था, एक तरीके से सबके लिए ड्रीम बजट है, सब सेक्शन के लिए और खास करके युवाओं के लिए और महिलाओं के लिए। इससे जो इंफ्रास्ट्रक्चर, रिकॉर्ड नंबर इंफ्रास्ट्रक्चर का जो एलोकेशन हुआ है, कैपिटल एक्सपेंडिचर का 11 लाख करोड़ से भी ज़्यादा कैपिटल एक्सपेंडिचर, ये ऐतिहासिक है। और अलग अलग राज्यों के लिए जिस प्रकार से खास करके जो ईस्टर्न इंडिया जो इकोनॉमी के लिए थोड़ा सा पिछड़ा है, बिहार, झारखंड, वेस्ट बंगाल, उड़ीसा, आंध्र प्रदेश और साथ साथ में नॉर्थ ईस्ट के लिए जो भी आज बजट में अनाउंसमेंट हुआ है, मुझे लगता है कि ये ईस्टर्न इंडिया एक इकोनॉमिक हब के रूप में उभर के आएगा और बहुत बड़ा इंफ्रास्ट्रक्चर का काम अभी बिहार से लेकर के झारखंड, आंध्र प्रदेश और वेस्ट बंगाल, नॉर्थ ईस्ट का होने वाला है। और
अंग्रेजी में कहूँ, आपको विरोध नहीं? It's an underwhelming budget. I didn't hear anything about the key issues facing the common people of our country. There was no mention of Manrega. There was no mention or insufficient mention of any steps taken to improve the income of the ordinary person. We have seen far too little from the government when it comes to taking care of the severe income disparities in this country. Job creation, there was a token gesture made towards that, but unfortunately very short on specifics. And I personally welcome only one provision, which is this abolition of the tax on angel investors. I myself had recommended it to Shri Arun Jaitley more than 5 years ago. Finally, it has happened. I'm glad that's being done. We must have more investment coming in to generate more jobs. But otherwise, I find very little in terms of any good creative ideas when it comes to generating more jobs in our economy and more opportunities for young people and for those at the bottom of the pyramid to improve their incomes. We will have to study the budget in much more detail, but I would say it's an underwhelming budget.
देखिए, इसको सिर्फ बिहार से मत देखिए। मैं एक भारतीय के रूप में बहुत प्रसन्न हूँ। रोजगार के नए अवसर बन रहे हैं कि नहीं, करोड़ों में, स्किलिंग में, और बड़ी-बड़ी कंपनियों में आपको रखना है नौजवानों को स्टाइपेंड पर। तो भारत सरकार भी देखिए कितनी बड़ी बात है। किसानों को नए आयाम खोलता है कि नहीं, इंफ्रास्ट्रक्चर को बढ़ाता है कि नहीं, देश की चिंता कर रहे हैं। मुद्रा योजना को 10 से 20 लाख उसकी सीमा बढ़ाई गई कि नहीं, कितने को फायदा होगा। और अगर पूरे बाढ़ के लिए जो नेपाल से नदी आती है चिंता की जा रही है, तो देश की चिंता है। बिहार प्रभावित होता है, पूरी उत्तर प्रदेश प्रभावित होता है। आप चिंता मत करिए, नालंदा में देश के लोग आते हैं, बोधगया में दुनिया के लोग आते हैं, नालंदा में दुनिया के लोग आते हैं, जो अपना विष्णुपद मंदिर है सभी उसमें आते हैं। तो ये चीजें जब और विकसित होंगी, ये बजट विकसित भारत का प्रभावी रोड मैप तैयार करता है। प्रधानमंत्री का अभिनंदन, निर्मला जी का।
And the roadmap to Viksit Bharat, that is of course the political reaction coming in as far as the ruling party is concerned. The budget is out. We're reading the fine prints. Well, the final budget is yet to be received, but we are discussing, of course, what has come out of the budgetary speech of Nirmala Sitharaman. Joining us on the show is Shweta Saini. She's an agri-economist. Shweta, thank you very much for taking time out. What are you making of the kind of provisions that budget has made for agri and allied sector to the tune of about 1.52 lakh crore rupees? Is that in line with your estimation?
I'll start with 2 points, and I think those are good acknowledgements by the budget to begin with. One is the cooperative federalism acknowledged again. So they're acknowledging that the states have to come on board, and that is coming about across the speech. So that is a very good sign. Unlike the narrative that has been running that now we are an agriculture surplus country and therefore marketing is our focus, we've been saying that how production has to be the refocus, and FM started with that. So these are very big things. We had expected that pulses and oilseeds will have a focus, and interestingly, from 1 lakh crore, the allocation in the budget has increased to 10,000 crores. That's a phenomenal allocation of budgets. This is in line with what our expectations were. Another thing that we'd expected is the government is doing a lot on digital, and they have very rightly assessed the acknowledgement to triangulate all these databases. So there are a lot of databases with the government, and she's very nicely put across that the data will be collected in a digital crop survey for 400 districts. So that is a very good sign. They will triangulate it, very good sign. We know ethanol is important, and therefore sugar is going to be playing a very important role. So structurally, the way the support to sugar industry also, we've yet to read the fine print, but it appears that now more funds for the sugar industry are going for ethanol production capacity. That's a very big deal. Two things that I think is kind of, I'm still trying to understand is food subsidy is lower this year. And second, we were thinking PM Kisan 6,000 rupees, if we adjust for inflation, will come to about 7,700 approximately per farmer, and that adjustment would have happened, so that's really not happened. These are quick points. Of course, I can take more questions.
All right.
We have a soundbite coming in of Sanjeev Puri, Managing Director of ITC. Let's quickly listen to what Sanjeev Puri had to say.
We don't have that reaction.
We don't have the reaction as we'll get the reaction so soon.
So coming back to you, Shweta, apart from agri, there's also an increased thrust and focus on rural development, a provision of 2.66 lakh crore rupees being made for rural infrastructure. Agri-infrastructure is something that we've talked about. Apart from the fact the government is now focusing on high-yielding crop, climate-resilient varieties of crop, digital public infrastructure and implementation of that in agri. The fact that there is an increased focus on rural infrastructure, the provision has been increased from 1.66 lakh crore, Krishna, if I'm not wrong, to 2.66 lakh crore rupees. That's literally almost double, 50%.
That is more than a 50% increase in allocation for rural and agri sector.
Are you happy with that number?
I mean, there is no dispute that infrastructural deficits have plagued the value chains, and therefore investments along the value chain, starting from seed to post-harvest to storage to logistics, was important. I think the focus has been correctly there. We've seen horticulture crops suffer largely, and therefore the investments along the chain, particularly in the scheme which is focused on Eastern Indian states of Bihar, I think is very phenomenal, was a requirement at the stage today, and this would bolster incomes increases and support also. So I think it's a very welcome move and a much desired impetus they should give.
Rakesh, that is something, for example, the first thing the Prime Minister Modi did after taking office for the record third term is announce the 17th installment of the PM Kisan Samman Nidhi. If I were to talk about it, that set the tone really for what the budget is going to be about, and the budget, following through with that.
But, just to add to that question, there's been no increase and adjustment to inflation in PM Kisan, and that should have been now. It's been about 5 years. No adjustment to inflation. It constitutes about 3 to 5% of the total income for farmers.
Right.
About time that number should have been up, but that hasn't happened.
Yeah,
there was talk that it was going to be from 6,000 to 8,000, but that hasn't really happened.
Looking at budgets over the decades, one of us, you would realize that budget is not the repository of all key economic decisions. In fact, it's on the contrary. Most of the big decisions, including corporate tax cuts last time, were announced outside of the budget. So she's right that there was an expectation that it should go up, and there is still an expectation. And to my mind, it will happen probably outside of the budget, and it will be a big ticket announcement, like you mentioned, Krishna, that the first announcement that the PM did about the installment release as part of his new government was the Kisan, announcement. So in that sense, that 9,000, 6 to 9, whether 6 to 7, 6 to 8, that figure the government would compute, would happen, I think, sooner than later. Okay. Second point on agriculture, to my mind, there have been a positive output on improving productivity, but it's easier said than done. We have seen that, all these years, respective governments have tried to bring about a massive change, a transformation story in agriculture. So it's not only a question of outlays. To my mind, 3 or 4 key challenges face Indian agriculture. One is this, land holding is getting smaller and smaller by the day. How do we address that? That's part one. Part two is that there's very little investments being done by the government or by the private sector in actually R&D for agriculture. That's, another major area. Third, technological intervention also militates against the societal mindset. So if I've been growing potatoes all my life, my grandparents have been doing it, I would not shift the crop and do something else. Right. So in that sense, technology has to play a big role. Digitization is one part of it, but technology on the ground at the farmland is something that we have to really invest in a big way. That also includes the supply chain management in terms of, bringing about a larger shelf life for the produce. And fourth is that, we cannot wish away the need to bring in markets. We did bring about a massive reforms in the farm bill, but probably they were not thought through in terms of consultative processes. But that does not obviate the need from actually going to the market leg as well.
Right.
Finally, I think the private sector has to also come in, as have the states to come in investing deeply in agriculture. It cannot be a pure play government role to alleviate the agricultural distress.
All right, and with respect to reforms in the agri sector, the 3 farm laws were expected to bring about that reform, but notwithstanding that the consultative process did not go through, they had to be withdrawn. We were expecting some sort of policy framework or direction with respect to reforms in agri sector. We don't see those reforms, at least in this budget, Shweta.
You're absolutely correct. I mean, one acknowledgement that Economic Survey did yesterday was that till before the survey came out, we knew 86% of our land holdings were small and marginal. Yesterday, the number, it has increased to 89%. So having said this, we know that the farmers are getting smaller over time, but there is a dire need to also look at how the Indian farmers have been changing over time. For example, I just heard the panelist here talk about how the farmers have inertia in their cropping pattern. The Indian farmer today is really smart. I go to the extent of saying that probably farmers in Bihar are more informed than farmers in Punjab. It is the policy that has actually pushed them to, for example, not diversifying away from rice and wheat. We've been saying it that every time there is access to water, farmers shift to paddy. So therefore, there is a requirement for the policy to really go from top to down and rethink if it is pulses or oilseeds that they need versus if they need more rice and wheat. So I can sense from at least the way the allocations have been done under PM Asha and Price Stability Fund that pulses and oilseeds rightfully are a focus area for them. There has been announcement by also Mr. Amit Shah that they will be procuring pulses. So at least to that extent, they've catered to wanting to diversify. And that's a welcome change because it will be more than just a promise. But I would agree that farmers are getting smaller. Having said this, small land holding does not necessarily imply lower income. You need them to diversify to high value agriculture. Second thing, there has been a focus on allied activities. Marine feed has been made cheaper. So inland fishery is made to be grown. So I think there are signals, but we'll have to wait and see how it pans out. But I think the signals are there. Climate resilience and R&D has to be focused, and they've said it. Another thing that I will add is that amongst the speech, there is mention about policy documents, mention about research and experts finding out a roadmap. So that's a good sign. They are willing to plan, they are willing to preempt situations. And given that we interact with the governments also, we see a greater appetite to understanding what is happening on the ground. So I think we see overall good signals. And of course, it is just a work in progress. We know for sure announcements come out of budget. We'll have to wait and see. Thank you.
Yeah, one last part on agriculture before we move to sectors. Shweta and Krishna, what is happening is that the government, whether this government or the earlier governments, they need to be, there's a very ad hoc approach about processing and having a policy framework for agri-food imports and exports. So there is absolutely a political connect there. We have had, a long history of importing when, onion prices go high because it's a politically sensitive issue. We need to have a time frame oriented policy so that the farmers on the ground know exactly, suddenly we export ban of onions or cotton and imports are done in a very ad hoc manner. So that policy framework, this government must look at it and understand the impact it is having, the adverse impact it is having on the ground when it comes to farmers actually planning their yields. In that sense, that's also a key component of agriculture reforms.
All right, so exports of non-basmati white rice or wheat for that matter, those market interventions need to be thought through. Shweta Saini, thank you very much for taking time out, for joining us on this very important day on agri. It does look like at least, experts are happy with the kind of provisioning the budget has made for both agri as well as rural economy.
Oh, definitely. And, agriculture and farm distress has been a topic that has been very important for this government to address. And clearly the budget, ensuring in terms of putting the money where the mouth is, literally in terms of increasing allocations. We have some more special guests joining us on this broadcast here on News 9 Live. We have Dikshu C. Kukreja, Managing Principal Architect, CP Kukreja Architects joining us. We also have Shailesh Pathak, Infrastructure and Urban Development Expert joining us. Thank you both of you gentlemen for taking time out to be with us. I'm going to begin with Dikshu. Dikshu, your initial thoughts on the budget. What stood out for you?
Well, I think it's a budget which is very progressive. I think it definitely reflects what one is talking about, a Viksit Bharat in the making, and the kind of, I would say, 360-degree or all perspective announcements that have come, particularly when it's related to urban planning, cities, providing better infrastructure in cities to do with more homes, 1 million more homes to be created, or 10 million homes, for the urban poor. I think all these are very progressive announcements that have been made in the budget. I also find it extremely positive to see that there's encouragement for the youth. I think many times that sector does tend to get overlooked in our previous budgets. Here I see that the idea of encouraging youth to join the workforce, providing them 1 month's salary on joining as towards their provident fund, etc., etc. These are all very progressive moves. Even looking at the MSME sector, I think is a very important announcement that has been made in the budget. So overall, I would give it a thumbs up in the sense of seeing all-round development of the country across different sectors, both rural and urban. I think this is very progressive, the announcements so far that have come to light for me in this budget.
Okay. Shailesh, your quick reaction on the kind of capex provisioning this government has made. It is continuing with what the interim government announced at 11.11 lakh crore rupees. That is going to be the money towards capital expenditure that the budget has allocated. Are you happy with that number? There's no increase in that number, but that in itself was an 11% increase from the budget last year.
Indeed, very rightly said. If you really look at 11.11 lakh crore, out of a total budget size of 48.21 lakh crores, that's a very large number. And if you look at it as proportional GDP, it's 3.4. But what I was really impressed with was the continuity over the last 11 years. I've been tracking budgets for a long time, and budget speeches have never spelled out the critical importance of urban development and cities for economic growth as growth hubs. Just to leave you with one number, they're talking about 14 cities with more than 30 lakh population and launching transit-oriented development schemes in all these 14 cities. These 14 cities contribute more than half of India's GDP. So cities matter.
Cities matter.
Okay,
They do
and in fact, the 9 priorities that Finance Minister Nirmala Sitharaman alluded to, urban development and infrastructure are clearly spelt out as a key area. Shailesh, you want to add to that?
Yes. So I was looking at the list of priorities, and urban development actually came at number 5, energy transition at number 6, and infrastructure at number 7. I would say all 9 priorities are things that have been the focus of this government and earlier governments over the last many years. But the quality of execution and implementation, particularly in infrastructure, and in urban development, energy transition has been stupendous over the last few years. That's what the other thing to look at is water supply, rental housing, and urban housing. I think this comprehensive relook at how our cities can become more business friendly, more resident friendly, is most welcome.
And increasing the number of cities in the first place, isn't it? Because jobs are being made in clusters, and creating those job clusters is another thing that the budget will do, isn't it, Dikshu?
May I just add here? I don't think it's about increasing the number of cities. In fact, one of the things that have been specifically mentioned is brownfield redevelopment of cities.
Okay.
And I am firmly in the camp of new cities take forever to develop and yield job opportunities. It's much better to make existing cities more efficient and effective.
Dikshu?
So, as a passionate urbanist, I would also say I am gloating over the fact that attention is being paid increasingly so, and particularly in this budget, on cities. That is the need of the hour. I think as a finance minister, allocating funds is a very important step in that direction. But thereafter, the aspect of execution and how this money in a timely manner, in a very clear, convincing, fast-track manner is in a balanced way spread across in the city's livability index. How do we improve the livability of these cities is very important. So how that gets spent becomes very critical. But of course, first things first, the announcement that there is this kind of money spent happening towards cities and urban development is very positive. I think this is the need of the hour. I would only say that this now must be very well integrated and closely knit with the aspect of environment, because let's remember, all our cities, and we see that on your news channels as well, are reeling under climate change. Therefore, it's important that we look at whether it's the air quality, the water scarcity, and all other aspects of urban challenges or civic issues that we keep coming to our light, and as citizens we face day in, day out. How that gets integrated also is very important, because you can't just keep loading cities with more development. The development has to be done in the right model and the right framework. That is equally important. Yes, that discussion can happen on another day, but I'm just highlighting here that the first step of paying that attention towards city and spending towards cities, I definitely would compliment that very much.
All right. And gentlemen, we were talking about affordable housing right before the start of the budget speech. There is some mention of that. So of the 10 lakh crore which has been allocated for urban housing, about 2.25 lakh crore in the next 5 years would be central assistance towards interest subsidy to facilitate loans at an affordable rate. Essentially, affordable housing, focus and thrust on making it essential for people to at least get some roof over their head, and especially for urban poor. So there is a focus on urban poor there. Government in a way acknowledging that there is a problem here with respect to affordable housing and something needs to be done. Rakesh?
Absolutely. I mean, housing, Roti Kapda Makan, the proverbial film, that still is a reality. I was looking at Manmohan Singh's historic budget. He talked about the inequity, and there is need to, remove that. So many decades down the line, we still have that challenge. So India is essentially a poor country. There are no overnight solutions. So urban housing, rural housing are challenges that need long-term solutions. I have a couple of questions for both our esteemed panelists. One is that, most of the challenges for our big ticket metros, mega metros, is that, migration, and, it's because of work labor related issues. Is there time now finally to do the unpopular decision of putting a cap on that, doing a moratorium on that? Because otherwise, this issue of development, we have to scale development down to see that these cities become durable. That's question number one. Little controversial, I would say.
Very controversial.
Second is that this long-term capital gains tax. It may not be as attractive now with the new change that has been announced today to invest in a second house to gain of to partake of the capital gains tax challenge. So, do we see a slowdown in that housing activity in the realty market? That's a question.
Dikshu, you were raising your hand.
Definitely like to respond to that very pertinent issue that has just been raised about urban migration. I think that's a very, very critical aspect for our country, and the sooner we recognize it, the better. In this case, being a democracy and the fact that every citizen has an equal right towards their prosperity, towards meeting their aspirations and dreams, I don't think there can be ever a moratorium on or a cap on the population of a city. However, having said that, My theory on this, and I've been writing about this for a while now and talking about it, is that we need to create suitable alternatives. And for me, the solution lies in balanced development. When we start creating opportunities in those tier 2, tier 3 cities, in our towns, we have over 5,000 towns in this country. When we can start creating those kind of opportunities for the citizens in those areas, automatically you are controlling urban migration. The need is that when you don't have those basic facilities or a means of livelihood in where you live, it could be the village or town or a very small city, then you choose to do migration. That's one side of the story. The other side is, of course, providing good allocation of infrastructure in these smaller areas, in these smaller cities, in towns, so that they become then centers for private investment also to happen. They could become educational hubs, tourism hubs, research hubs, etc., etc. And I think that is where we need to start focusing. Otherwise, there's no doubt that our cities are choking, and the more money you put into them, that money is really literally the way in Delhi we see the money being pumped into Yamuna, but no change ever happening. Same way the money is getting drowned if we put into cities and do not solve these larger systemic challenges that our cities are facing, like the one you've talked about, urban migration.
Okay.
So let me give a little perspective here. All of you went to school in some city or the other. From that time, it has doubled in size. And in the next 25 years, the same city will double in size from 2024. So I would be very hesitant to advocate a Chinese hookah kind of system where migrants to cities don't have benefits. In fact, the easy way to resolve this situation is give migrants the right to join the electoral roll of the city that they migrate to, which is currently very difficult. And maybe 5 years down the line, allow anyone with an Aadhaar link to decide which electoral constituency she or he would like to be in. That will actually give the migrant a political voice, and all the MLAs and MPs will start bothering about them. We have to make sure that migrants have an easy landing when they arrive at the city. And that's something that some of us are working on. On your second question, Rakesh, I think the move towards financialization of savings in India is most welcome. This point about, can you buy 73 apartments and speculate in real estate is probably getting less. And real estate, remember, has a special tax benefit because there is a Section 54 EC that allows you to reduce that burden of tax on your capital gains. So hopefully speculation in real estate will come down, but affordable housing, and I've worked on affordable housing models, is largely prohibitive because of the land cost. So some of us, there was a mention in titles, urban land and rural land titles. Some of us are working towards reducing the price of land itself by innovative mechanisms. Thanks.
Just to clarify, we were not advocating a cap on migration. I was looking at some out-of-box solutions. So
fair enough.
Hopefully not. I think most of us happen to be at least first-generation migrants to Delhi. And if there were to be enough and more opportunities in our home cities, I think we wouldn't be here. All of us would love to be back as to where we came from. But, yes, you were saying.
Yeah, just wanted to take the conversation on creation of infrastructure to two specific things that got announced in the budget. Rakesh always talks about the political context in which his budget is arriving in, and true to that, you see one huge allocation for the creation of a brand new capital city, Dikshu, which is called Amaravati, and then of course the other is for the allocation to the state of Bihar as well. I just want to understand, how did you view these? Fair enough, at the end of the day, we are developing a brand new city which comes with so many advantages. You develop new infrastructure, more job creation, and more urban living spaces, if I may. But how did you view these announcements?
I would say in a large, diverse, complex country such as ours, with the kind of population that we have, 1/6 literally of the world's population is living in this country, and the land mass is what, 2.7% or less than 3% is the overall land mass. So of course we have a density issue, we have challenges of urban development, and for that there cannot be just one solution fits all. I would say a complete overall approach and in this case, the idea of announcing a greenfield city is also very welcome, because while I'm not a complete advocate for greenfield cities, and I think brownfield development has more responsibility attached to it, having said that, there are areas, particularly in a situation like Andhra, which is a new state in that sense, or bifurcated state, it does not have the infrastructure which is commensurate for a state capital. In that case, to develop a greenfield city, by all means, I think is a welcome step. It also gives us lots of opportunities of creating a model which the world can look up and see of how a greenfield new city can be done. I think we lost those opportunities when we did the Naya Raipur and even the new part of Ranchi when Jharkhand became a new state. So this is yet another an opportunity which we should not lose, that we create a city of Amravati which the world can see is one of the most responsibly designed from a sustainable design point of view city, which has an economic, equitable development attached to it, a development which is with nature, not at the cost of nature. So I think there are a lot of opportunities, and of course, there is a need attached to it as well.
All right. Shailesh, there is also, and perhaps not for the first time, a mention of an all-round development for eastern region of the country. There is a proposal for road connectivity project. There is also a proposal for a two-lane bridge over Ganga in Buxar at a total cost of 26,000 crore rupees. I think about time that there is some focus on northeastern region.
In fact, Purvodaya was there in the BJP manifesto also. And today, the 5 states that will be part of it, the ascent of the East are specifically mentioned. But I just wanted to take that question on Bihar and infrastructure. Look, Bihar has 1/5 the per capita income of Maharashtra. Any infrastructure development in Bihar is good. So what are the 3 major infrastructure projects that were announced today? One is Patna to Purnia, which is broadly an expressway with north of the Ganga. The other is Buxar to Bhagalpur, which I assume will be...
hate to interrupt you. We will take your views on Bihar. But for now, we have Prime Minister Narendra Modi speaking. Let's cut across live and listen.
मैं सभी देशवासियों को बधाई देता हूं। वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम बहुत बहुत बधाई की पात्र है। साथियों, ये बजट समाज के हर वर्ग को शक्ति देने वाला बजट है। ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है। पिछले 10 वर्षों में 25 करोड़ लोग गरीबी से बाहर निकले हैं। ये जो न्यू मिडिल क्लास बना है, यह बजट उनके सशक्तिकरण की निरंतरता का बजट है। इन नौजवानों को अनगिनत नए अवसर देने वाला बजट है। इस बजट से शिक्षा और स्किल को नई स्केल मिलेगी। ये मिडिल क्लास को नई ताकत देने वाला बजट है। ये जनजातीय समाज, दलित, पिछड़ों को सशक्त करने की मजबूत योजनाओं के साथ आया है। इस बजट से महिलाओं की आर्थिक भागीदारी सुनिश्चित करने में मदद मिलेगी। इस बजट से छोटे व्यापारियों, एमएसएमईज को, यानी कि लघु उद्योगों का, उसकी प्रगति का नया रास्ता मिलेगा। बजट में मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है। इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी। साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी। स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे। उनके सामने संभावनाओं के नए द्वार खुलेंगे। हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है। इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है। इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा। साथियों, हम सब लोग मिलकर भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाएंगे। देश का एमएसएमई सेक्टर मध्यम वर्ग से जुड़ा हुआ है। एक प्रकार से एमएसएमई सेक्टर की ओनरशिप मध्यम वर्ग ही है और इसी सेक्टर से गरीबों को ज्यादा से ज्यादा रोजगार भी मिलता है। छोटे उद्योगों की बड़ी ताकत, उस दिशा में हमारा अहम कदम है। इस बजट में एमएसएमईज के लिए ईज ऑफ क्रेडिट बढ़ाने वाली नई योजना का ऐलान किया गया है। मैन्युफैक्चरिंग और एक्सपोर्ट्स इकोसिस्टम को हर जिले तक ले जाने के लिए बजट में अहम घोषणा की गई है। ई कॉमर्स, एक्सपोर्ट हब्स और फूड क्वालिटी टेस्टिंग के लिए 100 यूनिट्स, ऐसे कदमों से वन डिस्ट्रिक्ट वन प्रोडक्ट अभियान को गति मिलेगी। साथियों, ये बजट हमारे स्टार्टअप्स के लिए, इनोवेशन इकोसिस्टम के लिए ढेर सारे नए अवसर लेकर आया है। स्पेस इकोनॉमी को बढ़ावा देने के लिए 1000 करोड़ रुपए का फंड हो, एंजल टैक्स हटाने का फैसला हो, ऐसे कई सारे कदम इस बजट में उठाए गए हैं। साथियों, रिकॉर्ड हाई कैपेक्स इकोनॉमी का एक ड्राइविंग फोर्स बनेगा। 12 नए इंडस्ट्रियल नोड्स, देश में नए सैटेलाइट टाउन्स का विकास और 14 बड़े शहरों के लिए ट्रांजिट प्लान्स, इससे देश में नए इकोनॉमिक हब विकसित होंगे और बहुत बड़ी संख्या में नए रोजगार बनेंगे। साथियों, आज डिफेंस एक्सपोर्ट्स रिकॉर्ड स्तर पर है। इस बजट में डिफेंस सेक्टर को आत्मनिर्भर बनाने के लिए अनेक प्रावधान किए गए हैं। आज पूरी दुनिया में भारत के प्रति आकर्षण बढ़ा है और भारत में टूरिज्म के क्षेत्र में नई संभावनाएं बनी हैं। टूरिज्म क्षेत्र गरीब और मध्यम वर्ग के लिए कई अवसर लेके आता है। इस बजट में टूरिज्म क्षेत्र पर भी विशेष बल दिया गया है। साथियों, एनडीए सरकार ने पिछले 10 साल में ये सुनिश्चित किया है कि गरीब और मध्यम वर्ग को लगातार टैक्स से राहत मिलती रहे। इस बजट में भी इनकम टैक्स में कटौती और स्टैंडर्ड डिडक्शन में भी वृद्धि का फैसला लिया गया है। टीडीएस के नियमों को भी सरल किया गया है। इन कदमों से हर टैक्स पेयर को अतिरिक्त बचत होने वाली है। साथियों, देश के विकास के लिए भारत के पूर्वी क्षेत्र का संपूर्ण विकास पूर्वोदय के विजन द्वारा हमारे इस अभियान को नई गति, नई ऊर्जा मिलेगी। हम पूर्वी भारत में कई महत्वपूर्ण इंफ्रास्ट्रक्चर जैसे हाईवेज, वाटर प्रोजेक्ट्स और पावर प्रोजेक्ट्स का निर्माण कर विकास को नई गति देंगे। साथियों, इस बजट का एक बहुत बड़ा फोकस देश के किसान है। अन्न भंडारण के लिए दुनिया की सबसे बड़ी स्कीम के बाद अब हम वेजिटेबल प्रोडक्शन क्लस्टर्स बनाने जा रहे हैं। इससे एक और छोटे किसानों को फल, सब्जियों, अन्य उपज के लिए नए बाजार मिलेंगे, बेहतर दाम मिलेंगे। तो दूसरी ओर हमारे मध्यम वर्ग के लिए फल, सब्जियों की उपलब्धता बढ़ेगी और परिवार के लिए पोषण भी सुनिश्चित होगा। कृषि क्षेत्र में भारत का आत्मनिर्भर बनना समय की मांग है। इसलिए दलहन, तिलहन की पैदावार बढ़ाने के लिए किसानों को मदद की घोषणा की गई है। साथियों, देश में गरीबी समाप्त हो, गरीब का सशक्तिकरण हो, इस दिशा में भी आज के बजट में प्रमुख घोषणाएं की गई है। गरीबों के लिए 3 करोड़ नए घर बनाना तय हुआ है। जनजातीय उन्नत ग्राम अभियान सैचुरेशन अप्रोच के साथ 5 करोड़ आदिवासी परिवारों को मूलभूत सुविधाओं से जोड़ा जाएगा। इसके अलावा ग्राम सड़क योजना 25,000 नए ग्रामीण क्षेत्रों को ऑल वेदर रोड से जोड़ेगी। इसका लाभ देश के सभी राज्यों के दूर दराज गांवों को मिलेगा। साथियों, आज का बजट नए अवसर, नई ऊर्जा लेकर आया है। ये ढेर सारे नए रोजगार, स्वरोजगार के अवसर लेकर आया है। ये बेटर ग्रोथ और ब्राइट फ्यूचर लेकर आया है। आज का बजट भारत को दुनिया की तीसरी सबसे बड़ी आर्थिक ताकत बनाने के उस पूरी प्रक्रिया में कैटलिस्ट का काम करेगा। विकसित भारत की एक ठोस नींव रखेगा। सभी देशवासियों को बहुत बहुत शुभकामनाएं।
Prime Minister Narendra Modi's reaction there on the budget, saying it's a growth-oriented budget at the end of the day, and something that sort of paves the way for the Viksit Bharat that we've been talking about, isn't it, Shweta?
Yes, absolutely. In fact, new urja, new disha, a new direction, and perhaps renewed energy. That is what the government and Prime Minister is saying at the moment on the back of the budget announcements. But sticking on with, they say political is economics and economics is political. In a budget, nothing is really economics only. And this budget has really also gone on to play with what is happened in the center, at the center, and that is a fractured mandate, essentially trying to keep all the allies happy, especially Andhra and Bihar. A total allocation, albeit for infrastructure development, for development of roads in Bihar and in Andhra for the new capital, a total expenditure of about 41,000 crore rupees. Extremely substantial amount there, Karthik.
Yeah, absolutely. I mean, if you look at it in context, 26,000 crore rupees for Bihar and 15,000 crore rupees for the completion of the development of Amravati, now the sole capital of Andhra Pradesh. So that's about 41,000 crore rupees in allocation. To put it in context, while this allocation is not just for the year, I believe it is going to be extended for a few years. But if you were to look at this number in context, this is pretty much equal to the total fiscal deficit in monetary terms of India. So at some stage, while the special state status has not been given to Andhra and Bihar, it has pretty much given it without giving it. Right?
Very special allocation.
So it's special allocation. Now, I think, specifically on Bihar, the four key cities that really emerged from Finance Minister Nirmala Sitharaman's speech were Gaya, Bodh Gaya, and both these cities are now going to be part of the Kashi Vishwanath project. So that is solid infrastructure redeployment and funds redeployment towards ensuring that the tourism, the religious tourism circuit now also includes Gaya and Bodh Gaya, both in Bihar. In addition to this, I think, the focus on Rajgir and the focus on Nalanda University and the tourism opportunities that would come up in those locations as well is something that Finance Minister focused on. So all in all, 26,000 crore rupees by way of infrastructure development and inclusion of Bihar in the tourism circuit is pretty much giving it funds which would have perhaps been akin to the special status had Bihar got one. So the Finance Minister has given special status without really giving it. Even Andhra Pradesh, for that matter, Chandrababu Naidu, the newly sworn in Chief Minister, had come and, I wouldn't say the term lobbied while saying it, like the special status, but had come and tried to influence, both Finance Minister as well as Prime Minister Modi to have this allocation of 15,000 crore rupees for completing the Amravati project, which has been hanging in balance now for the last 5 years. So, in fact, 10 years,
really
because it was 2014 when
Right.
Amravati was actually announced to be the capital, could not be completed. So, 15,000 crore rupees is what Chandrababu Naidu had asked for, and 15,000 crore rupees is what Chandrababu Naidu gets. So, no
15 plus
negotiation
seats
there.
that they have in the
Absolutely,
Lok Sabha.
absolutely, right.
The numbers are playing correct there as far as Andhra Pradesh is concerned.
Right.
I believe joining us on the show is Hina Kushalani she's from EY, she's a partner climate change and sustainability. Hina, thank you very much for taking time out. Climate change and sustainability, of course, continues to be one of the key priority areas, and it features relatively up in the list, come to think of it, energy security, and a part of, in fact, everything that's come about from energy security to infrastructure. There is a mention of climate change, there is a mention of what climate change can do to agri, to urban infrastructure. What are you making of what was the key takeaway for you from the budget?
So thanks for having me. And, I want to start with what, Krishna has been asking pretty much everybody before me is, how do you rate the budget? I would, frankly, from a climate change and sustainability angle, I would rate this budget around 5, because I think, from an idealistic perspective, there's quite a bit happening, you're right. Pretty much all the 9 priority sectors, there is some sort of a sustainability angle, and sustainability is not just the environment, right? It's also social. So it's that ways, yes, it does hit all the right notes, but is it doing enough is the question. I think there are a lot of budget allocations towards, infrastructure, towards climate resilient crops, towards agriculture specifically, everywhere that we're suffering in India as a country. See, India is going to be a country that's going to see major impact from climate change. I think we already have starting to see. There are projections that India would start losing at least 3% or 5% of its GDP to climate change if we don't pay attention to climate mitigation and resilience, right? Or adaptation in some cases. Right. So from that perspective, the fact that we're investing in agriculture, the fact that there's a conversation on climate resilient crops is fantastic. But when it comes to 11.11 lakh crores being allocated for infrastructure, that we're focusing on urban housing, but there is no conversation. I think climate needs to be integrated in every single aspect of development India focuses on between now and 2070. Okay. I felt that currently the budget did fall short on those fronts, like the fact that 2.66 lakhs on rural infrastructure. How can we make sure that pretty much everything that's being invested is resilient to climate change? The infrastructure, the bridges that are being built, the ports, I mean, pretty much everything along the, so there was no mention of the fact that everything that we're investing in, the taxpayer money that's being invested as a part of this budget will be resilient to climate change, because climate change is a threat to everything, right? I mean, you name it, urban development, energy security. I mean, just investing in renewables and energy security is not going to be enough. It's great that we did talk about finally center support for wastewater and sewage treatment in 100 cities. I think that's definitely a space with India's cities being so crowded. It's certainly an area that there's not been a lot of private money that's been able to flow. I mean, we have, when it comes to waste and water infrastructure, India is an emerging economy, is one of, is lagging behind. And that was important, but I think we'll have to await a lot more details as to how this is going to be bankable, because so far, a lot of solid waste management projects have not been bankable at all. So how do we, I think we'll have to wait for a lot more details.
Hina, if I can just step in for a minute. Hi, thanks for joining us. Karthik here. Just want to get your views, Hina, on nuclear energy. That has been a focus of the budget this time around. I think the entire transformation of green energy that that India has been wanting to focus on. Nuclear energy, I think, at some level draws that balance where it's, it's definitely better for the climate and not as as complex and as difficult to produce as other renewable sources are. So in some sense, that green push by way of nuclear energy does seem to have made it to the finance minister's speech this time.
Absolutely. I think, and frankly, I think nuclear energy has been a debate globally in terms of the potential versus green and, so many other aspects. I think in Europe, there's been a lot of investments going on. I think the idea, Karthik, that nuclear energy has come from diversification of energy, in India. And it's important to not put all our eggs in one basket like a solar or a wind. I think it's important to diversify, and that's fantastic. The amount of, but in terms of how long is it going to take for us to be able to diversify our energy and to be able to see some of these returns? It's good that we're making those investments today in 2024, but it will take, at least a decade for us to be able to see some of these. And the idea is while we continue to invest in energy transition, I think that's one aspect this government has been very good at in terms of while, I think India is doing a lot more as an emerging economy in energy security and energy transition compared to many others. Right. And we've been very progressive, and that's fantastic. I think nuclear energy is just one more top-notch idea in that zone. But with that being said, the idea is also to make sure that we're resilient to climate change, and that's where we're starting to fall short. That's certainly an aspect that this government needs to focus a lot more on. Another aspect, if I may highlight, Karthik, that was a welcome move is the taxonomy for climate finance. Right. Many global investors, I think this is a conversation we've been doing, with multiple investors, both on the private fronts, on the development financial institutions fronts. We really need that taxonomy in India to be able to fill that financing gap. We have not, that is a very welcome move. And the idea that many of the hard to abate sectors in India, like, iron and steel, aviation, chemicals, mines, it's important that we need the taxonomy in place so that we can actually get more international funding as well aligned to this taxonomy towards decarbonizing some of these sectors. Right. Even many of Indian banks have started to go into the net zero transition mode, and most of them have been really awaiting this taxonomy from, the government, and this is a very welcome move, I would say.
Right, Lloyd, climate financing is crucial if you want to create climate-resistant urban infrastructure, rural infrastructure. So in that sense, this first step towards a taxonomy as an economy created through taxation for those industries, including shipping, aviation, who have heavy carbon footprints, is a welcome move, isn't it, Lloyd?
Absolutely. I think absolutely welcome move. But I also want to get to the point that Karthik, budget level, I think makes a great statement, right? I think it's one of the good things of the budget.
Directionally, absolutely, but we don't have too much details at this stage.
There is a little context to nuclear in India. We haven't had a great luck with it because it's a politically sensitive issue. So we have a project in the south which has run into trouble on the civil society group. That's right. So, how does it play going forward? I welcome the idea to diversify the basket, and nuclear is welcome. Globally also it plays a key role. as a percentage of the total transition. But how does it play on the ground, especially with some of the states where it is going to be located in the south, not with the BJP coalition era?
On the Kudam project, I had the opportunity to cover the protest around the project, mainly on the back of the fact that it was Russia-India partnership.
That's right.
And people were worried there.
People are still worried.
Very worried, and they continue to protest for the fact that they don't know the kind of impact it will have on their lives, the land pollution, the water pollution. So perhaps it's also time for government to really cater to some of those questions and allay some of those fears and doubts in the minds of
There's
people.
a global learning there which needs to be replicated here. In that sense, especially when you bring in the private sector, most of the announcements on nuclear today by the finance minister talked about roping in the PPP model where private sector plays a key role. So private sector, nuclear, it's a political tinderbox.
Lloyd, do you want to add to that?
Yeah, I would say, I get that sensitivity. One is nuclear per se has a kind of scary connotation to a lot of people at one level, and two is to get the private sector brings another level to what extent it can be. But I still believe that directionally it's a right call out. Hopefully we'll get there in due course. And I also believe that the perception around nuclear has gone through ups and downs. Fukushima was one, Kudam was the other one. But I think over time the world is realizing that long term it possibly is going to be one of the best solutions.
It is going to be it has to be part of the energy mix. So
Absolutely, the basket has to be as rich with one component as with all other components. So whether it is solar, renewable, green energy, has to be one full big basket comprising these components.
It already comprises about 45% of India's total energy needs. So we are getting there eventually. I believe that the mix has to be more diverse, and that 45% perhaps need to be up in times to come as far as India's power consumption and power needs is concerned. I believe we'll come back to you, Henna. We do have some reactions which are coming in. I believe Sanjeev Puri, CII President, also Managing Director, ITC, has spoken to us. Let's quickly listen in.
See, it's the first point, in fact, that the Finance Minister spoke about in the 9 priorities was on agriculture, productivity and resilience. I think a lot of areas have been touched upon there, from the investments in research for resilience, the tools for productivity, the focus on agri infrastructure. So many positives there. The agri stack, digitization of agriculture. So many good things out there. So the investments there are over a period of time certainly going to provide a much more productive and resilient agriculture and therefore a rural economy. See, it's the first point, in fact, that the Finance Minister spoke about in the 9 priorities was on agriculture, productivity and resilience. I think a lot of areas have been touched upon there, from the investments in research for resilience, the tools for productivity, the focus on agri infrastructure. So many positives there. The agri stack, digitization of agriculture. So many good things out there. So the investments there are over a period of time certainly going to provide a much more productive and resilient agriculture and therefore a rural economy.
That was Sanjeev Puri, Managing Director of ITC and the President of CII, speaking on the focus on agriculture. Number 1 priority in the list of 9 priorities, that was mentioned by Finance Minister Nirmala Sitharaman. We have Hina Kushnani still with us. Hina, but the fact of the matter is that the focus on climate change and creating climate resistant infrastructure is something that's been ongoing with the government. But what do you think can be done from here on in that respect? If you don't think that, if you rate this budget as just 5 on 10, as far as addressing climate change issues are concerned, quickly before that, I want to ask you, remove climate, how would you rate the budget otherwise, on a scale of 1 to 10?
While you were speaking, Henna, just to add to that, I actually tried to find the word climate in the budget highlight. It was just once. Just once. And which is the climate
capital allocation for climate right?
resilient varieties.
We don't know how much.
5 is a very high rating in that sense. Okay, overall budget rating from you, Hina?
I would say a 7. As a citizen, regardless of climate, a 7, but definitely a 5 when it comes to climate. Yeah.
Okay,
bigger priorities.
What would you have liked to see, seen in this budget with regards to climate? What would you ideally like to see?
I think, like I said, Karthik, see the 9 priority areas, like if you look at it, agriculture, social justice, manufacturing, urban development, we're investing so much of our money, of public money across these. We need to make sure that every single penny that's being actually spent is resistant to climate or is being looked at from a climate lens. Frankly, that's the biggest gap that needs to be filled desperately. 11.11 lakhs for infrastructure, 3% of GDP. We need to make sure that all of that is going in climate resilient infrastructure. There's absolutely no point when we're seeing the impacts of floods, we're seeing the impacts of climate change across our cities, and that's welcome that 11,500 crores has been allocated to a few states to actually manage the floods and irrigation schemes. But at the end of the day, it need not be just that one tiny portion of the entire budget. It has to be across everything. I mean, the 1.5 lakhs for agriculture, that the schemes that are going out, how much of that is being looked at from the climate lens? I think it's important that climate becomes an integral part of disbursing these funds everywhere. And that is what's currently missing. And I would say if we can actually put more guidelines on how do we make sure that pretty much even the urban housing, I mean, we're looking at 10 lakh crores for urban housing for the poor. How much of that is going towards green housing? We really need the real estate sector in India contributes 20% of India's emissions. I mean, what are we looking at when we look at the green building situation in India and how much of our new constructions are green? It's minuscule at this stage. And that's really where we need to make sure that every single penny that we're spending towards, benefiting these stakeholders, benefiting the poor, it has to be resilient to climate.
All right, Hina, thank you very much for taking time out and for joining us today. It's a crucial day. Let's also quickly listen into some of the reactions that have come in from political arena, reactions from opposition calling it a dud budget there, but let's listen into what they had to say.
अरे ये तो कुर्सी बचाओ बजट है। उनको कुर्सी बचाने के लिए जो पार्टी उनको लिए कुर्सी बचाते हैं उनके लिए बजट है। एनडीए वाला जो है उसका साथ नीतीश कुमार और आंध्र प्रदेश का उनको सेव करने के लिए, उनको पास में रखने के लिए इसका बजट है। ये इंडिया का बजट नहीं है, देश के लिए बजट नहीं है। उन्होंने बंगाल को तो कुछ ही नहीं दिया है। बंगाली को वो लोग देखने नहीं सकता है, बंगाल को वो लोग देखने नहीं सकता है। They can't tolerate Bengalis, they can't tolerate Bengal people. वो साफ हो जाएगा बीजेपी बंगाल से।
जो इश्यूज फेस कर रहे हैं आज, रोजगार की बात हो या अपने सपने साकार करने की बात हो, उन सबको एक बल देने का काम ये बजट में उन्होंने किया है। बहुत सारा स्ट्रेस जॉब क्रिएशन पे, स्किलिंग पे, मैन्युफैक्चरिंग पे, एम्प्लॉयमेंट जनरेशन पे, इंडस्ट्री को बढ़ावा देने के लिए, प्राइवेट सेक्टर को बढ़ावा देने के लिए, फॉरेन डायरेक्ट इन्वेस्टमेंट को बढ़ावा देने के लिए, इस तरह के बहुत सारी चीज़ें जो आम आदमी को, आम नौजवान को रोजगार की तरफ आगे बढ़ाता है, उन सब चीज़ों के बारे में इन्होंने ध्यान दिया है। और ऊपर से आंध्रा की बात जब आती है तो उसके लिए तो मैं दिल से शुक्रिया अदा करना चाहूँगा नरेंद्र मोदी जी को, जिन्होंने एक वादा किया था कि आंध्रा की देखभाल हम करेंगे और उन्होंने आज किया है बजट के रूप में। जो कैपिटल की बात आती है, 5 साल जब जगन मोहन रेड्डी की सरकार आंध्रा में थी तो नो कैपिटल स्टेट कर दिया था, अमरावती को पूरी तरह से डिस्ट्रॉय कर दिया। वहाँ पे किसानों के साथ जो हमारी एक एग्रीमेंट थी उस सबको डिस्ट्रॉय कर दिया। तो उसको एक बल देने के लिए आज 15,000 करोड़ का पैकेज एक जो दिया हुआ है, उसके लिए हम अपने किसानों की तरफ से, स्टेट की तरफ से हम शुक्रिया अदा करना चाहेंगे। ये केवल एक बजट वाला इशू नहीं है, ये इमोशनल इशू है आंध्रा के लिए। उसको एक जगह मिला है आज बजट में। और पोलोवरम प्रोजेक्ट जो लाइफलाइन है आंध्रा के लिए, उसके बारे में भी उन्होंने बोला कि वो ऑन टाइम वो रिस्पॉन्सिबिलिटी के साथ कंप्लीट करेंगे, तो वो भी एक अच्छी बात है आंध्रा के लिए। और ऊपर से जो बैकवर्ड डिस्ट्रिक्ट्स हैं आंध्रा में, उसका भी एक मेंशन उन्होंने किया था कि वहाँ पे भी सेंट्रली स्पॉन्सर्ड स्कीम्स हो या फिर अलग तरीके के पैकेजेस हो, वो सब भी इम्प्लीमेंट करके वहाँ पे जो स्टैंडर्ड ऑफ लिविंग है वो हम आगे बढ़ाएंगे। वहाँ पे जो गरीब लोग हैं, अंत्योदय लोग हैं, उन सबको भी हम आगे बढ़ाएंगे। तो इस तरह की चीज़ें जब बोली जाती हैं बजट में, तो ज़रूर हमारे आंध्रा के लोग में या 5 करोड़ जो आंध्रा के लोग हैं उनमें एक विश्वास पैदा होता है कि चुनाव से पहले जो वादा किया था वो अब पूरा होने वाला है।
एक सवाल है सर, क्या आपको लगता है कि इस बजट से समाजवादी खुश है?
देखिए, जब तक किसान और नौजवानों के पक्की नौकरी का इंतजाम नहीं होगा तब तक कोई बड़ा लाभ नहीं पहुंचेगा जनता को।
आपको लगता है कि असेंबली चुनाव जब होने वाले हैं आगामी, उसमें ये बजट असर करेगा, इनकी नीतियां असर करेंगी?
स्वाभाविक है, क्योंकि सरकार जब चलती है सरकार के फैसलों से असर पड़ता है।
These are some of the backward areas which have been neglected by all the previous governments. Therefore, they are trying to bring in regional imbalances, to bring out into the balances into the regional imbalances. That's all, nothing more than that. Where employment, rural development, farm sector, manufacturing sector and service sector has due investment has been done. And this is a young Indian futuristic budget. This is a continuation of consultation and complementing the growth story of a Viksit Bharat of our beloved Narendra Modi ji.
मैं 10 में से इनको 0 ही दूंगी। ये जो पूरा मंशा थी इस बजट की, एक ही मंशा है, उसका टाइटल भी एक ही स्टेटमेंट में कर दूंगी कि उसको नाम कर देना चाहिए प्रधानमंत्री सरकार बचाओ योजना। अलायंसेस ने आपसे मांग की थी कि आप उनको स्पेशल स्टेटस का दर्जा देंगे, आपने उनको झुंझुना पकड़ा दिया कि लिए लो आपके लिए 26,000 करोड़, 15,000 करोड़, ये वो फलाना ढिमका, उनको झुंझुना पकड़ाया गया। साथ ही साथ इर्द गिर्द जो पूरा उन्होंने बजट पेश किया है वो इसी सरकार को बचाने के हिसाब से किया है। बड़ी बड़ी बातें की हैं, पर ऑन ग्राउंड किसी तरीके से ना बेरोजगारी को लेकर कुछ एड्रेस किया है, ना युवाओं को लेकर एड्रेस किया है, अग्निवीर के बारे में कुछ नहीं डिसीजन किया बताया गया है, ना आपने महिलाओं के लिए कुछ किया, ना आपने रैशनलाइजेशन ऑफ टैक्सेस की बात की। आज आम जनता है वो इतना टैक्स पे करती है, और जो कॉर्पोरेट टैक्स है उस पे आपने
महाराष्ट्र को कुछ मिला।
सबसे इम्पोर्टेंट बात यही है कि 2 एलाइज को आपने खुश कर दिया। 2 एलाइज आपके साथ महाराष्ट्र में भी हैं। आज तक महाराष्ट्र को सिर्फ एक रिच स्टेट माना गया है जहां से टैक्स आप हमेशा खींचते रहोगे पर वापस उसके लिए कुछ नहीं दोगे। इंफ्रास्ट्रक्चर रिक्वायरमेंट्स महाराष्ट्र के भी हैं, क्यों महाराष्ट्र को बार बार दरकिनार किया जाता है? लानत तो इस बात की है कि ये 2 एलाइज अब तक चुप बैठे हैं सत्ता का मौज करने के लिए महाराष्ट्र में। उन्होंने एक बार नहीं कहा होगा हमारे महाराष्ट्र के लिए क्या।
और जो समस्याएं देश के लोगों के सामने हैं, बढ़ती हुई बेरोजगारी, बढ़ती हुई महंगाई, ख़ास तौर पे फूड इन्फ्लेशन, ऐसे चीज़ों के बारे में उनको सही ढंग से जिस तरीके से एड्रेस करना चाहिए था वो नहीं हुआ। इस हालत में जो चाहिए था वो ये था कि खर्चा जो है सरकारी खर्चा वो बढ़ने की जगह सरकारी खर्चा जीडीपी के मुकाबले में अगर आप देखेंगे तो वो रेशियो जो एक्सपेंडिचर अपॉन एज परसेंटेज ऑफ जीडीपी वो घटा है। अब आपकी आमदनी बढ़ी है 14.5% और आपका खर्चा जो आप बढ़ा रहे हो वो है 5.9%। तो आमदनी इतनी ज़्यादा बढ़ी है और खर्चा इतना कम है उसके मुकाबले में। इसका मतलब क्या है कि इकोनॉमी और कॉन्ट्रैक्ट होगी, और कॉन्ट्रैक्ट होगी तो इसका मतलब है समस्याएं जनता की और बढ़ेगी। और इसके साथ तीसरा जो काफ़ी खतरनाक बात जो हुई है वो ये हुआ है कि सब्सिडीज़ जो है मुख्य रूप से वो उसके अंदर कटौती हुई है। फर्टिलाइज़र सब्सिडी में, फूड सब्सिडी में, आपके पेट्रोलियम सब्सिडी में, इन तीनों सब्सिडीज़ में आपका जो है कटौती हुई है पिछले साल के रिवाइज्ड एस्टिमेट्स के मुताबिक अगर आप देखेंगे। और सबसे बड़ी बात यह है कि रोज़गार बढ़ाने के लिए जो योजना ये बनाए कि इंसेंटिव देंगे आप एम्प्लॉयर को, यानी 4 साल का आपका प्रोविडेंट फंड जो देना होगा वो एम्प्लॉयर को दिया जाएगा। अब इससे थोड़ी नौकरियां बढ़ेगी, एम्प्लॉयर को आप सब्सिडाइज कर रहे हो यानी उसके मुनाफे बढ़ेंगे। अरे नौकरियां बढ़ाना है तो इकोनॉमिक एक्टिविटी को बढ़ाना पड़ेगा ना।
All right, those of course are some of the reactions that are coming in with respect to budget. Opposition they're of course not very happy with the fact that subsidies, some of the major subsidies for farmers including fertilizer subsidy, petroleum subsidy, there's been a reduction on those front. And the fact that for employment creation, government has said that they will subsidize employers and that hasn't really gone down well with some of the opposition voices there. not very happy with budget. But that is, of course, anticipated, Krishna. It is expected.
Very difficult for one budget to please everybody, as they say. But then again, those are factors that the opposition will be harping upon. Another important factor is that we heard little to nothing about semiconductors in this budget, isn't it, Shweta?
Absolutely.
In fact, we have Mr. Ashok Chandak, President of India Electronics and Semiconductors Association, now joining us on this broadcast to help us understand that better. Ashok, thank you so much for taking time out to be with us. I'm going to ask you a very simple, straightforward question. Were you satisfied with this budget?
Would say not fully satisfied, but at the same time, there are some announcement and provisions. Those are definitely going to help this particular sector. First one is the total outlay. They have increased to 21,900 crores now compared to the previous year, which is a 52% hike in terms of the allocation for this sector. Mighty. Number two, there is clearly a focus on the manufacturing, job creation, and MSMEs. So this is the area where even ISA has been asking for that, government should look at the funding aspect of creating the skilling and the talent development, because the industry is really at a growth path and we don't have enough the skilled manpower. So that's the stuff which is definitely going to benefit the semiconductor and electronics manufacturing, which is being planned in the country. At the same time, the third one, which is very important topic, is about the 1 lakh crore research fund, which was also indicated during the interim budget, is already mentioned today again. And we have already started to work as a ISA body, started to work on some 12 strategic research areas with several institutes to leverage this funding, as well as bringing the corporate funding as well, so that we take advantage of this and create the research and development and product creation into the country. So overall, I would call it is in a continuation of the previous policies and previous announcement. There is no path-breaking major change which is being done today, but overall, I would say it is still in the positive direction.
Okay. Mr. Chandak, what are you making of the BCD reduction on mobile phones, mobile PCB and mobile chargers to 15%? How is that likely to affect electronics manufacturing and, more importantly, giving some thrust to exports of electronics from India? India already accounts for about 3 to 4% of the total electronics export. That figure could just go up with this.
Yeah, I think India mobile manufacturing is already mature in terms of the manufacturing efficiencies are considered. Only challenge remained is about the value addition out of the country. And this BCD reduction, I don't think it is going to create any large scale import of the mobile phones, but it could help more on the export side actually as we go along. But actually, along with this, there is also a discussions ongoing as a part of national policy on electronics, which is in discussion at MIT, to create more robust value addition opportunities and processes. So I am looking forward to that further step up to come up later on actually, because right now this NPE is in the discussion, not finalized yet. And with that NPE, our recommendation has been to create additional impetus and focus on a value addition so that we create more manufacturing, more jobs. And the support today with regards to that manufacturing aspect, skilling, MSME sector would also be in line with that actually.
All right. And
in addition, there is also a BCD topic on the telecom infrastructure manufacturing. So that is also going to benefit the local manufacturing of the telecom infrastructure, which is strategically important for the country. There's one point I want to bring out actually, which is not noticed by many people, if you allow me a minute.
Right.
So yesterday's economic survey did mention about the FDI from China to be encouraged. Rather than doing a trading, we could do FDI from China. That was mentioned. And today's speech, there is a mention of easing out the rules of the FDI. So if I put these two things together, maybe there is a initiative on card to get FDI from China, and my concern remains on this particular sector, that allowing blanket FDI into electronics semiconductor sector needs some kind of a cautious approach because the industry is just at the cusp of development. And by allowing the large-scale FDIs, we may be limiting or killing the developing industry itself, actually. So we will be cautious on this, and we are in discussion. We are going to make the necessary inputs to the government on this topic.
All right. So what you're saying essentially is that if there is FDI allowed from China in electronics and semiconductor space, it would not augur well for our domestic manufacturing capability.
That is one. And second thing is also, on one side, we talk about the Atmanirbhar Bharat, and then you bring the foreign investment. That means foreign brands and foreign products. nothing wrong. But then please understand, any electronic products or semiconductor product, the maximum margin or profitability is about 40 to 50% by the brand and by the product. So if you bring the brand and the product both from outside of the technology, you have lost your profit margins actually. Number two, these components, once they are used in the defense and aerospace and telecom and other infrastructures, later on indirectly will be dependent on those brands. Those are China only, for example, doing manufacturing in the country. So we need to be very cautious on this.
Okay, what would you ideally like to see in this budget if I were to ask you that question?
I think we would have expected to have very clear spell out of the PLI for electronic components. The value addition norms should have been mentioned, but as I mentioned, maybe the NP is still in the discussion, so probably it may come out later. The biggest challenge for the country is to create the value addition. I mean, we talk about mobile manufacturing. It's good. It's nice. We are large, huge manufacturing, but if you look at the value addition in that, it's very limited. It's less than 20%. So 80% is not there. All the mobile phones, and second thing, you look at the India brands. Where are the electronics or semiconductor brands out of India? So we have been talking about to the government and the ministry and as well as MeitY that we should encourage India product creation. We should encourage policies to create India brands. But as I mentioned, 40 to 50% of the margin, gross margins, are into this branding and the product creations. So those are the things needs to be improvised further. Maybe it's not happened now, but it should happen very soon because we are still continuing that discussion. And it is in a long run in the interest of the country. We have the India products, the India IPRs, the India brands into this electronics and semiconductor space, which is missing.
Right, Ashok Chandak there, President of India Electronics and Semiconductor Association. Thank you so much for taking time out to be with us here on this budget day, Ashok. Interesting observations coming in from the electronics industry.
Very interesting observation, of course, talking about value addition in electronics, and the expectation was that there'll be some clarity on PLI in electronics. That hasn't really come in. But, Ashok Chandak also mentioned that this will take time. Yep. It is a key priority area and something that they are discussing with Ministry of Finance, and you can't expect it all from the budget. It's a single day, it's a single set of document, but it does highlight government's key priority areas, and those priority areas are clear. They are going to be 9 things that this government will focus on. Let's quickly listen into them one by one.
I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5. urban development, cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land-related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की। अभी डाउनलोड करें।
This is News 9 Live, India's only digital exclusive live stream. For the early adopters, bringing you the news 24/7. For the smart audiences on the smartest TVs. News 9 Live. Stream now on your smart TVs.
Hey, careful, huh? My daddy got it from abroad.
Disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect! Take risk with full understanding.
सोच कर, समझ कर, invest कर.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा. ये बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है. We are the tigers. साथ खड़ा है. We are the tigers. गेम बड़ा है, dribble like a rap, pass, 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 setting up the trap, kick it hard in the ball, chuck, there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people? Hey, careful, huh? My daddy got it from abroad. Disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect! Take risk with full understanding.
सोच कर, समझ कर, invest कर.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा. ये बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है. We are the tigers. साथ खड़ा है. We are the tigers. गेम बड़ा है, dribble like a rap, pass, 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 setting up the trap, kick it hard in the ball, chuck, there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Cooking is an act of love. The first act of love we receive from our mothers in the families.
Modern Indian food is all about contemporary and innovative approach to traditional Indian cooking.
The presentation it's also important, no?
I want to wear this white coat every day and then be a chef.
There are stories. If the name of whiskey is Indri, then there is a whole story behind that.
Cooking food is like a therapy, and eating one is like a pleasure I can give it to myself. With Lounge Nights, I'm on a journey to celebrate and recognize the best food and nightlife establishments in various cities across India.
Radico presents Lounge Nights, premiering every Saturday and Sunday, only on News 9 Live.
It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the Finance Bill by simplifying the tax regime for charities, tedious rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and tedious. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% TDS rate on many payments is being merged into the 2% TDS rate, and the 20% TDS rate on repurchase of units by mutual funds or UTI is being withdrawn. TDS rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize pay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect, to appellate orders shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending in appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise and service tax in the tax tribunals, high courts and Supreme Court to 60 lakh rupees, 2 crore rupees and 5 crore respectively. With a view to reduce litigation and provide certainty in international taxation, we will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals. To improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the bill.
point of order. It would be good if you each of one ask one question each. That will facilitate others to ask questions. And we will try to take most of the questions in this press conference. Ma'am will directly answer your question without any preliminary statement. Over to ma'am. Over to question. Anybody? All question 71, please.
मैम तरुण फ्रॉम जी बिजनेस। मैम आपने आज के बजट में शॉर्ट टर्म कैपिटल गेन और लॉन्ग टर्म कैपिटल गेन दोनों के रेट्स को बढ़ाया है और रियल एस्टेट में आपने इंडेक्सेशन के बेनिफिट को खत्म किया है। तो मैम क्या हम माने कि जो इक्विटी है अब आप उसको बाकी एसेट्स क्लास के बराबर लाना चाह रहे हैं, इस वजह से आपने लॉन्ग टर्म कैपिटल गेन के टैक्स रेट को 10% से 12.5% किया?
First of all, thank you very much for coming here. After having heard the budget, I chose not to make an opening statement because you've heard me almost for 1.5 hours, and I'm sure you have, you're eager to know what is in the budget and also seek clarification. For your, just for a matter of drawing your attention, we've put up a single slide which has used the word employment as an acronym to capture that is everything in the budget. So each letter actually highlights the important points of the budget, and we can elaborate more on that a bit later, but employment captures everything to do with this budget. And I would like you to, for a moment, spend a time on it. And deriving from that, everything which has been said in the budget falls in place. But with that said, yes, your question is on, the point there is we wanted to simplify the approach to taxation, also for the capital gains. One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we've worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had, there were I think 2 or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, Equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
The one point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes, the capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some, it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of 3 taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore. And remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surbhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue as with many others outside of media also saying, are you considering it? Although it was introduced during the UPA government and it was introduced in 2012. 2 years had passed, and since after that when we came in, we tried keeping as is good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money, being paid as a bribe or for use in, other purposes for terrorism, etc., there are enough laws, including the now, the Nyaya Sahita, Bharatiya Nyaya Sahita and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually, there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211, backside. Yeah.
Hello, ma'am. Prakash Predashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13. 11. 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
There is no definitive amount?
No.
152.
मैम आलोक प्रियदर्शी फ्रॉम CNBC आवाज में। मैम सवाल यही है कि जिस तरह से आप लोग न्यू टैक्स रिजीम को प्रमोट कर रहे हैं, इस बार भी आप लोगों ने स्लैब में चेंज किया, स्टैंडर्ड डिडक्शन बढ़ाया, तो ये मान के चलें कि न्यू टैक्स रिजीम के जरिए आप मिडिल क्लास को राहत देने की कोशिश की है इस बार। ओल्ड टैक्स रिजीम को लेकर क्या कोई सनसेट क्लॉज है? क्योंकि आपने कहा है कि जो इनकम टैक्स एक्ट है उसका हम लोग कंप्रेहेंसिव रिव्यू करेंगे, तो रिव्यू में क्या ये मान के चले कोई सनसेट टाइम आएगा ओल्ड टैक्स रिजीम को लेकर?
अभी मैं बोल नहीं सकती हूँ। जरूर हमारी इरादा ये है कि सिंपलर टैक्सेशन रजीम होना चाहिए, और सिंपल टैक्स रजीम की ओर अगर हम जा रहे हैं ये रिव्यू के द्वारा, वो ही हमारी मकसद होगा कि सिंपल कर दो। ओल्ड टैक्स रजीम को सिंपल करने के रास्ते पर ही ये नया टैक्स रजीम आया है। सनसेट होगा कि नहीं होगा वो अभी मैं बोल नहीं सकती हूँ, वो रिव्यू करने के बाद ही हम एक डिसीजन लेंगे।
और ये एक आंकड़ा मैं आपको दे दूं कि इस बार पिछली बार जो हमने परिवर्तन किए थे नई टैक्स प्रणाली में, तो 70% लोग अभी तक जो 4 करोड़ के लगभग हमारे पास में रिटर्न प्राप्त हुए हैं पिछले वर्ष के, 70% ने इसको प्रेफर किया है बनिस्बत की पुरानी प्रणाली को। तो बड़ी तेजी से लोग नई प्रणाली की ओर आकर्षित हो रहे हैं और हमारा यही प्रयास रहेगा।
Yes.
Ongoing period.
Ongoing
Not
filing.
yet. I mean, more returns are coming in. Yes.
271.
Hi, ma'am. This is Sumit Chaturvedi, ET Now. Ma'am, the corporate tax for foreign companies has been slashed to 35%. I want to understand the broad intent of this intention behind this decision, and what kind of benefits to economy, increase in investment you are expecting.
You've, in your own question, answered it. We want more investment to come into this country. So that is why it has been brought down.
$95.
Just to add to that, there was a widened differential between foreign and domestic companies which arose after the tax cut in 2019. When the domestic rates were cut, the foreign rates were not cut. So there was a widening of the gap. With today's change, there is still a higher rate of tax for foreign companies, but it is not now disproportionately higher than domestic. And therefore, this is something where, according to the feedback received from industry, we expect more foreign companies to invest now that this regime is adjusted in this manner.
Good evening, ma'am. This is Pal Singh from Outlook Business. You have earmarked a significant allocation towards rural infrastructure today. So how much of a boost to consumption and overall demand are we expecting here from this allocation happening?
So it is difficult to quantify what would be the accretion to demand coming from. I mean, the obvious increase is whatever we have increased. But yes, would there be a multiplier? Probably yes. I think with the Awas Yojana Gramin and the Gram Sadak Yojana, these two do have a lot of multiplier effects as well. Traditionally, for capital expenditure, the multiplier has been calculated at somewhere around 2.5 to 3. In the Awas Yojana, it may be a little lower. But yes, there would be a substantial multiplier. I don't have a precise calculation.
But other than the Awas Yojana and Sadak Yojana, Gram Sadak Yojana, there's a major push towards the corridors. For instance, I mentioned in the context of Bihar, I mentioned in the context of Andhra, 2 corridors which are moving, one from Visakhapatnam to Chennai, the other moving from Hyderabad to Bangalore, Buxar, Purnia, and so on, and building of the Gaya node in the Amritsar to Kolkata are all towards building infrastructure in the rural areas in order that we attract more investment and enable transit of goods in those huge corridors. All these are essentially going to the rural areas in a big way. And therefore, it is not just through PM Awas Yojana and Sadak Yojana, but major investments in strengthening the corridors, building nodes, and therefore also in improving the rural infrastructure is happening.
11.
Ma'am, I'm Maria Shakir from NDTV and NDTV Profit. Congratulations for creating history today by becoming the only finance minister for having presented 7 consecutive budgets. Ma'am,
My question to you is about the first timer scheme, because as you said, that employment perhaps sums up the essence of this budget. Would there be more blueprint coming out as to how this first timers scheme will be playing out, and what will be the role of private sector?
Just 1 minute. See, this Prime Minister's package that I announced has 5 different schemes. The first timers is, I would think, one of the very, very innovative initiative. So what we are doing there is to be able to provide first timers 1 whole month's salary as subsidy. And this will be put into their account as direct benefit transfer, but possibly in tranches. When an employer picks up a first timer, and this is through the EPFO that you get to know that they have paid their provident fund amounts, and therefore the first timer indicator that we are talking about will be established. So they can't just say one of the existing employee is a first timer and claim it. There are enough checks and balances in the system to make sure that indeed the first timer is coming in. And then the first timers will be put through that learning curve, and this will help them to acquire skills so that they become fully productive. This kind of a subsidy giving, 1, you give the first one month's salary. 2, you're also giving both for the employee and for the employer subsidy. So the applicable person for whom it is being given may even draw a wage up to 1 lakh rupees. But to the extent of 15,000 is what you're giving as a subsidy. The installments, as I said, for the first 1 month wage that you want to give will be done over 3 installments, direct into the first time employee's account. One compulsory measure that we are bringing in there is to make sure that the employee undergoes online financial literacy course before claiming the second installment from the government. So he may be a qualified engineer, he may be a diploma holder, he's a first time employee in an office, he becomes a first time employee and the employer also claims that he's been recruited. We try giving him the 15,000 rupees. He may have a salary of 1 lakh, but up to 15,000 rupees is what we are going to give. And in that, if you're giving 3 installments, the first installment will be given. But before he draws the second installment, he should undergo an online financial literacy course so that he can claim the second one. So we are not training him in engineering, we are training him in financial literacy. Post that, of course, the place where he goes to work, he's going to be working in any case. Then subsidy to be refunded if in case the employer removes him from the work within 12 months. So the employer gets a subsidy as well, but he will have to refund it if within 12 months this first time employer has been removed out of the work. This will cover, and we expect it to cover, 1 crore persons per annum. And the scheme will run for 2 years. So up to 24 months, you can have new employees brought in, new first time employees brought in, for whom the government will give 15,000 rupees as from our side, 1 month, what we think, 1 month's salary. Although his salary may be any amount, but to a cap of 1 lakh. And then he undergoes some financial literacy course, post which the second installment and the third installments can be withdrawn, put into his account. But most important is if the employer removes him within 12 months, the employer will have to refund the subsidy given to the employer. So that's how that scheme works.
278. That's right.
If I may just add, details are available in the budget speech in the annexure on page 31. So there are details of all the five schemes in this package. If you go through them, there's considerable amount of detail which you can get.
Hi, good evening. This is Priyashmita from Informist. I have 2 points from the budget that I would like to ask. The first is nominal GDP has been pegged at 10.5%. And we have seen that growth is on a high momentum, and even the RBI has pegged growth at 7.2%. And the Econ survey said that it is going to be between 6.5 to 7%. So a 10.5% nominal GDP looks a little conservative. What is your view on it? And the second is that there's a mention that beyond FY26, you would want to reduce your debt to GDP. And you've mentioned that, the 4% debt to GDP it's a thing of the past. So what do you think is a sustainable debt to GDP or a desirable debt to GDP at this point? Thank you.
What was the first question again?
Conservative nominal GDP projection.
See, 10.5% could be a combination of 7% growth and 3.5% GDP deflator. So a combination of wholesale price plus consumer price could easily be 3.5%. That's a very likely scenario. So 7 plus 3.5, yes, it is slightly conservative, but I don't think it is way off what is likely. Or it could be 6.5% growth and 4% inflation as per the deflator. So I think the number is reasonable, slightly conservative, yes, but we would prefer to achieve the numbers. Second, on the path after 26, 27, which has been outlined in the finance minister's speech at the end of the part A. So the commitment, as she has mentioned, is to endeavor to reduce the debt to GDP every year. That is in future the fiscal consolidation path. What is the percentage that would result in that fiscal consolidation is not something that we are disclosing here today or can disclose today. It will depend on circumstances. But there is a commitment to lower the debt to GDP ratio. So if every year it has to be reduced, there will necessarily have to be a particular level of deficit which we cannot exceed. And that will depend on prevailing growth rates, interest rates, and the other parameters which go into the calculation of the debt dynamics. But I can tell you that it is most likely to be a figure not above 4.5%.
249.
मैं सुनील सौरभ बोल रहा हूँ। मैं पहले तो आपको काफी बधाई दे दूंगी, बहुत अच्छा बजट आपने पेश की है। दूसरा मुझे ये जानना है कि रेलवे के लिए क्या कुछ खास रहा बजट में?
Which organization you are from?
कौन सा पत्रिका से?
पेपर में हूँ, लोक भारती पेपर है।
Sorry?
लोक भारती।
लोक भारती।
तो पहले तो बधाई दे दिया हूँ मैं आपका, बहुत अच्छा बजट आपने पेश की है और रिकॉर्ड भी की है, 7 साल से लगातार आप वित्त मंत्री के रूप में काम। मेरा कहना है कि रेलवे के लिए क्या कुछ खास हुआ, क्योंकि कोई जानकारी हम लोग को अभी तक नहीं मिली कि रेलवे के लिए क्या गया है। दूसरा, मैम, रेलवे में सीनियर सिटीजन्स को कंसेशन मिलता था, आप यहाँ पीआईबी में है, पीआईबी जर्नलिस्ट को भी कंसेशन मिलता था। कोरोना में वो बंद हो गया, कोरोना को ख़त्म हुए भी 2-3 साल हो गए हैं, तो फिर से ये बहाल नहीं हुआ। क्या इसकी उम्मीदें हम लोग कर सकते हैं कि आगे बहाल होगी या नहीं?
रेलवे का जो एक्सपेंडिचर बजट है नेक्स्ट ईयर, इट्स 2,55,393 crores, which is the highest ever, and it's a very substantial increase in recent years. So that is a very large amount of investment in the railway. So I think there is a very adequate provision.
जर्नलिस्ट के लिए
ठीक है, सुना।
277 प्लीज।
इसमें सीनियर सिटीजन और पीआईबी जर्नलिस्ट को भी जो स्लैब में रिवीजन हुआ है उसमें फायदा है। सीनियर सिटीजन्स को फैमिली पेंशन में स्टैंडर्ड डिडक्शन का फायदा हुआ है। रेलवे में, अच्छा ठीक।
हेलो मैम, दिस साइड हर्ष कुमार, दिस साइड फ्रॉम बिजनेस।
वो बजट का फायदा जो दिया है सर, वो भी तो मिलेगा सीनियर सिटीजन्स को और सबको, रेलवे में भी मिलेगा।
Hello ma'am, Harsh Kumar this side from Business Standard newspaper. So Ma'am, during your speech, you mentioned about the FDI liberalization. Can you give a bit detail about it?
We are trying to, since 2014, bring in ease of doing business in India, and in every sector where there was only 26% allowed for FTA, we raised it to 49, and then where it is possible, we've raised it to 74, and so on. So there's been a consistent, continuing effort to relax our policy towards FTA. First, it went sector by sector. Then there was this approach taken so that most of which can go through the automatic route. So in that process, further simplification, if necessary, we are willing to do, is what is conveyed.
Also, ma'am, you have like increased the Mudra loan limit to 20 lakhs, like that cap. So can we expect the increase in Shishu, Tarun, like their types increase? So how much it will be? Can you give detail on that?
We've said this only today. See how this works.
Okay, thank you.
I request you to please one question each person. 123, please. Here.
Shrimi Chaudhary here from Business Standard. I just wanted to understand that budget proposes withdrawal of equalization levy. So if you could just give some explanation of what led to that, what is the intention behind that, keeping in mind the pact between India and US, which has ended on June 30th.
No, as the Pillar 1, Pillar 2 negotiations have been going on since 22. And since then, one of the things which was becoming more than obvious was, if at all we are going through this Pillar 1 and Pillar 2, which we intend to, the negotiations and the OECD, backed by the US administration, have all been pushing for this. We wanted a fair solution, so negotiations have been going on. But the point of contention from then has always been, should we collect an equalization levy then, if at all we are getting into this global understanding through the Pillar 1 and Pillar 2? In any case, for India, equalization levy also meant for those who are living abroad that you were holding it, but eventually they're going to only adjust it somewhere. So in the interest of moving towards Pillar 1 and Pillar 2 solution, which the negotiations are still going on one aspect of it, on the other, in all probability, we are close to a conclusion. It was necessary for us, through the Parliament, to take steps to ensure that we are entering into that scheme of things without this equalization levy hanging on us, because this was important for us, but if it is a global system, this cannot continue. And therefore, with a positive approach towards the Pillar 1 and Pillar 2, we've moved forward to inform the Parliament that we would like to close this.
270.
I may clarify that it is only the 2% levy which has been withdrawn. The 6% levy which was earlier imposed, that continues.
What will happen to the tax collected so far from all these companies under this 2%
That has already been collected. We'll see. I mean, it is only this withdrawal is only prospective.
Ruchika from Business Standard this side. Ma'am, the miscellaneous capital receipts have seen an increase in this budget to almost 50,000 crore. Is there the miscellaneous capital receipts?
Okay.
Can you share the government's game plan as to how will we achieve this increase?
The miscellaneous capital receipts are budgeted as 50,000 crore, which was like 23-24 also. It was 51,000 crore, the interim budget. Now it's 50,000 crore, 24-25, and this combines with all kinds of receipts which are otherwise disinvestment receipts, asset monetization receipts, and other kinds, which will be clubbed with that. So this budgeted figure is 50,000 crore.
One six.
Ma'am, very good evening. Sapna Das here from CNBC. Ma'am, two questions. On the incentive-like employment scheme that you have announced, 2 lakh odd crore is your overall fiscal envelope over the duration of the scheme. Could you give us a sense as to, we are already almost halfway through the current financial year by the time you pass the budget. So practically around 7 months will remain for the financial year, but any kind of an allocation that you have done for this scheme for this year, ma'am? One is that. And ma'am, just a corollary also on the miscellaneous receipts question, though not very much part of this budget, but nevertheless, ma'am, government had a very, kind of a bold privatization program. Do we understand that this is now being calibrated? That's it, ma'am. Thank you.
First question. As you rightly observed, there are only this is not a full financial year. The schemes have just been announced. They will now go through a process of quick design, appraisal and approval. However, budget provisions have been made for these schemes, partly in the Ministry of Labour and Employment and partly in the Ministry of Corporate Affairs for the internship scheme. So from memory, I can be corrected. I think it's 2,000 crores has been provided for the internships in the Ministry of Corporate Affairs, and about 5,000 crores has been provided in the current year in the Ministry of Labour and Employment. But we stand committed to funding them fully to the extent that may actually be required. These are just very rough estimates based on how much time it might take to kick off. On the miscellaneous capital receipts?
Well, I think in the interim budget, FM had announced, we are going for a holistic strategy for management of equity in PSUs. And I think which includes, value creation and also, using the performance, the capex, the dividends and consistent dividend policy and the capital management all together, and also the calibrated disinvestment strategy, which also includes listing and market dilution, but all together in a holistic way so that value maximization is there. I think the same strategy is going to continue.
122.
Hi, Rishabh with NDTV Profit here. I have two questions. One on the space fund that was announced, the 1,000 crore fund. What will be the composition of this? Which will be the nodal agency, and what sort of startups will the government invest in? And on the NPS, you also mentioned that the NPS committee has made progress in the speech. Could you elaborate a bit on that?
So we have seen that there's a lot of interest of the private sector on participating in the space program. Hitherto, the participation used to be on being a supplier to the space program, but now development of the satellite, mounting experiments there, they're getting into that space. And if you recall, even FDI was opened up in that sector. This is an attempt that Indian entrepreneurs, Indian startup who want to risk capital to get into that area, that should be facilitated. We believe that the amount is 1,000 crore, but that can have a very large multiplier effect. And that's what the scheme announces.
On your question on the, I think your second question was on the government NPS, right? So as you know, there is a committee which is looking into it. The committee has done a lot of detailed calculations of the fiscal implications of different ways of addressing what are the expressed sort of priorities of the employees. We have been in dialogue with state governments. We have had discussions with each and every state government. We have met the staff side of the government has a staff consultative machinery, a formal machinery. We've had 4 meetings of that machinery to understand what are the staff's priorities. And our attempt is to design something that is fiscally prudent, but also meets what are the core priorities of the staff in terms of having a secured retirement income, which provides for their needs. So this is a balancing act, because obviously there are costs. The more you give, more expensive it is. And so we are at an advanced stage of working out various options, and we are also discussing these options with the staff side. Just to correct the budget estimate that I gave earlier, 10,000 crores has been provided in Ministry of Labour and Employment for the new employment schemes, and 2,000 in Ministry of Corporate Affairs. Yeah.
125.
Good afternoon, I'm Nikunj from Reuters. A follow-up on that FDI facilitation, you said that government will take steps to facilitate FDI. The Eco Survey also yesterday said that the government should import capital from China so that there's a right balance between investments and trade. So will the government also take steps to quickly facilitate investments from China that have been pending for long? And secondly, you've come up with an NPS for minors. So will that also have some sort of tax benefits to nudge people to enroll for NPS so that a pension coverage increases? Thanks.
See, Economic Survey gave its view on the investments from China. As things stand today, investments do go through the Press Note 3 process when it comes from China or from any of our neighboring countries. So that process is still on. Economic Survey has indicated that it might be time for us to open up and allow for. So that's a Economic Survey. I'm glad that the Secretary is seated here. It's normally an arm's distance. But that doesn't mean that I'm disowning the suggestion. You want to say?
10. In general, as you can see, our aim is tax code simplification and not complication. So beyond that, I don't have anything specific on that. But the general direction of travel is obvious. We are not creating more and more tax deductions for individual tax instruments.
Respected Madam, मेरा नाम नरेश वत्स है और मैं स्वतंत्र पत्रकारिता करता हूं। आज जो आपने किसानों के लिए और ग्रामीण क्षेत्र के आधारभूत संरचना के लिए काम किया है, उस पे दो तरह की राय आ रही है। एक राय तो ये कहती है कि गालिब ने ये कहकर तोड़ दी तस्बीह, क्यों गिनकर नाम लूं जो बिन मांगे बेशुमार देता है। एक वर्ग तो इस तरह से तारीफ बजट की कर रहा है, लेकिन दूसरी तरफ प्रतिपक्ष के नेता राहुल गांधी ने कहा है कि आंध्र प्रदेश और बिहार पर जो दरियादिली दिखाई है, कहीं न कहीं ये लगता है कि ये कुर्सी बचाने का बजट है। अखिलेश यादव जी भी ये कह रहे हैं, आप कैसे देखती हैं?
जिन इंडी अलायंस का मेंबर्स साथ होकर के भी 230 पार नहीं किया और जहां बीजेपी अकेला 240 तक पहुंचे और प्री इलेक्शन अलायंस के साथ आज सरकार तीसरी बार बनाए, प्रधानमंत्री जी का तीसरी बार, स्वतंत्र भारत के चरित्र में पिछले 60 साल में जो नहीं हुआ अभी हुआ है। कुर्सी बचाने के बात करने वाले पार्टियों थोड़ा सोच ले। उनके अलायंस 230 कुल मिलाकर कितने पार्टियां थे? 25, 26 पता नहीं, मैं गिनी नहीं, बट इंडी 37 पार्टीज कुल मिलाकर के 230 पार नहीं किया और वो बोल रहे हैं कुर्सी बचाने के लिए। जब प्रधानमंत्री मोदी जी तीसरी बार प्रधानमंत्री बने और देश के लिए इतना घोषणा भी कर रहे हैं जिससे भारत देश का हर राज्य सामने आए, डेवलप हुए, और 1.50 लाख करोड़ इस बार बजट में स्टेट्स के लिए हम दे रहे हैं बिना इंटरेस्ट 50 साल के लिए फ्री। फिनांस कमीशन तो हमारे उनके सजेशन में इसका जिक्र तक नहीं किए, हम ही कर रहे हैं, स्टेट्स के साथ काम कर रहे हैं।
When we talk about India, unfortunately the country has the highest burden of road crash fatalities.
तो लगभग 76% लोग पेडेस्ट्रियंस और टू व्हीलर वाले हैं जिनकी डेथ हुई है। While the highways are getting better in India, the local roads, the city roads, the town roads, these need to be improved.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface, but not the living people?
इस खेल में खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। साथ खड़ा है। गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the ball. Chuck, there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
Who am I?
Nobody can crack that mystery.
There is a certain expectation of me.
That's the only contradiction. Life itself is stranger than fiction.
I was a perfectly normal person born in an abnormal world.
I really didn't understand why is it different.
Just imagine a child who is bullied every day.
Boys school में कुछ लड़का लोग मेरे साथ sexual abuse किए. मुझे तेरे बारे में सब पता है और मैं तेरा rape कर लूँगा.
You also start to stigmatize.
अरे ये तो time pass है.
Sex doesn't come in the picture. Sex comes very late. Then there are man-made narratives.
Why do you walk like that? Why do you sway so much? So you can understand the trauma of a person who's trapped in a wrong body.
But nothing can bind life.
We have to reclaim the lost position. We fought for more than 10 years. Today I'm the mother of the industry. I'm a first transgender member judge.
You can't walk in everybody's shoes.
This is what I'm comfortable with. They just are what they are.
You become the light yourself.
That is the change that I was looking for.
When I recognize myself, it's a small story, but it's an interesting one.
Hey, careful, huh? My daddy got it from abroad. Hey, disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect. Take risk with full understanding.
सोच कर, समझ कर, invest कर.
Cooking is an act of love. The first act of love we receive from our mothers in the families.
Modern Indian food is all about contemporary and innovative approach to traditional Indian cooking.
Representation, it's also important, no?
I want to wear this white coat every day and then be a chef.
There are stories. If the name of whiskey is Indri, then there is a whole story behind that.
Cooking food is like a therapy, and eating one is like a pleasure I can give it to myself.
With Lounge Nights, I'm on a journey to celebrate and recognize the best food and nightlife establishments in various cities across India.
Radical presents Lounge Nights, premiering every Saturday and Sunday, only on News 9 Live.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this? "20,000 people dead and counting." What's happening in the United States of America is unprecedented. You will have to pay for this.
This is News 9 Live, India's only digital exclusive live stream. For the early adopters, bringing you the news 24/7. For the smart audiences on the smartest TVs. News 9 Live. Stream now on your smart TVs.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Hello everyone, welcome. You are watching News 9 Live and we are bringing you Budget Day coverage of Budget 2024 all day here. We've been bringing you the ball by ball update. We continue to break down and decode the budget and what's in it for you. I am Krishna Kumar.
I am Shweta Kothari and we are of course bringing you all the highlights of the budget 2024. Remember, it was presented at about 11 o'clock this morning by Finance Minister Nirmala Sitharaman, and this year's budget particularly focused on 9 priority sectors, and these are of course priority areas that the government identified. Let's quickly run our viewers through some of them, if not all of them. One of course being agriculture, the other being employment and skilling, inclusive human resource development, manufacturing and services, urban development, energy security, infrastructure, innovation, research and development, and finally the next generation reforms. Krishna.
That's right, the 9 priorities outlined by Finance Minister Nirmala Sitharaman in her record 7th budget presentation. Let's go to some of the guests lined up for us on the show and get their reactions on them. To start with, we have Mr. Mohandas Pai, Chairman, Aaron Capital joining us. We also have Mr. Andrew Holland, CEO, Aventus Capital. We also have Riaz Thinga, partner, Grant Thornton, joining us on this broadcast as well. Thank you all of you for taking time out to be with us. I want to begin with Mr. Mohandas Pai. Mr. Mohandas Pai, simple, straightforward question to you. On a scale of 1 to 10, where and how would you rate this budget and what exactly stood out for you?
What stood out for me was the focus on job creation. The biggest challenge for India is job creation. Every year we get 1.5-2 crore young people coming into the job market. We have to create high quality jobs. We are creating jobs but then don't pay very well. And the focus on job creation, internship, the focus on apprenticeship, investment, incentive for job creation, labor intensive industries in manufacturing, etc. is fantastic. They're putting 2 lakh crores there for 4.1 crore jobs, which is very, very good. And the second thing is about agriculture and productivity. We have to increase the income of farmers. That will only come by productivity and greater quantum of market price being given to them using agri-techs. I think the focus is there for productivity, new seeds, etc. The third is about urbanization. I think, India lives in urban areas. India no longer lives in villages. When the 2024 census comes out, people will be shocked at the extent of urbanization. In the next Lok Sabha, there will be more seats for urban areas and political power will shift. Today, we have 8 lakh crore of subsidies given to rural areas and poorer people at the state and the center. Urban areas don't get anything. Our lives are miserable in urban areas. Bad air, bad water, not enough sewage, bad traffic condition, public mobility is not there. 10 lakh crores, and that's very good. And there are other areas there, which I think is very, very good. The only thing that is lacking from whatever I wanted was the restraint on regulatory agencies, because we must ask them to be accountable, hold their feet to the fire to say that whenever you go raid somebody, file some cases, complete it within 3 years. I think it's very, very important to remove the fear in business.
All right, interesting point. Let me also quickly get in Andrew Holland in this conversation. Andrew, hi, good afternoon. Thank you for taking time out. Lots in the budget for markets as well, from STT to LTCG, STCG, lots of changes. How are markets reacting to it? They closed on a flattish negative note. How's the momentum going from here on?
So I think, long-term capital gain tax, I think anyway would be absorbed. But I think the market needs to think through the fact that the direction is now being told to you, not just for this year, but years ahead, that capital gains tax or these kind of taxes are going to move higher. I think the short-term capital gain tax and STT will have an impact on those kind of popular shares, whether in mid-cap, small-cap, or PSU stocks. Which were a favourite with the retail investor, because this will obviously dampen those trades going forward and reduce liquidity. So that's the other factor. But I think that the biggest miss for me was anything to do with the banking sector. As we know, have been trying out in terms of getting deposit growth to rise, and there was nothing there for them. So NIMs are under pressure. That's going to continue to be a problem for them. So one of your big sector weightages is still under pressure.
Okay, let me take that question to Mohan Daspai as well. That debate around LTCG is raging on in social media, Mr. Mohan Daspai. A lot of questions surrounding it. No indexation benefits on any capital that you own, especially is meant to be detrimental when it comes to something like real estate. What are your views on that?
I think 12.5% for non-listed financial assets is very, very good. You see, earlier we had a discrimination in favor of listed assets, where the time for long-term was 12 months and 10%. Unlisted was 2 years with 20% and indexation. If you look at many examples, barring a few like real estate held for 150, 200 years, I think it doesn't make sense, right, to have a higher tax on non-financial assets. I think that's very good. I just now saw somebody make a calculation for the last 15 years. If you look at indexation and look at the rate reduction is higher. The benefits are higher. It cleans up the entire system. Of course, the market is a bit upset about F&O taxes going up, about 20% for short-term capital gains. But I guess the idea is to bring the tax rate to very near levels for all kinds of income. And they increase the tax to 2.5% for listed companies. I think we should follow that. But the bigger benefit will come from unlisted stocks, because huge amount of risk capital has to go into startups, have to go into unlisted companies, which can later list. And that, I think, is a very big incentive. Overall is pretty well balanced.
Okay, well balanced. But is that something you also believe, Riaz, as far as more money in the hands of people is concerned, that is what the budget has delivered, even if it's a little amount, to the tune of about 17,500 rupees. There has been an increase in standard deduction from 50,000 to 75,000. There have been some readjusting or rationalization of tax slabs. Is this something that you were expecting, or were you hoping for more?
No, I'll just take on from that capital gains question that was raised before. The impact of this capital gains is going to be quite huge. While we don't recognize it, lack of indexation is going to have a massive impact on the capital gains tax, especially for assets which have been held for a long period of time. And, I think it also shows the government's direction towards taxing generational wealth at a larger level, because imagine assets which have been brought in from ancestral assets. Without indexation, it's going to be a massive tax impact. So yes, while on financial assets and investments, it may still be balanced, but I think on ancestral property, that is going to be quite big. Coming to the second part of your question, when you're talking about whether it met expectations. Yes, in terms of personal income tax, I think it is balanced, that increase in standard deduction, adjustment of the tax rates. These are things which are important for individuals, and I think to that extent it is fine. But there have been many other changes in the corporate tax, which we need to look at separately. We can list them down as we go along.
All right, we will try and understand them. I think I'll take this question to Girish, because I think it's pertinent to understand, losing indexation benefit, especially as my colleague pointed out, on real estate is going to be a sort of a bummer for middle class. Girish, in your assessment, does it look like a move by the government to really tax you for generational property, or is there more to it? Because I just want to understand the rationale behind increasing taxes on LTCG.
I wouldn't make sweeping conclusions like to tax generational wealth, because most of these generational wealth also have a very low cost of acquisition, and you substitute that from the value as of April 1, 2001. And from April 1, 2001, you index it. So it will really depend upon asset to asset, region to region, and we cannot say it will be worse off or better off unless you go through asset classes itself. But it's really very celebratory in terms of the startup world. Angel tax is abolished, and really when the promoters are selling shares, now they'll have to pay tax only at 12.5%, promoters, investors, which is a very, very big benefit. For properties, you'll have to see property by property to see what it means. In many cases, still you'll be better off. In some cases, you may not, but it all depends upon the property and what the cost you're holding. So I wouldn't say it's an attempt to tax generational wealth judgmentally like this.
All right. Andrew Holland, let me come to you on that. Lots of chatter regarding this LTCG, long-term capital gains. It might sound good when it comes to one asset class, but not necessarily for other asset classes. But then the real estate stocks have been doing really well, especially in India over the last 3 to 6 months, post-pandemic, so to speak. How do you view this question surrounding the lack of indexation benefits being made available to asset classes like real estate and the hike of the LTCG?
No, it's obviously a negative, but when I look at asset classes like that, I mean, it's not as though you're going to switch from equity, straight into a property, because that's a bigger ticket item. So I think you have to look at each asset class on its own. But I think it would be a negative for for real estate in general. Given what the new tax is. So in terms of the stock market, so for capital gains, I don't think 2.5%, from 10 to 12.5 is a real game changer in terms of your longer term view of the markets. I do think short term capital gains tax will have an impact on market liquidity, and that's something that the market might be overlooking at the moment. But I think the big message to me is that taxes are moving higher.
Okay, taxes are going to be higher. We have another special guest joining us now to weigh in on that. We have Nilesh Shah of Kotak AMC joining us. Nilesh, thank you so much for taking time out to be with us here on Budget Day here on News 9 Live. The uniformity in capital gains tax was something that the market was hoping for, and the finance minister did deliver on that front. But what exactly do you think is the rationale behind increasing LTCG by 2.5%? It will hurt the long-term investor and retail participation, which is only starting to pick up over the last couple of years.
So essentially, whether it's 10% or 12.5%, it remains concessional. It remains far lower than other level of taxes. And then maybe finance minister tried balancing by increasing exemption limit from 1 lakh to 1,25,000. At the end of the day, we will pay tax only on profit. And this budget has created a fantastic emphasis on fiscal prudence on one side, investment on the other side, and employment generation. This combination will create far more profit opportunity. And yes, to some extent, it will get dented by 2.5%, but focus on the profit opportunity, not on the increased taxation.
All right. So that's clearly a view coming in from Nilesh Shah. Let me take this back to Riaz. Riaz, barring real estate, do you think that as far as the rest of the asset classes are concerned, this hike in LTCG is fair and fair game, so to speak?
Yeah, I think in terms of financial assets, I don't think the differential of rate of 2.5% is bad. So I think it's quite balanced on that front. As I said earlier, I think the real impact only comes for very old assets and possibly ancestral assets, and that too more in the range of real estate, etc. But otherwise, I don't see a big impact of long-term capital gains. The 2.5% is not going to be material.
All right, and Riaz, I think stay on with us. I also want to quickly understand from you, at 17,500, and that is the amount of saving that Finance Minister also talked about, a salaried employee will have now by the way of new income tax regime. The new income tax regime hasn't seen the kind of pickup that the government wanted it for the longest time. Do you think this will bring more people in the fold of new income tax regime? There is it's now been made sweeter, therefore a reason for people to opt for new income tax regime now.
So even otherwise, I think the new income tax regime has been gaining favor, and today at least a significant part, I think a majority of the individual assessees have opted for the new regime. And I think over a period of time, the government's resolve is to try and make sure that the new regime is the only regime. By and large, it has already become the default regime. So I think these things are anyway going to make it sweeter and better to continue with that. Yeah.
Okay. Let me take that question to Mohandas Pai as well. Mr. Mohandas Pai, 17,500 rupees. That's what the individual taxpayer gets to save with the new rationalized new tax regime slabs. Do you think, with these kind of moves, and then Finance Minister also talking about the fact that 2 out of 3 people chose the new tax regime, are we looking at a time very soon, possibly even by next budget, where the old tax regime will cease to exist?
Well, I think 17,500 after so many years is peanuts. It's very, very less. There should have been a minimum of 35 to 50,000 rupees by making the first slab 0 to 5 tax-free at least, to avoid filing returns for large number of people who file for very small amounts, because it's a hassle to file this kind of returns. And I think they should have opened up. They should have given some benefit to senior citizens too, who don't take advantage of any of the tax breaks, because they have to pay heavily for medical insurance. You know that medical insurance costs 18% today. And many people have to take medical insurance because the failure of the government in providing public health to everybody of a reasonable quality. So I think it's too little. It is something they've given as a few crumbs. They should have given more. For example, the 17,000 costs some 30,000 crores or 25,000 crores. If you're taking it up to 50,000 rupees per head, it probably, without giving any tax back, by elongating the slabs, it could have possibly cost some 60, 70,000 crores. Is okay, because you look at the individual tax collection is going up in 22%. It's very, very high. And it's going up because more people are filing returns. And in 26A, all your income is captured. You can't hide income anymore. And more people are upset about that than anything else, right? So I think it's very little, because now for the next 3-4 years, they're not going to elongate the tax slab. So giving it here when the middle class is angry and upset that they're paying the majority of taxes, they're suffering high school fees for the children, high college fees for the children, high EMI, quality of life is down in cities because of traffic, lack of public transport. They should have done something. They wouldn't have lost too much of revenue. But anyway, I think we should ask them now, instead of this 5 slab, make it 3 and elongate it so the tax comes down. So I think it's halfway done. They should do more.
Okay, let's take that question to Nilesh. Nilesh, do you think, are you happy with that 17,500? And there was an expectation that perhaps benefits of ATC will also be made available in the new tax regime. In a sense, telling people to save more by the way of PPFs, by the way of insurance, but that hasn't really happened. What are you making of the change in the new tax regime?
There is always ye dil mange more. But at the end of the day, we have certain committed expenditure on interest payment, governance, defense, and so on and so forth. Today in India, the income tax payment starts well above national income. So there is a burden on well-to-do part of the society to compensate by way of higher taxes. Undoubtedly, honest taxpayers demand equitable distribution of taxation. At one point of time, Indian tax compliance was comparable to poor African countries. We have improved substantially. But the journey is not over. It should continue. Second, the need for investment undoubtedly is there, and tax incentives do influence investment decision. But many times what has happened in the past, we gave incentive for investment for long-term in fixed income like public provident fund, small savings, LIC, and so on and so forth. We need to give incentive for longer term investment, which is equity, which generates real return. So my feeling is that overall this budget has moved in right direction. It has given something to everyone.
All right. Okay. The budget has given something to everyone, Krishna. That, of course, is the word coming in from Nilesh Shah right now. You know, I want to go back to Mohandas Pai on the idea of job creation. Mr. Pai, you know, it does look like out of the 9 key priority areas for the government, job creation is one of the key priorities, or at least for now in this budget, has been a top priority. There have been at least 5 schemes launched by the government, and including the scheme for first month wage to all people, creation of job in manufacturing, support to employers, skilling program, and the internship program in top companies. It does look like job creation has been one of the concerns of this government, and it tried to cater to those concerns. Are you happy with these 5 schemes? Do you think they're all encompassing and will be able to lift people, you know, the youth, give them some hope and perhaps some source of employment in future?
Well, what are the challenges about job creation? First, availability of jobs. EPFO shows that lots of jobs are available. It's not that jobs are not available, but people's aspiration for the job is much higher. People's skill for the job is much lower. And what this budget tries to do is to tackle the challenge of skills. By giving internships, by making sure that you pay for the employer share, you're increasing formal job creation, incentivizing people to go in for more jobs in areas where there is labor available, for example, garments, etc., labor-intensive industries, where some kind of incentives are required. We see a lot of labor coming off the land in the north of India, in the 300 poorest districts, so it will help. All this goes to help. Jobs are created when the economy grows. Economy grows when the investments go up. That is happening. Now there's a shortage of qualified people for the jobs. They know, and more people are coming for job, but they're not qualified. You can hear the construction companies, you can hear the security agencies, you can hear many companies in the services area saying we're not getting in skilled people. But the internship, hopefully a part of the problem can be solved by incentivizing the EPFO payments. Another part of the problem can be solved by going to rural areas. Another problem can be solved. So I think it's a step in the right direction, because you can't boil the ocean and solve everything, but this will solve 50 to 60% of the problem. But the biggest will be to increase the rate of growth. We're already growing at 6 or 7%, maybe 8%. Can we grow better? Yes, we have to increase efficiency. Further, the government is reducing the fiscal deficit to 4.9%. Hopefully, interest rates will come down. Real interest rates are quite high in the economy because we believe that the CPI is based upon vegetable, onion, tomato prices, which is not correct. Core inflation is around 3%. So I think that will set right many things. Overall, I think the budget is very conducive for job creation, and the programs are quite encouraging, much better than what was earlier.
All right, very interesting point, brought to fore by Mr. Mohandas Pai, is that core inflation has been in fact more or less under 4%. It's the headline inflation which continues to be a pain point, Krishna, and headline inflation rightly so, because it accounts for the more volatile energy and food basket, which have been a point of concern for India, especially the food and vegetable and onion and tomato prices.
Food inflation is over 7%, 7.5%. It's incredible the rates at which food inflation has been rising. So you have the thali-nomics, the veg thali and non-veg thali, which are clear indicators of how expensive food is getting. And that has been a pain point when it comes to bringing down the overall inflation level. Bear in mind, the target is 4.5%, 4.5% is where the Reserve Bank of India would like to see inflation at if it were to start considering any kind of rate cuts, but we are only progressing towards that. We're still away from that, and food inflation is certainly spoiling the party, so to speak, even as other commodities continue to remain within range, Shweta.
Absolutely, and for that it does look like government is trying to build enough and more adequate agri-infrastructure in order to support those farmers who are not able to either furnish their produce in the market, make it available as soon as possible post-harvest season, or it gets spoiled in the process in supply chain because there are delays in supplies of those produce. So government has enough and more thrust on rural infrastructure, on agri sector, and something that we've discussed in fact over the course of last couple of hours since the budget was out and about.
Especially the rural infrastructure allocation, the overall rural infrastructure allocation, which has gone up from 1.65 lakh crore rupees to 2.66 lakh crore rupees. A big statement of intent over there when it comes to addressing rural and agricultural distress, Shweta.
All right, joining us on the show is Mr. Arvind Virmani. He's an economist, member Niti Aayog. Sir, thank you for taking time out. Thank you for speaking to News9. I want to understand from you, one of the big takeaways from the budget was, of course, that fiscal deficit target has now been reduced for financial year 24 to 4.9%. Is it optimistic or is it realistic?
Definitely realistic. I think all of you are aware of the fact that tax revenues have been higher than was predicted, and of course everybody also knows that the RBI subvention was increased, but the tax stuff will continue because of the growth rate assumption is very conservative. Many people noted that the growth rate of 6.5 to 7% was on the lower side. The RBI has 7.2, even IMF has 6.8. My own forecast was 7% plus minus 0.5% and remains that. So I think it's quite realistic.
All right, realistic. And in fact, as you rightly pointed out, the economic survey predicts, of course, 6.5 to 7% growth rate. Many would say this is an underestimation because what RBI has said, what the government has said, what various global agencies have said, all of them are hoping for an upward of 7%. So 6.5 to 7% does look like it's a bit of an underestimation there.
Yeah, but it's not so that all the, as I said, the IMF estimate is only gone up to 6.8, but I'm sure in 3 to 4 months they'll all come to my 7%.
Okay.
But that's partly a joke.
Right.
So anyway, yeah, I think it has been, it's conservative, and I think it's deliberate, and I think it's correct. It's better to be surprised on official numbers. You see, we can say anything, but a budget has to meet its target. So I have always said, in fact, when there was planning commission, I disagreed. I still remember, I forget which plan it was. Everybody said, let's raise it to 8%. I said, stick to 7%. So I believe it's better to be a little cautious when you're making the budget because otherwise you'll get some nasty inflation surprises.
Right. You're saying cautious. Some people may just say optimistic, but nonetheless cautious of the external factors that India cannot control. But I want to bring you back to the budget. There has been substantial allocation towards Bihar and Andhra Pradesh, and these, of course, are partners with the government at the centre. Do you think it's a disproportionate allocation to the tune of about 41,000 crore rupees, 26,000 for Bihar, for road construction, 15,000 for Andhra, for capital redevelopment? Yeah. Do these make economic sense to you, sir?
So let's start with the region, right, which is the poorest region of the country. It's basically what, in my time when I was not a member in the planning commission, we used to talk about the heartland and the eastern region. Okay, so that used to be Bihar, Chhattisgarh, Jharkhand, Madhya Pradesh, parts of Orissa, parts of Andhra, and so on. So I think some parts of that, and Bengal, by the way, I can tell you stories about that, but I won't because it's opposition. But anyway, so I think there is a rational reason for helping these states build infrastructure, at least, which the government has been doing all over the country. So as far as so we have to look at the specific things. Tourism, government has been talking about for 10 years and so on. So I don't think there's anything there which is outside the broad program of the government. But yes, you can say that X state is getting more or less than Y state. I really do not have an answer to that, because that's political. But if I was to give a political answer, I would say look back at governments, coalition governments, and see where they spend money, and
Okay.
you'll find very similar actions.
Okay, I want an economic answer, sir. I'm looking for an economic rationale and not a political
I've
answer.
given you. I've given you the economic answer first, and the politics was just one line, which was
Okay.
only partly politics.
All right. All right. I want to come to manufacturing right now. Now, there are, of course, some key areas in which India has emerged as a manufacturing hub and shown its prowess, and one of which is electronics and smartphone making, to be particular. Now, budget has, of course, cut down basic customs duty on mobile phones, mobile phone PCBAs and mobile chargers to 15%. What sort of impact are we looking at on electronics exports of this cut in basic customs duty?
So, there's long experience from East Asia and Southeast Asia, which I studied 20, 30 years ago. If you're going to use industrial policy, you have to be very alert, and it has to be selective, and it has to be time bound. This is something I've said for I don't know how many decades, that protection should always be temporary, and the incentives should be very focused and small and for a specific duration, because that is what I learned from whether it was South Korea or Taiwan or anybody. So the key is to help companies come up to a certain threshold, and then they have to learn to compete. So any industry, the protection should be temporary, and it must come down. So if you see these changes in that light, I think they are economically rational. I cannot comment on the specific all of them, because I have not studied it, and that's the point about industrial policy. You have to be very careful. It is not some general theory. You have to look at each industry and see, okay, this part of the process will take 3 years, so we will protect for 3 years. This one we should do for 1 year, etc. Of course, there is a lack of information, so you have to watch it every time. So the decision, I think, by and large, is correct.
All right, Mr. Virmani, before I let you go, sir, one of the thrust areas of this government, of course, remains.
Did we get disconnected?
Sir, if you can hear me.
Hello?
Yes, sir, if you can hear me. Mr. Virmani, can you hear me? I think we seem to have lost Mr. Virmani, but of course, talking about indirect taxes, let's also quickly get in Riaz back in this conversation. Riaz, we were talking about, of course, trying to make India a manufacturing destination, manufacturing hub. There was a call to reduce customs duty, and that has come in by the way of a reduction in BCD for mobile phones, mobile phone PCBAs, for customs duty in 25 critical minerals, and so on and so forth. Are you happy with these deductions? Because there has to be some tweaking in indirect taxes as well.
So firstly, I'll just say that in terms of indirect taxes, as far as GST is concerned, it gets all the changes come through the GST Council, and whatever changes have come in just now are only implementation of what was decided at the last council meeting. As far as customs is concerned, I think it has been directional. I think we are making the changes towards Make in India. I think providing certain reductions in duties for mobile parts and things like that is definitely a step in the right direction. Whether it is enough is always a matter up for debate, but I think at least directionally these differences or customs duty changes are in line with the overall direction of the government, especially in this budget.
I don't think we have Mr. Vanwari right now.
Right,
but
we have Mr. Andrew Holland still with us. Andrew, thank you for waiting by so patiently. You've heard all the chatter regarding this budget, but if I were to ask you, do you think the market got what they wanted from this budget? It's not been exactly a happy day of trading. Thankfully, it hasn't been extremely volatile as well. If you look at it, both the Sensex and the Nifty closing marginally flattish in the red, down about 1%. Was that something that you expected on a day like this? And where do you expect the markets to go from here? And more importantly, what sectors do you think will be the focus sectors as far as the markets are concerned from here on?
So from a macro viewpoint, the market got exactly what it wanted and a little bit more. So I think it should be very happy in that from a macro viewpoint. From a tax viewpoint, obviously disappointment. And now, the dust will settle and we'll all go back to the fundamentals. And first quarter results, as I mentioned, have not been great. I don't see that as being a catalyst for the markets to move higher. And, listen, we've moved up since April. The market's moved up 10%. Valuations are, stretched. Earnings forecasts are being reduced along with target prices. And one of your big sector, the banks, is going to be under pressure in terms of their NIMs being under pressure. So I'm not saying that we're going to, the market's going to fall sharply. I think we could drift from here because there's no immediate catalyst. I think the trade would probably obviously be, would be the flavor, and against that, obviously, you'd probably have a more defensive type of setup in terms of sector rotation, and I think banks and those stocks where you've had a lot of retail trading, like PSU stocks, and across the board, could see small and mid caps falling out of favor in the short term as well. So that's where I see the markets. So I see us drifting down. I think the risk is to the downside, not the upside. Okay.
Let's now then listen in to what former Finance Minister and Congress Party leader Mr. P. Chidambaram has to say.
9.4%. The Economic Survey has stated that the deflator for manufacturing has been assumed as 1.7%. Roughly half of the WPI inflation. The deflators assumed by the government have been severely criticized by several knowledgeable economists. Unless the puzzle of the deflator is resolved, it is not possible to unquestionably accept the claimed GDP growth of 8.2% in 2023-24. Besides, the GDP growth rate is no answer to the huge challenge of inflation. The Economic Survey dismissed the issue of inflation in a few short sentences. The FM dismissed it in 10 words. The Finance Ministers dismissed inflation in 10 words in paragraph 3 of our speech. We deplore the casual attitude of the government, and nothing in the budget speech gives us the confidence that the government will seriously tackle the issue of inflation. Education is widespread but of poor quality. Nearly one half of the children are unable to read or write a simple text in any language and are numerically challenged. They are not fit for any skilled job. The central government must drive and help the states address these fundamental problems. The other issue concerning education is NEET and the scandal-ridden National Testing Agency. Several states have demanded that NEET should be scrapped and the states should be free to adopt their own methods.
That's former Finance Minister P. Chidambaram there taking his pot shots at the budget 2024, 7th budget presented by Nirmala Sitharaman. Let's now take this across to Nilesh Shah, who continues to be with us. Nilesh, Finance Minister Nirmala Sitharaman has proposed to cut basic customs duty or BCD on gold and silver from 10% to 6%, which is likely to lead to a decline in domestic prices of gold and silver and push the demand for precious metals in the country. It will also reduce the risk of smuggling of gold as well. This should ideally be a positive catalyst for the yellow metal. I want your thoughts on the matter.
One, it will incentivize people to stop. Sorry, we'll record it again. The decrease in import duty on gold is a step in right direction. Higher import duty was resulting into gold smuggling. And assuming that gold smugglers are not charitable organization, based on the gold seized at customs over last 3 years, the net run rate of gold smuggling would be between $7 to $10 billion a year. That's significantly large revenue leakage, and it is law and order problem. Reduction in import duty will hopefully reduce gold smuggling to a great extent. But at the same time, we must focus on recycling of gold. We are the largest owner of gold and silver in the world. Yet every year we import 700 tons of gold. We pay top dollar for it. In 22 years between official and unofficial channel, we have remitted close to $500 billion for import of gold. It is more than the foreign direct investment we have received. It is more than the foreign portfolio investment we have received. This much money, if it had remained within India, would have created unbelievable growth and unbelievable GDP expansion. We are like a patient who wants to improve his health. Doctor prescribed blood transfusion. Go and get some blood. We came to hospital, but instead of blood transfusion, we are standing in the queue of blood donation. We are giving our money out for import of gold and putting that gold in tijori. The economy does not benefit. Along with reduction in import duty of gold, we must put focus on recycling our existing holding of gold so that every year we don't send top dollars for import of 700 tons of gold.
All right, a shot in the arm as far as gold is concerned. Andrew, what does that do to investment in the stock markets? If the gold becomes cheaper in the domestic market, how do you see that having an impact? And I want your thoughts on this, slash down of the basic customs duty on precious metals like gold and silver.
It's a different asset class, right? So you have to kind of look at it in that respect. Do you want to be in equity, or do you want to be, some of your portion of your money in gold, or do you play it through the stocks which would benefit from this, like a Titan, for example. So I think that's the call you have to make. I wouldn't necessarily rush to kind of change all my investments from equity into gold. In that respect, but you can play it through the markets, I think, quite well without having to shift your asset allocation. So it depends on your asset allocation, to be honest.
All right, depends on your asset allocation. I'm not sure if Riaz is still with us. Riaz is with us. Riaz, thank you for patiently waiting all this while. One of the asks or provisioning of the budget, of course, is to incentivize the employers to ensure that employees are either retained or hired in greater number. Now, of course, unemployment continues to be a cause of concern in the country. Even though tax filers are increasing, the number of nil tax filers is obviously higher than those actually filing taxes. Are you happy with kind of measures the budget, not just this budget, but the previous budget has done on expanding the tax net, getting more people employed and making sure more number of people are paying taxes?
So I think the first part of the question, I don't think is
okay.
The tax question. When we are talking about creating employment, I think the allocations within the union budget have been significant in terms of creating employment opportunities, and that is being incentivized both in terms of cash payouts and also in terms of certain tax measures which encourage, like APJJA, which encourage employment of people for tax breaks. So employment is being taken care of. As far as increasing the tax base is concerned, there are two issues to it. One is actually the number of people who are either without jobs or lower income levels, but also the question of compliance is a very, very significant problem. And I think that has been addressed quite well over the last few years, and I think more and more compliance is coming in, of course, largely because of a lot of data availability within the government domain, and that is heading towards more inclusion. One thing I would, however, point out that while we are talking about more and more compliance and more people filing tax returns, the actual significant part of the population is earning very low amounts, which would anyway be below the tax level. And while compliance can help those who do not, tax filing can help covering those people who are non-compliant by not declaring their income, I think we still have a long way to go in terms of raising the actual employment levels to create the income in the hands of the people.
Now get in some corporate reactions to Budget 2024. Let's listen to what Sangeeta Reddy of Apollo Hospitals had to say.
So I think there has been a continued thrust in healthcare. There is a good allocation of healthcare. We of course have always looked for more, but I think the 3 cancer drugs have been announced from tax exemption. The flat tube, tax exemption is a signaling that manufacturing of healthcare products in India is important to reduce the input cost. I also think that the skilling, the employment generation for youth, all these will be enhancements. And APCO, we also have to remember that last time there was an insurance cover for people over 70 years of age. So in combination, healthcare has been touched. Let's look forward to the next budget for more on healthcare. But the fact that the economy will continue to grow, this is a comprehensive budget, still makes me say that this is overall a good budget. Thank you.
Right. So the budget has been largely positive for healthcare. That is what Sangeeta Reddy had to say. Let's also quickly listen into CII President Sanjeev Puri on what this budget entails for not just industries but also for people. Listen in.
It's a commendable budget, very good budget. It has very clearly focused on investments for inclusive growth, very clearly dealt with the issues of the climate emergency, and at the same time not only adhered to but gone ahead of the fiscal glide path, which is a positive. So a commendable budget indeed. Resourcing being allocated in the economy for agriculture, for skilling, for MSME, for youth, for infrastructure, for innovation, for energy transition. So many areas, a lot of resource allocation. And so that's why I'm saying it's indeed a very commendable budget, and all of this being done with a 4.9% fiscal glide path is commendable.
All right, let's now get in an overall take on the budget from Nilesh, who continues to be with us. Nilesh, talk to us your overall assessment of budget 2024, and what according to you were the big hits and the big misses?
The biggest thing in this budget is that it is laying the foundation for a Viksit Bharat. It achieves trinity of impossible. One side, it pursues the path of fiscal prudence. When we presented the budget last year, our estimated fiscal deficit to GDP was 5.8%. This year, we are putting the number at 4.9%. Almost 90 basis point fiscal consolidation is a big thing for the foundation of Viksit Bharat. We will become primary surplus country over next couple of years if we maintain this trend. Second, this budget is allocating resources for investment. Railways, road, defense, power, and water. These are the priorities area for the government. Third, this budget is focusing on employment generation. It is probably going to support sustenance of growth in rural and bottom end of the pyramid. This trinity of impossible, fiscal prudence, infrastructure investment, and employment generation is a foundation for Viksit Bharat. That's the biggest opportunity out of the budget. What it could have done better? Well, it could have gone further on improving ease of doing business and investment. But it's a continuous process. It can be pursued outside of the budget also. So overall, very delighted with the budget. as I mentioned earlier, this is a step in the right direction to lay the foundation for Viksit Bharat.
All right, Riaz, I'm going to bring that to you as well. Simple question to you: on a scale of 1 to 10, how would you rate this budget? Where would you rate this budget, and why?
That's a bit of a hotspot, but I will divide it into two parts. On the allocation part, in terms of expenditure, I think it's well directed. Given the economic survey and the conservative estimates on the economic survey, the downward trend of foreign direct investment, high level of unemployment, I think focus areas of allocation towards inclusion, infrastructure, agriculture, employment generation, etc. I think that is done extremely well. In terms of tax measures, it's a bit of a big mixed bag. I did say that on one hand, removal of angel tax is a very, very welcome decision. It will help startups to raise money at the right valuations. It will definitely be a boost for increased funding of startups. And I think that has been a long-term ask, and I think that has been worked well. On buyback tax, there is a bit of a mixed bag, because while it has rightly moved to tax in the hands of the recipient, what it has also done is it will be taxed as dividend, and therefore the effective tax rate will go up from 20% to 30%, and the cost of acquisition will be treated as a capital loss. So I think that is going to create a bit of a hardship in terms of buyback tax. On capital gains, I have already mentioned that by and large it's okay, except for old property, ancestral property, where the removal of indexation can create a significant problem for individuals. One area which is a little, I have been particularly surprised, there's been the removal of equalization levy. And, equalization levy has to be read along with the BEPS Pillar 2. And it's a bit surprising because BEPS Pillar 1, and BEPS Pillar 1 is, implementation is not happening in a hurry. So I was surprised at the removal.
But fair enough. Just one last thing. Tell us your rating on a scale of 1 to 10.
So I would say 8.
Okay, 8. That's a very high rating. I'm afraid we've completely run out of time here on the show with that as well. 8 on 10, Shweta, is the rate coming in from Riyaz. So we're still, understanding where the growth trajectory is going to come from, and what we understand at this stage is that this budget is sort of laying the foundation for our growth trajectory.
Absolutely, budget laying the foundation there. But let's also hear some of the opposition voices. P. Chidambaram was speaking for a very long time. He talked about the unemployment rate, which he's saying is at 9.2%. Government says it's at 3.2%. So quite a variation there from what opposition is saying and what the government is saying. He's also talked about how 8.2% GDP in the year gone by doesn't look plausible. I'm not sure what he's challenging here. He talks about food inflation, which, remember, has been on the upside at about 9.4%. He talks about NEET, which has no bearing on budget whatsoever. But then he also talks about public healthcare infrastructure, valid point there on the grave shortage of doctors and nurses and hospitals. Remember, there is some allocation to building more hospitals and building more schools as well, which he has also referred to. So, a lot of conversation there, of course, from the opposition, asking a lot of questions. Now, this is what a robust democracy is all about. It's about voices that talk about what benefits the country, but it's also about voices that question those in power, and we continue to do that here on Newsline Live. Gentlemen, all of you, thank you very much for taking time out. Thank you for joining us on this very special show on Budget 2024.
Hey, careful, huh? My daddy got it from abroad. Hey, Disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect! Take risk with full understanding.
सोच कर, समझ कर, invest कर। इस खेल में अब खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers, साथ खड़ा है। We are the Tigers, गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the booth. Chuck the football. We are the Tigers, chuck the football. We are the Tigers, chuck the football. Chuck the football.
Touted as a miracle weight loss drug, a favorite of celebrities worldwide, Ozempic is not available in India. But there may be good news for those who are waiting for its entry into the country. An alternative to Ozempic has received the first approval. How does it work? What are its benefits and side effects? And how soon will it be available in India? Keep watching to find out. What is tirzepatide, India's Ozempic alternative? News 9 Plus decodes. Tirzepatide is the main component of Eli Lilly's weight loss drug called Zepbound and its diabetes drug called Mounjaro. Now, much like Ozempic, tirzepatide is a drug for type 2 diabetes with weight loss benefits. A 2022 study claims that tirzepatide can help you shed as much as 16 to 22 kilos in a year. How does tirzepatide help in weight loss? Basically, it signals the brain to make you feel full and increases insulin production. It can also help the body break down sugar and fat better. The result? Lower blood sugar levels, reduced appetite, and effective weight loss. What are its side effects? Gastrointestinal issues such as diarrhea, vomiting, and nausea. And some hair loss could occur in tirzepatide users. It is not advised during pregnancy. Also, watch out for any symptoms of depression. What's the difference between tirzepatide and Ozempic? Now, the basic difference between the two is that Ozempic is the brand name of a medicine with the main ingredient being semaglutide. Tirzepatide is believed to cause greater weight loss than semaglutide. While both work in similar fashion, basically by suppressing appetite, tirzepatide additionally improves the breakdown of fat and sugar, which makes it more beneficial for those with obesity. When will tirzepatide be available in India? Well, only the first level of approval is in for now. The Central Drug Standard Control Organization's expert committee has greenlit Eli Lilly's tirzepatide for diabetes. The review for its uses in obesity in India is not complete yet. Once the final approval comes, the company hopes to launch it in India as early as 2025. It will also cost over $1,000 for a month's supply. That's easily more than 85,000 rupees. This is exclusive of import fees and other charges. So Indians should get ready to shell out big bucks if they plan on getting their hands on tirzepatide next year.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers, साथ खड़ा है। We are the Tigers, गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the booth. Chuck the football. Chuck the football. Chuck the football. Chuck the football.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this? 20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
This is News 9 Live, India's only digital exclusive live stream. For the early adopters, bringing you the news 24/7. For the smart audiences on the smartest TVs. News 9 Live. Stream now on your smart TVs.
इस खेल में खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers. साथ खड़ा है। We are the Tigers. गेम बड़ा है, dribble like a rap, pass, 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 setting up the track, kick, 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 kick it hard in the booth, chuck, 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 there for the ball.